All right. Good morning. All right, a little bit late there. Just been chatting with Frano this morning. Okay, yeah, yesterday I was not very active. That being highlighted yesterday, I wasn't very active. I was saying why I wasn't very active. Defensive stocks were in play. The markets were moving lower. Now we're bouncing. The defensive ETFs like consumer staples are starting to see some consolidation. I don't think the rotation's over with, but you can see that we're lower here this morning. Okay, so we're again lower. We could be consolidating. I would expect to see something like this, maybe some consolidation. A pull back to the 90 MA, which is right there. 20 day. 50 days coming up to meet price. So I don't think consumer staples is out just yet. But yesterday I wasn't doing much for that reason. Okay, let's look at SCHD. SCHD, that's up over 11% since we first got into it, 12%. SCHD is up over 11% since we got into it, 12%. SPHD as well. All right, so there's been a rotation. We've been highlighting this. I apologize if for some reason there wasn't enough to trade off of yesterday, but I thought it was a good idea to just kind of sit back, not do much. Yeah, it was definitely a shitty day yesterday. I agree. Let's look at a few things. Let's see what's going on. All right, so most of the Nasdaq 100 is up this morning, so that'll be good. I'll be very clear. I'm not going to bite initially. I want to see how far we follow through. Apple is up this morning. Apple is up. Got a pretty good feeling about Apple. It continues to show. I think Apple really has the best opportunity. They didn't spend a crap ton of money on AI infrastructure. They're piggybacking off of Gemini, which is, I think, a pretty good solution. I don't know if you've used Grok or ChatGPT, but they can often give you erroneous answers. Yeah, they highlighted the use of Gemini. I thought that was a pretty smart move. We're above the 50-day. Yeah, Apple and Google, both of those, I would agree. Okay, we're open. First 15 minutes, all I'm doing is taking profits off the table, reassessing the markets. So let's go ahead and do that. Take a little bit of profits off here. Let me just check what's moving. All right, Google's okay.
Extreme high took alert plus 800.
Okay, Apple's going. There goes Apple. Okay, good. Towards the end of the day, I don't know if you were paying attention, but I was trying to get into some SPXU. And rather than buy shares, what I did was I was looking at options. That didn't get filled. I just canceled the order this morning. So SPXS, I'll take that off for now. SPXS, I'm out of that. Okay, SPXS. I did take some of that. I told you that we had about maybe $1. Okay, maybe $1. So I did take some of this, but I just took it off. Okay, so I'm out $50 per 100 shares. Okay, so I'm flat the short positions now. And Profit's latest model update is one of these moments. This one moment has, and I'm just going to say here, sent software stock into a full-fledged crash. AI will destroy all software. All right, so they keep talking about software and a full-fledged crash, blah, 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 blah. Probably getting close to a bottom. XSW. Okay, it's got a base, though. Energy stocks breaking out of a 20-year range, basically. Okay. Let's go. All right, let me just look at a couple other things. Make sure I didn't take, I'm taking off what I need to take off to start the day. The overall market, we got 450, almost every stock on the S&P 500 is up right now. Okay, so this is good. Okay, almost every stock is up today. Wow, what a reversal. Bitcoin prices are at a 15-month low and off by 50% from the October highs. Cardano founder Charles Hoskinson seems unfazed by losing $3 billion in paper wealth amidst the bloodletting. I've lost more money than anyone listening to this. Over $3 billion now. Holy shit. Real easy to cash out. Just walk away. Wow, Cardano's down $3 billion on. You think I'm doing this for money? You're pretty mistaken if you do. I think he does care. Just gonna leave it there. I'll leave you with this thought though before I get to our big guest for today's show. In Roblox, CEO Dave Baszucki and actor, Canadian entrepreneur Kevin Hart. If you are missing the Cardano's down $3 billion. Okay, big move here. S&P on the move. Okay, that shot out of the gate. Let me just grab some 30 deltas. When I say grab, I'm not buying them. I'm sending them over to my active trader window. Okay, if we get a huge move, there's a possibility of a fade, obviously. All right, so most of my shorts are off. I still have VIX just in case, but those are call verticals, so that's a pretty inexpensive hedge for now. Just when you think the lights were out, just when you think things were going to get real ugly. Now we do have the S&P the 50 days right overhead, so be aware that this could roll over and most likely will. I don't think we're out of the woods yet. It's a good sign though to see so many stocks up this morning. Okay, so we have 450 stocks. Sorry, I'm already starting to lose a few. 447, 448, 449, 451. All right, so starting to cruise back up. Okay, so the S&P 500, Apple is up. Okay, Apple is up. I don't think it's a good idea to jump back into the markets long, pointing out the 50-day right overhead. Whenever you drop below the 50-day, you have to watch how it responds. Everybody else is watching the 50-day. If we start seeing selling, people will start to get cautious. If that pulls back from the 50-day and starts to roll over, everybody will pile into the bearish trade. So this is really very choppy area. We are pushing higher. Looks good though. JP Morgan looking good. All right. I still have Wells Fargo. So let's see.
In a sense, we've reiterated the cultural phenomena of Roblox for the under 18 segment. And what we've also shown time and time again is when we...
Okay, let's look at JP Morgan and Wells Fargo. Okay, those are following through. JP Morgan, probably traders' favorite. I mean, if you were to ask every trader out there who was their favorite bank to trade, just my opinion, I would imagine the majority would say JP Morgan, just because it's got Jamie Dimon, who seems to have his shizzle together. Bitcoin, big bounce on Bitcoin. Bitcoin's bounce. Bitcoin is bid here. All right, looks good. Nope. No, there's not, Corey, unless he posted it. Let's see. He literally just posted it. Okay, so here we go. Okay, so he just posted it. Just posted. Okay, look at stocks that have pulled back.
Our team has accepted the challenge of doing two things at the same time. The first is leading the industry with what we call the gold standard, and part of that is estimating the age on our platform. We are seeing other companies start to follow, but the other opportunity is doing this without friction. And as we roll this out in parallel.
Okay, let me look at what I want to look at here. Okay, so we got a nice push here on S&P. Okay, Apple's still going. Okay. I did want to take a look at Walmart. Here's Apple. Walmart. Okay, Walmart's still consolidating. JP Morgan, Wells Fargo. Okay, these look good.
I want to highlight the amazing responsibility in this running a platform like this with so many people on it, but also the amazing opportunity. Every day over 100 million daily active users have great experiences on our platform, and time again, really since we got started, we've led this with innovation. On our platform,
Okay, so this looks good. All right, let me just keep getting sidetracked here. Let me grab some 0-day, just fill in the blanks here on my calls and puts. All right, so we're up right now. So I'll take a 30 delta and fill in my active trader from here. 30 delta is a 68.95. So 6,900 seems okay. 68.95, 6,900. Okay, so I'll fill these in with calls. All right, let me send that over there. Good. And let me take a 30 delta put. I just like to keep these loaded up so I can watch the flow. Okay, so if you have calls and puts and active trader windows, you can very clearly see who is bid just by looking at the volume and what price action is doing on the particular options. 30 deltas, that'll show you where the flow is. Right now, the flow is on the bullish side. Okay. Okay, S&P 500. All right, nice reversal here. Wow. Get rid of some of this stuff here.
I think we see this as an incredible opportunity for Roblox. We're running over 400 AI models within the company, and AI drives everything on our platform: safety, search and discovery, natural
Okay.
translation, creation, and more, it drives huge.
New York Fang Components caught a nice bid. Apple is gone. Apple just shot right out of a cannon there. Looking good. Apple, I have AAPU shares. Tesla's up. That needs to gain some strength. Tesla, there goes NVIDIA. Okay, as we approach the 50-day, just be aware that we could get rejected. The 50-day. Uh, 50-day first rejection potential. Okay, so watch that 50-day.
Hi, took alert plus 800.
All right, tick cumulative just crossed over green, so that's not surprising. We've got more stocks advancing. Tick cumulative is advancing. Google off a little bit. NVIDIA popping. Okay, this looks good. Looking good.
and we're building our own cloud, which is helping keep our costs getting efficient.
Chevron. Okay, Chevron still hanging in there.
Thank you very much. Great being here. All right, it's Super Bowl time. An alcohol beverage or four. Back with a special guest just making it happen in the tequila business, comedian, actor, entrepreneur, Ken Roberts. Right back.
Okay, let me take a look at Chevron here. I did add back some Chevron 180, 185s. Oh, stupid commercials. Robinhood. Okay, Robinhood had pulled back recently. That's probably not a bad idea. Let's see what Robinhood earnings look like. Okay, maybe some cheap out of the money, maybe middle of the year, February. Okay, they report next week. Maybe some cheap options for June, somewhere out there, out of the money. Okay, let's take another look at Robinhood. Okay, Robinhood. Pretty decent spread. Couple of bucks.
Experience the thrill jackpots in just 10 spins. And every 10 minutes, enjoy free games for nonstop fun. New to the game? A generous welcome
30 deltas. That's about a 85-cent spread. So
an authentic casino experience right from the comfort of your phone. Download Club Vegas now and let the good fortune come to you.
Jackpot wins can happen anywhere. At work, in the coffee shop, on the go, or from the couch. Get in on the action at Double Down Casino and join the community of players winning big from all around the world.
Robinhood, nice reversal here so far. Yeah, I like the idea of going out to maybe June or July, buying some like 110s. They're like a 33 delta right now.
You know there's more than one Captain America. My dream is a super team with all the Captain Americas.
We can make it happen.
Your dream team awaits. Marvel Strike Force. Redeem code DREAM today. Alright, test your update. A game that's just not a day, y'all. Test cleared. That's 12 bucks.
Maybe even the 125s. 125's got a decent amount of open interest. Looks like a spread here between 105, and 125. Looks like a spread. July hood, July 105, 125 spread.
Super Bowl has arrived. Of course, we don't know who will win the big game between the Seattle Seahawks and the New England Patriots, but I think it's safe to say, you know this, there will be a fair amount of alcohol consumption at various Super Bowl parties. The question is how much.
Okay, so that's Robinhood. Okay, so S&P continues to look fairly strong coming out of the gate. We have 410 stocks advancing now. Okay, so we've lost a few candidates. Tesla's still pushing. Apple is still pushing. They're looking for Google to bounce. Snowflake. Google, towards the close yesterday, Google looked like it was seeing some profit taking. Okay, okay, a Doji. We're inside day. RSI looking for that to turn up. Kevin Hart on Yahoo Finance. That's cool. I guess he's talking with The Rock. They have a tequila business together. Or is that a different Gran Coramino tequila? All right, so Rock has his version. Okay, futures continue to rise here, looking good. All right, so let's go check out Trace. Okay, not really trending like I would expect to see. I would expect to see this trending more, the hedge flow line. Okay, let's go see. Let's go to 0 day. Okay, so 6,800 support. Let me see what net open interest looks like. All right, so they got a big level here at 6,800. You see that? Okay, net open interest. Support, 6,900 resistance. 60, can we get to 6,900? That would be kind of cool, right? 6,900, 6,800.
The brand it's about authentic partnership. It's about the entrepreneurial spirit and co-founders. And when you look at Gran Coramino, we've got the best in class partners around the table. Our co-founder, Juan Domingo Beckman, CEO and president of Beckley and Cuervo. He's an 11th generation tequila maker. His family got the first license from the King of Spain.
Pretty smart move, getting into business instead of just relying on your comedy, because that can come and go. Okay, so that looks pretty good, right? S&P, hedge flows. Need that hedge flow line to continue.
Yes, the consumer sees a lot of the activity on social media and the fun consumer work that we do in the market, but the really valuable work is done behind the scenes, meeting the distributors, going around the country, shaking hands with our trade partners, and ensuring this business is underpinned for long-term generational success.
James, what do you think the outsider looking at? What do you say to those folks? Oh, this is a celebrity liquor brand. It doesn't taste good. Like, I've tried it. I think this stuff tastes amazing. Like, how important is it to have the right partner to get a business like this, not only off the ground, but growing to the extent it is?
Look, this is a best-in-class, ultra-premium tequila product, which happens to be owned by one of the world's greatest entertainers. It's not a celebrity brand forward. It happens to be owned by
Okay, Nvidia's still going.
Very well known and has a huge profile. But at the end of the day, it's about the business partnership. We delivered almost $2 million in sales a week last year at a consumer level in stores. We grew by 100% in 25 versus 2024 on a volume basis. And with the industry flat or in decline, we see consumers shift to prioritize quality over quantity, and that's where we're seeing this shift. People are willing to spend a little more to get a great quality product, but they are consuming less. They're just being more selective.
Okay, S&P continues to push a bit higher, looking good.
$2 million in total retail sales since its launch. How do you go to $500 million?
We've got aggressive targets over the next few years. We'll be in the market aggressively this year. Tomorrow we'll be in San Francisco.
6,900 just overhead.
With Kevin in April, we're going to hit a number of cities and meet our trade partners. But the brand stands on its own.
6,900.
It doesn't require Kevin every day going out there and hosting every consumer event. Frank Formino as a brand is, as you said, the 22nd biggest tequila brand in the country. There are 3,000 brands out there, and to deliver those results in 3 years is a testament to the objective. How do we create a premium product that stand on the shelf?
Okay, enough of this tequila business. I don't drink tequila.
Kevin, your buddy The Rock has a tequila brand. I've also tried that brand as well. Do you guys share advice? Do you want to merge at some point and create like a tequila powerhouse?
After what is then a pretty painful run for anything with high capex exposure, also exposure to various, right now,
Okay, so
operating margin challenges, and also I think anything that is exposed some of the recent headwinds we've gotten from the U.S. memory chip shortage.
okay, just shy of that level there. Let's see. Just about everything that's sold off recently. Check out the charts. Do a little bit of research on your own. I mean, stocks like Robinhood. This is way overdone. I like the idea of a move back to the 200-day by the middle of the year. Okay, so maybe some cheap 105s. Somebody looks like they're trading the 105, 125 call spread. 105, 125. That's about, just off the top of my head, that's about $150, $75. No, $150. Yeah, $150 for about a $1,700 return. If those numbers are right, I'll look at this later, but that looks like a good idea. Robinhood. I can see this coming back. This seems way overdone. Some of the software names like Microsoft, still waiting for a base. Apple's performing. Apple is performing. So where's the money flowing? It's pretty obvious it's going into Apple. I think the idea here, I think this is what's happening. If you got Apple sticking to their business, everybody's talking about potentially replacing the CEO. That said, I think it's a pretty good strategy. I mean, they continue to do their business, selling phones, selling computers, selling services, expanding their Apple TV business, and not falling into the trap of building huge data centers, jumping on the AI bandwagon. It's really not their business, really. Using Google's Gemini for their AI enhancement. They make their own chips. Of course, Taiwan Semiconductors technically makes their chips for them, but they design their own chips. Yeah, they didn't fall into the trap of buying or spending a lot of capex on AI infrastructure. They're letting somebody else do it. And people are already talking about, is Meta going to be able to recoup? When are they going to make, tons of money? Meta, Microsoft. A lot of people talking about Microsoft, not needing software engineers as much. I imagine that's out in the future, possibly making it more competitive in the space. You need to understand AI. I imagine the software engineers that understand AI are going to have work. But all of businesses that don't necessarily need to spend all the money on the infrastructure, like Caterpillar. I was reading that Caterpillar sold how many generators in Utah? I think it was Utah they were talking about. to data centers out there. Let's see. Let me go to Grok and see if Grok can find it. If Grok can't find it, I'll look at Gemini.
Welcome to Schwab Network, where real-time market coverage is expert strategy from the opening.
Okay, S&P still flagging. S&P. All right, 6,900 is resistance overhead. Apple is still going. Okay, let's keep an eye on Apple. Apple. Now, what I just said about Apple, that's my opinion, but I think it's pretty much a consensus or a decent consensus that not spending a shit ton of money on, excuse my French, on AI infrastructure is a pretty smart move. I mean, you just think about it. All the money, 600,000 processors bought, the Blackwell chips or whatever, for Meta's Prometheus data center. 600,000 processors. The racks and everything else that they got to go in. I'm not even sure who does the racks. Is it Dell or TSSI? Who is it? Who is it that does this? TSSI had pulled back too. That's probably not a bad idea. Supermicro off the low. So yeah, Apple. I really like the idea of Apple. So far, that idea is showing up in confirmation of volume being purchased, shares being purchased, moving above the 50-day pretty decisively over the last week and a half. We ran up. On Monday, we punched through. Tuesday, we consolidated, and then we just started taking off to the upside. SPSX, I had that position. SPXS, I had a position from last night, just as a overnight, want to sleep trade. All right, I took this off when it was more of a tiny doji just below the Bollinger Band. Okay, so I took that off early this morning. Okay, up here, right around 35.85. Okay, it's coming back up now. So SPXS, as you know, and I mentioned this several times, when you get these hedges that deteriorate over time, these bearish 3-time shares positions, they might bounce for a couple of days, but they usually resume the trend. Back in November, this ran up for 3 or 4 weeks and then retreated. Last time we popped above below the 50-day, this popped up for 3 or 4 days. Again, last week, a couple of weeks ago, we gapped up, but it doesn't spend much time in a bullish trend. So that was a very defined one day. If we move lower today, decision yesterday. So I took that off early. I beat that to death. Apple. Okay, so Apple, let's take a look at the 60-minute. I always look at the 60-minute to tell me, am I going to buy am I buying at a extended level? I am. So if I buy it up here, there's a possibility it keeps going, like Walmart. Okay, so always check your 60-minute. If you're going to enter a trade, Walmart just came back to the 20 EMA. Okay, should I buy? I probably should buy some here. Okay. I'll scale into a little bit. Walmart. They report on the 19th. Oh, it's so close to earnings. And I missed the opportunity on Monday. So I'm going to pass on Walmart. I'm going to pass. Apple. Okay, the number 1 and 2 stocks, MicroStrategy just jumped back up, MSTR. Off the low, Bitcoin. I don't know about buying Bitcoin down here. I mean, it you could probably pick up some cheap trades similar to what we're thinking on Robinhood. Maybe you go out, to June or something. Maybe we get some kind of retracement. I don't like the idea of Bitcoin right now. Mean reversion trade. It's just my style. I like to be on the right side of the trade on my 60-minute chart. Okay, so if I look at Bitcoin, okay, Bitcoin just moving above the 20 EMA. So I'll rethink of what I just mentioned. This looks like it might run for a few days. So it does fit my criteria for potential long. I put a stop underneath 66.40, 66,000, I guess. I'd probably do one of the ETFs, and I'd use options only to have defined risk. Okay, Apple, Chevron. Okay, Chevron, of course. This is Bitcoin, by the way. Chevron, okay. This one, every time it pulls back to the 20 EMA, it's been respected. Yesterday it pulled back, and now it's following through. I did add back the 180, 185s yesterday. Okay, this is looking good. Chevron. Okay, CVX. I think I might have mentioned that, right? CVX. Let's see.
The economics here. So we'll have to wait and see as to the overall trend. Obviously, we've got a lot of data next week with respect to jobs and inflation. But let's just get your thoughts on the market. Obviously, we're stabilizing. We've seen a nice bounce back, particularly for some of these chip stocks. Climbing out of this route, we've seen this 3-day tech slide and sell-off here. Even some of the softwares are catching a bit this morning. Just talk us through what you're seeing there.
Yeah, I mean, you're seeing around 82% of the stocks in the S&P 500 in the green so far. And actually, if you're looking at the Mag 7, what's really dragging that up at this point is Apple as well as NVIDIA. NVIDIA has been up over 5% in the session. But the Mag 7,
okay, there we go.
last time that I checked, is still actually negative on today's session. It's still down about 0.8%. So you are maybe still seeing some issues or some pressure when it comes to some of these names, especially if you're looking at Microsoft. Not that really great of price action for this morning. But the broadening out trade is kind of back into effect. You did see that kind of losing a little bit of momentum yesterday. Consumer staples moving to the upside fairly aggressively here. You also have other sectors like some parts of consumer discretionary that's actually doing pretty well. So we just have to be able to hold these levels. Volatility is still relatively elevated. We have a 19 VIX, and you are still seeing very low liquidity within the market as well. So wide price, aggressive price swings both to the upside and downside can occur. I think it's going to be a win for the bulls if they are able to recover the 6930 level on the S&P 500 this week. Close above that, I think you get a little bit more confidence that maybe we're going to be able to hold. For now, technically speaking, hit the 100.
CVX Chevron. Okay, looks good.
Not surprising we do see a bounce back next day. I think the follow through next week is going to be critical for this market.
Okay, so the VIX has backed off for us this morning. Amazon, though, KG, I mean, while we are seeing chips rebounding, Amazon's down 9%. As you and I were discussing when we broke these numbers yesterday, the quarter didn't look good. $200 billion in spending this year.
Okay, Chevron. I'm probably going to add some more to this trade. All right, that's going. Let me add more to this trade. Chevron. I have the Junes. Okay, let me add more to this. Chevron is on the move. Chevron's on the move. Okay, so we'll go out here. Chevron 180, 185. So let me add to this position. Buy. Vertical.
I would say that the market is a little bit concerned when it comes to the CapEx spending. Even the companies that were initially rewarded like Meta, I think that's the reaction you're talking about, actually.
Okay, I added to that one. Okay, Chevron, 20 MA continues. ConocoPhillips, okay, back above the 20 MA. Valero started off the week with a breakout. That's continuing. COP and Valero. Conoco. COPVLO.
There have been moments in history, KG, when you eventually said that soybeans the biggest story than Nvidia and
Google back to the 50-day. Broadcom. Okay, that looks okay. Need more of these New York Fangs to retrace, though. We had a really bad day yesterday on these. This dropped off. RSI is now oversold. Getting ready. Stochastics MACD. So just about the time everybody's written off tech, we might see some rotation. Might be in the operative word. Okay, let's look at trace. Hedge flows. Non-zero day. Okay, looks like a little sticky area right in here, 68.70, 68.75. Looks a little sticky here in terms of there's a decent amount of volume. The more purple you see, the slower price action is able to advance. It's not going to rip upside. Whereas if there was a vacancy here, there was like more black, less purple. And then you saw red overhead north of 69.50 and then purple. And then down below, same thing. If this was just black in here between, say, current price 68.50 and 69.50, if this was fewer, like if this was like this, you didn't see as much, more of a possibility of an advance. But for now, you got all this positive gamma overhead, so that's going to slow things down. Okay, it's also making things a bit more sticky, a bit more trendy. So we're just looking for that trend. In other words, higher lows, higher highs, like it's producing right now. Chevron's still going. Yeah, it's a decent amount of volume on Bitcoin. So some cheap plays on Bitcoin, things that got sold off, like maybe, I don't know, Riot. What's Riot doing? Riot. Okay, Riot actually held up pretty good. It had hit, Riot hit almost 20. Well, pretty good relative, I guess. This looks like it might keep going. Riot. ARM Holdings continuation. We were talking about ARM yesterday. Okay, let's look at ARM. It's only 10.12. ARM Holdings. Okay, this is breaking above the 50-day, so that's what I was looking for. I wanted to see that break above the 50-day. ARM, I'm probably going to go out a ways. Let's see, go out to June. ARM Holdings. 200 days at 140. 140 is a 40 delta. ARM Holdings. I'm trying the 140s. Trying to get into the 140s just for a retest by the middle of the year, hopefully. If it doesn't go, not going to spend too much on this trade. All right, so I bought the 140, 145 call spread. ARM. $115 per spread. Okay, and that's a 40 delta. All right, that's a 40 delta. Keeps going, it'll be a 50 delta. Okay, ARM Holdings. Now, I don't want to go too crazy here because we do have to deal with the fact that the 50 days overhead. S&P. Look at the volume yesterday. It was over 20, nearly 25 million shares traded hands. Okay, that's about 5 times normal. Looks like it usually trades about maybe 5 million on average. Okay, would like to see the S&P continue though. Riot looks okay. Apple backing off a little bit from the high of the day. ARM Holdings. Okay, Riot. Okay, I'm going to sit tight now. I'm going to sit and wait. All right, Chevron's still going. That's a good one. That's a good add. Chevron 180, 185s. If you get to 185, Chevron, I would suggest rolling or taking profits. Chevron. Here's Riot. Apple. Apple, a little fade from the high of the day. So some day traders in here. Looking for a higher low and a bounce. Apple.
Amy, really appreciate it. Thanks so much for the insight today. Have a wonderful weekend. That is Amy Glaser, the Senior Vice President over at Adecco. Coming up, we will get a closer look at the big picture with the team over at Charles Schwab. Morning Trade Live will be right back. I'm Diane Kinghall on the floor of the the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Okay, S&P, a little bounce there off the 105. Grover's 105, 1 minute chart. Chevron at the highs. ARM Holdings. Nice move on ARM Holdings. I told you when it gets into the Kirby, we should see this follow through. Okay, ARM Holdings. Tried to get into this for cheap yesterday, wasn't able to. Okay, so here's the weekly.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network. We're back on Morning Trade Live. Fortinet is moving higher in early trading after reporting better than expected earnings and issuing solid guidance. Billings rose 18% from a year ago, and the company increased its share buyback authorization by $1 billion. We're trading higher to the tune of 2.2% right now on that name. Let's take a look at across the other stocks in this space. Cybersecurity names like CrowdStrike are higher. The Palo Alto Network
200-day. Looks like they're headed to that level. 200-day.
Software, which has been getting decimated as a group this week. So we are seeing a little bit of a recovery in some of these names for us this morning. All right, moving on.
Above the 50-day. So this is a good development if it continues, if being the operative word. So I want to trade options, make it cheap.
And Mike Townsend, Managing Director, Legislative and Regulatory Affairs over at Charles Schwab. Happy Friday to you, gentlemen. Chris, I do want to start with you, just because obviously we did get a lot of information. We didn't get the jobs report today, but that's okay because we did get the ISM and we did get a lot of updates as far as the labor market. And we have very much after.
All right. So that looks good. ARM Holdings.
You know, what you made of it and what your outlook is next week with some of the other data we'll be getting.
Yeah, I think that's a great question. That's also a very interesting thing of what we're watching in the fixed income market, Sam, is that obviously everything's been very volatile in the equity market, the cryptocurrency markets. That's not necessarily the case in the fixed income markets. Yes, we did get
Futures, nice little dip and a bounce. Okay, can we get above 6,900? That's where resistance is.
That's the lowest level that it has been at going back all the way to 2021. So the volatility in the fixed income market has been very, very muted, even though there's a ton of things going on in other markets. So we wouldn't be too surprised if we continue to see low volatility. Our view is that we should see a steeper yield curve. So that should put, we should expect that the Fed is expected to cut interest rates. And really there should be a little bit of a floor on the further downside of longer term yields. So given everything that's going on, a lot of the instability that's occurring in the markets right now, I wouldn't be too surprised if we still see limited volatility in the fixed income markets. Now, there might be a catalyst that could spill over that could break us out of this lower volatility range.
Yeah, and obviously all eyes on that snap election in Japan, which has created some volatility in these bond markets, particularly since this start of the year when this was announced. Mike, let's just switch gears to you because obviously we got through this partial government shutdown this week, but not without some disruption, of course, with these jobs numbers and then obviously some of the delays.
Okay, Lil just got rejected, smacked down just now on the S&P. Is it too easy? I don't want to jump into it. Don't want to jump into it. Almost 25 million shares traded hands yesterday.
There's been a lot of intrigue on who this the successor would be. He's named Brett Matsumoto, who is someone who has been a economist at the BLS since 2015, and I think that's given some comfort both here in Washington and on Wall Street about the integrity of data going forward. This is a career guy, kind of a technocrat, and I think it's being received well. So I thought that was a positive piece of news that maybe didn't get a lot of attention amidst everything else going on.
Very interesting. Thanks for highlighting that. Hey, Coop, let's just get back to you because I just want to pick up where I left off there with obviously everybody watching Japan. That has been a source of some of the volatility. But you do mention, and I think you rightly note, that we have seen stability in these bond markets despite what we saw in places like, obviously with the JGB yields. What are you going to be watching? Because I've seen that some of the analysts out there do believe that a Takaichi landslide this weekend would actually be the best outcome for the bond market in the end.
Yeah, I definitely think that what we'll be watching is that it is very much a global market in the fixed income market. And our yields had been pulled off a little bit because of JGB yields. So if we continue to see an increase in their yields, then I wouldn't be too surprised if we start to see a little bit of an increase in our yields now. Now, like I mentioned earlier, I do expect that we probably have a little bit of a floor on 10-year yields in the U.S. Part of that's because of where the term premium is. Term premium, we've discussed it quite a bit recently, but it is really, for those listeners who are relatively new, it's kind of a catch-all for all of the uncertainty, or our colleague Liz Ann Saunders likes to put it, a lot of the instability that's happening in the markets right now and the economy. So if that instability continues, and that could be
There you go, Chevron. All right, I'm not going to do a whole lot today, but yeah, looking good. Nice bounce. First thing I did this morning was took SPXS off. Okay, I took this close to the end of the day. The only reason I did this, fully knowing that we could get exactly what happened today. Okay, everybody was, jumping off the ship yesterday. Now the ship just kept sailing on. Reason why I did this yesterday is so to sleep at night. So I took 500 shares of this. It was about a $250 loss total because I caught it quick this morning. But it was insurance, just in case the markets just dumped ferociously and we saw some capitulation selling. I took it, but I took it off quickly. So as the saying goes, notice when you're wrong quickly. All right, get out quickly. If you take something and it doesn't do what you thought it was originally going to do, get out quickly, reassess the markets, maybe move on to the next trade. Next trade for me is stuff like ARM Holdings. ARM Holdings. The biggest thing here is the volume and the fact that they had good earnings. Okay, their earnings were excellent. Their guidance was bullish. Okay, and all four metrics are green. I love to see when all four metrics are green, especially after a pullback. Okay, what's Robinhood look like by example? Robinhood is down here at the low. Okay, they beat market expectations last time around. They report on the 10th. All four metrics are green here too. So look at Robinhood. Here's ARM Holdings. Okay, now let's look at Robinhood. Robinhood still got a base a little bit, but this could retrace back up to the 200-day. I'm thinking maybe that's going to be the case. The 105, 125 strikes in July. That was the only one I looked at, but it looks like a spread. Look at the open interest. You'll see what I'm talking about. 105, 125. So if this gets back to the 105 area, the 200-day by June or July, that'll be a nice return on investment. I used options only. I didn't want to buy 1,000 shares here. I'd rather buy 10 calls, spreads for cheap, $115 each, I think it was, and look for a nice payout. Because the markets could still fail. We hit the 50-day overhead. Okay, the 50-day is overhead, so you have to be conscious that a lot of people are watching that 50-day. If we get rejected here and roll over, okay, I'll switch back to going to SPXS. I'll maybe add to VIX. March 20 calls. Okay, VIX is probably at the low again. All right, so I might want to pick up some of these more of these. Okay, not quite there yet. I want to get it down to like 18 or 17. If I get to 17, that'd be much better. All right. Chevron looks good. Chevron, I did add to my position in Chevron. It's trending. The trend continues. The other stocks in the group also continuing, like ConocoPhillips, ExxonMobil. The banks look good. JP Morgan, Wells Fargo, PNC. I wanted to get a piece of that. Didn't give me a chance. I thought I was going to like consolidate maybe. Nope. PNC acquiring three different companies. Let's see what Caterpillar they had to say about Caterpillar. Let's see Caterpillar. Where is it? Look at this. Look at this number here. Reports vary slightly on the exact number, but the most consistent figures cited in multiple sources is that more than 700 natural gas fueled generators were sold for the Utah project. Okay. One project in Utah, widely linked to Joule, purchasing more than 700 Caterpillar natural gas generators to self-power the campus, a data center, 4 gigawatts. Okay, so we still need oil and gas. We still need natural gas. That's not going away anytime soon. They got to build out the electrical grid. That's going to take 10 years at least, right? So this is pretty exciting news if you're a Caterpillar holder. Okay. Let's go take a look at Caterpillar after the news. Okay, so it's back up. Russell shorted this on Wednesday at 721. I think most of you know that. He took profits. Now we're bouncing and following through. Pretty good news on Caterpillar. Okay. All right, that looks good. Yeah, I think that's going to be a trend that just continues. Caterpillar. Okay. There is definitely a lack of power generation available. When you got companies like Caterpillar that can produce these huge generators, you've seen them. Costco has like a big Kohler generator in their parking lot. I think they have like a contract with Kohler for their Costco locations. It's like the size of a Greyhound bus in the parking lot. I mean, they have too much product that could go bad if they didn't have energy, right? Backup. I don't know if it's natural gas. I think it's probably natural gas, though. I don't think it's propane. Propane, is that technically a natural gas? I think it is, right? Anyway, Caterpillar looks good. Caterpillar.
Positive note across the board. Now we have several price target decreases, but they're all still elevated, well elevated above where we are. Evercore ISI dropping their target from 320 to 290. Again, we're only at 144 here. They have an outperform rating. They say they exceeded expectations. They're showing impressive growth in revenue and EBITDA, despite the lower price target due to sector-wide derating. That is cited in a lot of these notes, Sam. A lot of these analysts lowering their price targets because other companies and firms lowered their price targets. They say, quote, outlook remains robust. Oppenheimer down to 250 from 300. Again, more than $100 upside there, though, from where we currently are. Also lowering their price target on, quote, lower peer valuations, but keeping an outperform rating. And Morgan Stanley down to 240 from 265. Again, almost $100 upside there. Overweight rating. They think that they're lowered.
Okay, I'm going to curb my expectations and curb my enthusiasm. I want to make sure that this excitement that we're feeling this morning on this bounce, much needed. All right, we're already down that below 400. We're at 397, 398 stocks advancing. We had 458 stocks advancing this morning, 460 at one point. All right, so we already lost 60 stocks, 62 stocks. They could just be seeing some profit taking. Okay, Chevron could be one of them. It's sitting at the high of the day. Apple sitting at the high of the day. Tesla. What's Riot doing? Bitcoin. People threw away shares yesterday. I understand the fear. I understand the fear for sure. I was seeing it. I got a lot of DMs yesterday. And whenever the markets get like they've been the last couple of days, I tend to trade less. That way I can let my brain process what's happening. Okay, let's look at XLP. XLP still hanging in there. So this is telling me there's still strength here. There's still some buying. Energy, there's still strength here. There's still buying. XLB, still strength. XLC, debatable. Meta, Google, Netflix, etc. So that's taking a back seat for now. Software, XSW, inside day at the lows. XLF, okay, big bounce. We're probably going to push through this level. Mr. Flood mentioning Cincinnati Financial, nice follow through on Cincinnati Financial, the insurance companies. Maybe we can get Mr. Flood to give us a few more. Okay. We're holding the bid. GE. GE definitely looking good. Let's see. Let me go check my GE position. GE. GE. Are you kidding me? I got stopped out of GE. Oh, I had a limit to sell. All right. GE. Big follow through. Okay. GE. Looking at 330 by June. 330 GE. Yeah, I got, yeah.
Morning movers, be the first to find out what's shaping early market action. Next
All right, GE, that's looking pretty good. GE, let's see, GE. Yeah, GE looking pretty good, right? Probably gets back to GE Aerospace probably gets back to 330 maybe. Okay. 330 is a 50 delta. June, that's a 50 delta, 330. So pretty good shot we could get to 330. The way this is trading, GE.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the mind.
They signed that critical metals bill, right? Didn't they sign it yesterday? Critical metals, USAR. Whoops. USAR still consolidating. Cup and handle potentially build the right side of the pattern. S&P is still pushing here. Okay, so if you should be aware that I've been taking positions off, reducing my exposure, rolling or rotating out to defensive positions like consumer staples, materials, energy, some financials. We're looking good. The banks, we liked KRE and KBE for the follow through. KRE, KBE. Continuation. All right, so those look good. Watch list stocks look good. Thank you, Mr. Flood. Appreciate it. Oh, thank you, Frano. Appreciate it, Mr. Flood. Okay. Okay, Cincinnati Financial hire. In case you don't know, Mr. Flood meets with insurance executives, management. You can think of him as an analyst, not exactly 100% positive. Not that it matters, but he knows insurance. So whenever you see positions being mentioned by Mr. Flood, pays to pay attention. He's been around for quite a while in the business. Okay, S&P 500, S&P clearing some levels, S&P. Okay, S&P clearing levels. We got 6,900 coming into view. Schlumberger. Let's see what Schlumberger looks like. Schlumberger. Schlumberger was lower, right? Schlumberger, SLB, SLB, VLO, VLO breaking out. All right, so VLO is breaking out.
Because, I mean, it's been a big week for Google and Amazon, obviously, with their report cards and this capex that they've been throwing out there, both trading lower. Meta is down. In fact, KG actually just highlighted the fact that they've wiped out all the gains post-earnings now, so you should actually arguably say that they are lower. I don't know if it's a bit specious to say that what we're seeing in the market today is a case of one man's pain is another man's gain, with NVIDIA higher on this expectations that chips are going to benefit from all this spending. But just talk us through the price action with the Max 7 today.
Well, I'll take it a little bit different place, Sam. I guess I'm encouraged by it because I've long felt, really going back to the early parts of
Okay, Valero, all these companies looking good.
So the fact that you have the market recovering with the force that it is today, and if you were to index this group, the Magnificent Seven, which objectively is
Valero breaking out.
a group of stocks of
Chevron still pushing.
when it comes to just the market cap that they carry, the fact that that would be indexed lower today, and you have a 1.25% rally in the S&P 500 just doesn't often happen. It's very, very unusual. But I think it's healthy because it's showing we're starting to see that rotation amongst these names, but also out of and all the while the market is doing it.
Energy. Okay, so keep going through the list. We were at financials. We hit energy.
To get here,
The banks, KRE, KBE, those all following through. Okay. Consumer staples, still hanging in there. Look like we might start consolidating, but they're still they're still buying. Companies like Walmart hanging out at the highs. Okay, I got to take a 2-minute break. I'll be right back.
It says it's largely the cost of overestimating the pace of the energy transition, which distanced itself from buyers, adding that it will continue the EV business, but at a pace that is governed by demand, not command. Stellantis also suspended its dividend payment to help preserve the balance sheet. We are trading down 22% right now. All right, in other auto news, shares in Toyota rising after better than expected earnings being released, coming from tariffs not hurting the car maker as much as feared. Higher prices also helped offset some of that impact, and a weaker yen during the quarter also worked in Toyota's favor. The company, meantime, announcing its CEO is stepping down. Trading higher right now by 2.6%, and sticking with Japan, stocks rallying and the yen steadying into a big election weekend. The 10-year JGB yield was below 2.2% for the first time in 2 weeks. Prime Minister Sanae Takaichi's ruling coalition is expected to win more than 300 of the 456 seats in the lower house, that's according to a Nikkei poll. Analysts say a landslide win would be good for bonds and the yen, even as Takaichi's spending plans have rattled markets. And Intel and AMD have reportedly warned Chinese customers about supply shortages for CPUs. According to Reuters, Intel says delivery lead times could be up to 6 months. The supply crunch is already said to have driven prices up by more than 10%. Those shares are higher. We saw Chinese stocks down overnight. Coming up, it's time for Inside Out. We'll take a closer look at Caterpillar and industrial stocks and bring you an example trade when morning trade line returns.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Okay, a little consolidation at the highs with the S&P. Okay, we're just shy of 6,900. That's probably going to be resistance, so be careful. Take profits into strength. Don't be greedy. It's a pretty nice reprieve. We're at the 50-day moving average. Very high probability we get rejected here. Okay. Okay, that looks good. All right. S&P, we got to watch for rejection. It's great that we got this reprieve. Markets bounce back up, but a retest of the 50-day from below, very critical area they got to pay attention to. Okay, let me take a look at SCHD. SCHD. Okay, that's still going. SCHD, still going. XLP, thought that was going to slow down. XLP, that didn't slow down. Neither did SAHD or SPHD. Okay, these more defensive positioning stocks. All right, Lockheed Martin, let's see what that looks like. Lockheed consolidating. Texas Instruments. Conoco, Chevron, Verizon. These are all components of SCHD. All right, so we did consumer staples, tech with a bounce. Okay, we talked about tech right here yesterday. Potential for a bounce as everybody sells. Capitulation, okay. We'll look for a bounce. We thought maybe the 50-day was also, or excuse me, the 200-day potentially in play. We're bouncing ahead of it. All right, so we bounced above it, so that's good. RSI's turned up. So I would think a lot of people sold yesterday. Stochastics now oversold. Volume shows capitulation. Okay, so where do you think institutions will pick up? If they're interested, it'll take a couple of days. So there's no big hurry. Today's Friday, so if we don't see a rejection at the 50-day, or at least we can consolidate S&P at the 50-day in this area, if we can stay right where we are, not get rejected, that's a lot of ifs. Already starting to get rejected a little bit. Intel is at 50. Intel looks like it wants to keep going. Walmart looks like it wants to keep going. Intel. All right, so Intel is just grinding along. Okay, I don't want to put too much money to work. I took quite a bit off. I'm about 30% invested, 70% invested, 30% cash in my longer term accounts. I told you what I did with TRBCX. I took some of that off, okay? TRBCX. Okay, as we drop below Last week, as we dropped below the 10 EMA, that started to roll over. Good reason to exit. So while I didn't catch the actual top, I didn't top ticket. Had to wait for a dip. All right, TRBCX.
Where I'm going to sell the at the winning 700 strike call and sell the 700 strike put. So short straddle there, and then to make it risk defined, I'm going to go out and buy the 670 strike call or put on the downside, buy the 670 put on the downside, and on the upside, buy the 730 strike call. So a short.
GE at the highs. Okay, let me just adjust this a little bit here. Didn't realize I was on mute there. Okay, so, all right, a couple of things that can happen here, okay? A couple of things can happen. Let me just save this chart. A couple of things can happen with the S&P. Number one, we can get rejected, right? Fingers crossed we don't, because most of my positions are long. Positions like TRBCX. I would love to see this bounce so I can start to add back, because my plan is over a week ago, I took some of this position off, about 15% actually, of TRBCX. I took about 10% of that in addition to SPHD, rolling that all into about 35%, rolled all of that into SCHD. Okay. That proved to be a good decision. That was back in the initial roll from SPHD to SCHD, not that it matters, was January the 8th. So that was on that big candle right there. And that's up over 11.5%. So that turned out to be a good strategy. Okay. So back to this. So what I'm looking for is perhaps this level here, as you can see, is starting to come into view. I'm looking for this level right in here to potentially be an area. You see where it lines up? You can see where it lines up. Okay, so I'm looking for a potential worst case scenario that this pulls back to here. All right, so remember, we're already up 175% at the highs. Okay, so right here you can see 175% to date. Okay, we're down almost 7%. Just call it, 8%, almost 9%. Close to being 10%. Okay, so that's that. Okay, so I'm looking for this area of potential support. All right, so this potential buy zone. Okay, so this is the potential buy zone I'm looking at. Why is this not? What's going on here? It's not. Okay, I don't know what's going on here. Okay. Okay, something's going on with stock charts. Okay, that's better. All right, so let's go here. Okay, there we go. Let's see if this works. Okay, there we go. That's better. Okay, so once we get here, I'll be looking to add back once we get a bounce. Okay, so let me just add time here, 10. Okay, so that's what I'm looking at. Okay, this is for a longer term. All right, so this is for those of you who are investors, for investors. Okay, S&P doing a great job of keeping us happy, keeping us thinking positive. I'm sure there's a lot of people that are probably selling into this strength, just happy to get by with a little bit of a profit. And, you know, once we get the nervous Nellies, if you will, out of the markets, what's the matter, Goose? You want some? You want some food? Here you go, baby. Here you go. You hungry? My pretty kitty. So pretty. She's so pretty. Goose is pretty.
Great to be with you, Marley. Yeah, we are seeing a lot of heavy rotation. I think people are really starting to get wary, and we're kind of trying to figure out where the balance is with big tech right now. So anytime you see a move like with Amazon, it's a race, or it's a spending race on AI. So you see them yesterday coming out and saying, "Hey, we're going to spend $200 billion on AI infrastructure." That's setting everybody off, and making going to make different moves. So I think long term, that's going to work out really well for Amazon long term, but Wall Street definitely doesn't like that. So people are starting to make moves and making people really itchy right now about how over leveraged things are on the tech side right now in the markets.
And you mentioned Amazon, so I do want to get your perspective on this because I covered the earnings yesterday live on Market on Close, and when that 200 billion number came across, I actually opened the report itself. Like, I didn't trust the wire when it came across to make sure it was correct. I thought potentially there was
Okay, so if we can hold on to the 50-day, or even better, okay, above the 50-day, we're above the 50-day. S&P just popped above the 50-day. A huge advance. S&P 500 just popped back above the 50-day. Thank you very much. Okay, IRE with the change in direction, Bitcoin helping. All right, so it looks like a double bottom. Okay, double bottom, stop below $4.50. IRE, let me see how big my position is. IRE. Might want to add a few hundred shares. IRE. Okay, I got 500 shares. Okay. Okay, what's Riot doing? Riot, Apple back near the highs. ARM Holdings continues. Riot, okay, that looks good. Riot. Okay, Riot. I'll probably add to Riot at some point. I took it completely off as it was heading towards 18, 19, and bought a little bit this morning. Riot. Failed to mention that. Let me just post that in the trading room. Riot.
So there's going to be something like that that happens in the future, and you just want to make sure. I mean, we have to have money tied to those things right now, because that's really where significant growth is coming from. But I think people should be very cautious, and at this stage, taking some chips off of the table to redeploy that cash at some point here in the near future.
And so, Patrick, with that said, that the 10% of the names make up roughly 40% of the index, but 40%.
Intel looking like it might go. Intel. All right, I took some Intel profits. What was it? Wednesday on the pop. Intel. Okay, so maybe Intel gets something going too. Intel 50-60 call verticals seems okay. Intel, we're at the high of the day right now. Maybe just stick to ARM. ARM has the most potential, I think. ARM, I like ARM better. Lots of volume. Let's look at Intel. Intel. Yeah, I'll pass on Intel. Look at the difference between volume on Intel and ARM, both in the chip group, both with the same kind of potential, except that ARM looks a lot more interesting, volume alone. Okay. If would you rather Intel or ARM?
Absolutely. So what you're seeing right now is you're seeing a lot of, especially with tech companies, you're seeing a lot of layoffs and things because things are starting to be automated more. And what's going to happen is you're going to have a shortage in skilled labor, so plumbers, electricians. I mean, those jobs, what they get paid are going to go through the roof in the coming up years. So we're starting to see this transition. So when it comes to what's happening and the workforce moving forward, we're starting to see a lot of jobs coming back in from overseas, all of this reshoring. So different companies that are out there that are going to be benefiting from that, those are the companies you want to be focusing on putting money into because that's going to be such a big driver of what's happening with this.
Chevron off the highs of the day. Chevron.
So I'd be paying very close attention to that and a lot of attention to energy companies because we got to fuel all of this AI growth and the energy that it's sucking out of the system is insane. So that's going to be a big push moving forward.
Yeah, it certainly will be. And we're also starting to see some reports of communities pushing back on the energy needs of those data centers. So a lot to follow.
Yep.
But Patrick, always great to have you on this show. I hope you have a wonderful weekend. That's Patrick Bueller, RFC and president at Bella Advisors. And we've got plenty more for you this Friday on Trading 360. Next, we've got the big three. We've got 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Tim Bowen will take us through the trades for Bloom Energy, Walmart, and XPO Logistics. That's next on Trading 360.
All right, so we're back up to the highs. S&P doing us a favor if you're bullish. Okay. Still a potential that we could push above it, get to the 21-day, and reverse back down below the 50-day. The last 4 times we've done this, 1, 2, technically we've done it 1, 2, 3, 4, 5 times below the 50-day. What would be a bad thing? Think about it. A bad thing would be if earnings are trash. Okay, companies were losing it, like Microsoft. Even though Microsoft reported flat guidance, they're looking at what, 108 billion or whatever it was, Microsoft. Okay, so let's look at the difference between Microsoft. If you're analyzing a stock, this is what I would do. Here's Microsoft. Okay, so 81 billion, sorry. Well, I don't know what I said. Okay, so Microsoft reported earnings of 81.27 billion. Okay. For the next quarter, third quarter earnings, $4. They reported 414. Okay. So he's still making good money. Look at the earnings growth. They still make money. The problem is right here. The problem is they don't see any additional growth for the next quarter. That's the problem. Now let's look at ARM Holdings. Okay, ARM Holdings. Aside from the technicals, okay, you got all 4 metrics green. Okay, check. That looks good. They reported 59 cents per share on 1.24 billion. For next quarter, they're expecting up to 62%, so that'll beat by 3 cents, and revenue of 1.42 to 1.52. Okay, so they're looking at revenue 124 versus 152. All right, that's a pretty decent. Even the low number 142 is positive guidance. So that's a big difference. Let's look at Intel. All right, Intel. Intel has the benefit of having the government behind it, but it has 2 metrics red. It reported 14 cents 13.67 billion. And what are they reporting next quarter? Okay, they're reporting a slowing negative guidance. A slowing. They made 13 billion. They're looking at 11.7 to 12.7 billion next quarter. I wouldn't be buying Intel right here. Technicals look good, but you need more than technicals. All right, so we're right up against 6,900 now. You know that is resistance. You can see all of this resistance here. We're not going to get through that. Watch for the algos to shut off, start moving sideways, and then roll back down. Hopefully, these are longer dated, by the way. Okay, you see this is non-zero day. If I go to 0 day, okay, so this is good. This is non-zero day. That's resistance there. Hopefully we get stuck right there and we stay above the 50-day. If you're day trading, a lot of stocks are pulling back from the highs. Okay, need Google to bounce. NVIDIA continues. Snowflake is up. Broadcom is up. Tesla is up. Yeah, right?
All right, so let's talk about our first trade here. We got Bloom Energy as your first pick. I was just talking to my last guest about the importance of energy going forward as a broader part of this AI trade and how some names like Bloom might be the beneficiaries here. Is that a part of the thesis?
Yeah, this is one.
The stock market crash of 2026 is over. Oh, man.
What I like about this company, very cool technology. They make like these compartmentalized little battery packs. I think that these guys, now this is pure.
Okay, yeah, we were at 4%. We were at 4% yesterday. Let's see, yesterday. All my troubles seem so far away. Oh, I believe yesterday. Oh, yeah, we were down 3%. Yeah, you were right. You're right. 3%. JJ, you were right. It's 3%. You were right. I was projecting 4% with that markup. Oh, I believe yesterday. S&P yesterday. S&P. I don't want to be cavalier, but we're not out of the doghouse yet. Don't want to be cavalier. Last thing you want to do. S&P. Okay.
Established here near 169, but we also have our intraday highs that were a good deal higher near 176.49. So two kind of distinct boundaries to consider if we were to continue this upside move. Now, when we look at our moving averages, we can see that we have fluctuated around our two shorter-term moving averages, our 5-day weekly in dark blue, our 21-day monthly in teal. Those are coming together pretty close, but 140 to 145 roughly. They're converging toward each other as price contracts downward here, but we still haven't made new relative lows beyond yesterday's session. So a bit of a question mark now. We'll see if we can stabilize around these moving averages. If we do rally, then they will become more of a supportive point.
notice that our RSI, despite breaking through its upward sloping trend line, we have not made a big crossover below the 50 midline. So momentum still more geared toward the bullish side, and our trend line is kind of still in play here as well. So perhaps not as bad of a breakdown as it may have felt at first if you were someone who bought in around those highs. So now we can see our volume nodes here. The one that we are bouncing off is around 132 to 145, roughly, with kind of that spike around that 135-ish area here. So look for that
Suddenly,
if we do break lower, the next node comes in around 110.
I'm not done.
All right, and around
Stupid.
110 right now, Blue Energy here at 139.71, trading more than 2% higher today. Your next one, we're changing spaces here. We're going to move on to Walmart. Hearing a lot more talk about people moving into consumer defensive, consumer staples. Walmart falls in those categories, and even potentially an AI.
Walmart.
Here.
Yeah, that's a good one that got away.
Walmart, Tim.
It needs the base now. From I can't chase Walmart. All right, S&P is showing some resilience here.
Intestinal fortitude for weeks like this. They get scared, they see these AI plays up huge, down huge, don't necessarily like it, so they rotate to the known names, the safer names, as you mentioned, defensive plays. And, Walmart, I just think, as you mentioned, what I like is they're really working hard in the AI space, so it's not like it's just this boring grocery store, clothing store, supply store. They're really trying to evolve to keep up with Amazon, obviously. So really, at the end of the day, I was on with Nicole a few months ago. Things were a little shaky. Shared Walmart at 100. That kind of century rule cross. It's up 30% in the last few months. And I just think, back to your point, I think that a lot of people that don't like the volatility we've had this week would maybe take some money out of those more speculative plays and rotate over to a safer Walmart. So.
Well, I love you bringing up the intestinal fortitude test this week. We had the SEC out yesterday. You called it a tummy tester kind of week. So, same sentiment, different words, but always funny to see how everybody phrases it. So, as an intestinal fortitude play, how much do you need to play into Walmart for the technical setup?
This is a play that would not upset my stomach at all if I was bullish. I'd be pretty happy with this chart if I did have that perspective going into this past few months here, because really what we've seen was first we have this more gradual ascension off of our tariff news lows. But what's happened that I see as we've progressed, we've had this sharper trend line that's formed after earnings here. You could also draw an accompanying boundary line going across the highs to give us this rising wedge type shape. But what's happened again has been an upside breakout. Rising wedge typically as regards being a slightly more of a bearish type of setup. But really, it's not a crystal ball. You're looking for a breakout beyond either of those two boundaries. In this case, it came through here. So we had an upside breakout into an even sharper uptrend beyond this pattern here. So now, in a very short term, you could draw something that's sort of like that. Remember, the sharper the trend line, the less sustainable it is. There could be a quick snapback before the trend up continues. So keep that in mind. One area to look out for would be these relative lows that we saw here around 127 in the shorter term. When we do look to our moving averages, 126 is where our weekly dark blue 5-day EMA comes in. 127 rather. So that's another short-term area to be on the lookout for. The monthly comes in near 121. RSI is quite high, not quite making new relative highs. So not exactly what you'd want to see if you were bullish in this name, but the day's still pretty young. It still could happen here that we could see the RSI make a corresponding new peak along with the price. It is overbought, though, which is typically regarded as a sign of strength in a trending market here. So when we do see our volume nodes, there's a few areas of interest that are all pretty close together, but the biggest one and the closest one is between about 116 to 120, and then there's some other pockets of activity between about 114 to 115, 112 to 113 or so. So those are the areas that stand out from heavy trading perspectives.
All right, right now we are at 130 even for Walmart, also trading higher with the broader market. This last pick coming on the heels of a really strong earnings report for Q4. They had a beat on the top and bottom line. They're up 33% in just the last 5 days. We're talking about XPO here.
Okay, we're still hanging out at the highs. Hold our breath. Hopefully the markets can hang out up here and just keep treading water.
America onshoring versus that moronic idea back in the 70s and 80s of offshoring. And, flat out, I'm a big tariff believer. I was I was on Schwab during Liberation Day calling tariffs bullish. But the point is that I think as much pro-America as I am, one mistake we did make was we never really built out rail like Europe did. I think that was one big mistake we made kind of back during post-industrial revolution, back during the early 1900s. The rail never got built out like it should, and because of that, the American economy moves on up, container truck. And as that reindustrialization continues to happen, these goods got to get taken to the factory. They got to get taken from the factory to Walmart to get sold, etc. And I think that that earnings statement on XPO was a reflection of that. Big breakout, massive move. Not saying buy this today. Let it consolidate and look to re-break out. It wouldn't surprise me to see this one keep grinding higher because, as I mentioned, these goods got to get.
Okay, so I've taken off quite a bit of profits into strength, and we get the markets to bounce and follow through at the 3 days down. Okay, so I don't want to really put too much more to work. If I'm going to put anything to work, I'm going to do it with options out in June, so I have some time, and that'll give me risk-defined strategies. Microsoft is bouncing. Still not super confident that this bounce is going to sustain itself. We got this. Is the Super Bowl this weekend? Super Bowl. February 8th, Sunday. Okay. Cool. 6:30 their time, 6:30 p.m. So that'll be 8:30 our time. Okay, that's good. What? Are you serious? The Patriots are in this? Holy smokes. I did not know that. I know the Seattle was. I didn't realize the Patriots were doing so well. I mean, I can't tell you how many highlights I've watched of Brady play. I mean, I can watch that guy play forever. I know a lot of people hate him, but damn, some of those games, those comebacks against Atlanta, against Seattle at the goal line. Kansas City has nothing to do with trading. I know I stray, but Super Bowl weekend. That should be fun.
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers the
Okay, so the New York Fangs are looking much better. Much better. Apple's holding on. It's not at the high of the day, but it's holding on. There goes Snowflake. Snowflake pushing higher. Microsoft did see some short covering bouncing down here at 395. Pierced the 400 down into the 300 handle. 395 bouncing. We're at 397, almost 398 now. Nvidia is at 183.90. Netflix has got a lot of work to do, but they've apparently ready for the vote in February, March for Shareholder approval of the acquisition of Warner Brothers. I believe they were recently in front of Congress talking about it. Okay. So the markets are doing okay. Markets are doing okay. Today's Friday, so make sure you check in your options if you have anything that's going to expire in the money.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight Gen Digital. Joining us now, Vincent Follett, the CEO at Gen Digital, to walk us through the company's most recent earnings report and also how AI is shaping digital safety. Vincent, great to have you with us. What a day for you to be with us, too, up 6.5% following record revenue for the company. If you wouldn't mind just taking our viewers through some of the highlights for you.
Absolutely. So we just posted our third quarter of double-digit growth and the third beat and raise as part of Gen Digital. And I think what's happening is every investor, as you know, is worried about AI taking over software operations or software companies. But we are fully dedicated to the consumers, and we've seen many of our customers slowly adopting agentic world and agents to do operations for them. And with that, their worry and their peace of mind being at risk because they saw the explosion of agent using their emails, their personal information, their credentials, and sending that out. And so we're quietly building and rebuilding our portfolio to become that trust layer for the agentic consumer. And I think that resonated very well with our install base. We launched a new AI native browser to help them manage that surface of agent. Last week, we launched an agentic trust hub.
Okay, keep going. Keep going. Push this higher. Just keep going. Okay, so we get the 15.
It's your fourth where you've topped estimates consecutively. Plus, you're launching these new products. What does all of that tell you?
Okay, we're right up against resistance. I really think we're gonna hit this and get rejected.
Everybody understand that AI is going to change the overall environment, and you have early adopters and those who are on the sideline watching what's happening. But with that comes the lack of confidence and the risk that it brings. And for any innovations to really go and take off, you need to have that overall peace of mind, if you want, from the consumers to have scale adoption. And I think that resonated really well when we started bringing trusted partners for those consumers to play with this agentic world.
And how is Gen specifically adapting its products to protect users in this AI world where AI can now act independently?
No, absolutely. So that's where we came up with this agent trust hub, where you can have and program your agents to go and pass through the hub to get the validations of which skills or which agents is creating exposure or malicious risk that you might have. And then we have our entire threat lab, which is on the consumer side, the biggest in the world. We have visibility on all sort of risk across the globe, and we bring that capability, both automated capabilities and our researchers, into this hub to validate and give confidence that the agentic world for the consumer is doing what it's supposed to do.
And as we're seeing this rapid adoption of agentic AI and the technological advances,
We're still pushing higher. Wow, this is crazy. Market's looking good.
security has to move even faster.
Okay, I don't think we're going to make it through this area here. 98 percentile.
We always be willing to take a risk, but you've seen this explosion of adoption.
Not a good idea to buy right at the high of the day at resistance. There's a very good potential we pull back a little bit.
And when it's themselves, they could create some risk. And so I think the environment to be fully adopted at scale will need to bring that confidence, whether it's security, whether it's privacy, whether it's restoration, at the same speed. And that's a gap, if you want, today. And I think Gen is uniquely positioned to go and fill it. And we're working 25/7 to really go and fill it.
Talk about another unique position you've taken on your surprising markets with an acquisition that moves you into fintech with MoneyLion. You'll walk us through that decision.
Absolutely. And we've seen a conversion of needs. If people come to cyber safety, they have a few key needs. The number one from our customer was protect me against a financial damage. And
And so that was the number one we're trying to address. So we introduced new features such as monitoring your bank account, looking for anomalies, identify subscription you don't want. And more, as we built agents into our solutions, our customer were asking the agents, what can I do with money? How can I grow it? What can I say?
Oh, there we go. Here we go. Nice. Nice. Punching, punching the 6,900 level. Okay, looks good. Punching the 6,900 level. This is right where people will start to buy. Let's see if there's any liquidity grabs here. Institutions will attempt to push this higher and then price reverse. If that doesn't happen, then we could see a nice follow through. This is a pretty decent level of resistance.
Absolutely, the trust layer for the agentic economy that both protects and empowers the consumers is our primary mission.
Well, Vincent, we appreciate you being with us on a very good day for Gen Digital. You're still up more than 6% following that record revenue and great earnings report. Another beat and raise quarter for Gen Digital. Thanks again for taking the time to join us today. Vincent Pilette, CEO at Gen Digital. Coming up next, we've got the Disruptors. We'll be taking a look at Roblox after it released its earnings this morning. Stay with us.
Okay. Looking good.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day.
Okay, we continue.
On SchwabNetwork.com and on
We're up against resistance right now.
Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques. Like
Okay, if we punch through this, this could be really, really nice. I doubt we do, but sure would be nice. What about some puts up here? What about puts? Where are we? 6,900. Can we get back to 6,880? 68. All right, I'm going to have some puts loaded up just in case we do fade from up here. 68. All right, so that low right around 68.50, is that possible? I'll load these up just in case. 68.50, so I'll have those at the ready. Those are going for $2, 68.50s. All right, let's see if we can't follow through. It'd be nice to see for once get these gamma levels taken out. Be nice to see this. I doubt it does, though. I doubt it. Okay, the founders notes came out really late today. It was after 10 o'clock, 10:15, 10:20. Let's see. Doesn't say what time he posted them, but Okay, you can see what time they posted. They posted at 9:25, 9:24, 9:24. It'd be so cool if the shorts get cut, get their heads taken off. All right, we're starting to punch above 6,900. They're showing signs. 11:41 on the East Coast. It is Friday, February the 6th, Super Bowl weekend, just ahead.
weakness in the trend. Noting there's a shelf. If you look at the 200-week moving average, it's right around $60. So I'm not going to place an aggressive bullish trade unless there's a positive trend, but there's a possibility it holds the $60 area. So I'm basically going to sell a February 2-week expiration $60 cash secured put, and you can harvest around $1.50 a share, $150 a contract. So in essence, all the stock needs to do is hold $60 between now and expiration in the next 2 weeks, and that $1.50 will erode to zero. If you do place this trade, you have to be willing and able to take ownership in case the stock does fall to 60, but your cost basis is 58.50.
All right. Well, as we take a look at Roblox now, even with this 13.5%+ move to the upside, 68.90 is where we are trading right now, but still down for the year. George, appreciate you walking us through the earnings and also for that example trade here. That's George Tillis. Coming up next, it's time for our 360 round. We're going to take a closer look at Amazon and the massive CapEx spend it's projecting and what that could mean for investors. That's next.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com. Welcome back to Trading 360. I'm Marley Caden. It's time now for the 360 round. For that, let's bring in our panel to discuss Amazon. Rob Dykert, Chief Operating Officer at Triple Lift, and Arun Sundaram, the Equity Research Analyst at CFRA, joining us today to talk about Amazon and the move we're seeing to the downside, down almost 8% following its earnings report yesterday. Arun, let's start with you. What were some of your takeaways here? Anything that surprised you, sticks out to you?
Yeah, no, I think the one big highlight in the quarter was the AWS reacceleration. We saw 24% AWS growth. That's a 4-point acceleration from Q3, and investors are really demanding to see that acceleration there. So that was a big positive. Yeah, I mean the big shock of the quarter was the spending plans. About $200 billion in CapEx spending for 2026. Consensus around $145 billion. We were around $145 billion. So it's significantly higher than what we were expecting. So there's some shock there on the spending plans, but we think as investors digest the spending and come to realize that Amazon is monetizing the spending as fast as they possibly can, then the stock I think should settle. But overall, we thought it was a really solid report. It was just a big shock to see that $200 billion CapEx spending number.
And Rob, same question to you. What were some of your main takeaways here? And also this reaction that we're seeing, is this fundamentally driven or is this sentiment driven?
Good morning. Thanks, Marley. From my perspective, the interesting things for me is I'm obviously in the ads business, so their continued growth of about 22% growth that they put up just goes to show that there's still tons of upside for them because they're building off the base of working off the sponsored listings business and things that are on site. And now they are expanding into the broader ecosystem. And when you combine that with their ability to do closed loop measurement and attribution and drive sales, it just goes to show there's just so much more growth left there. When you then start to look at what's happening necessarily with the stock and the investment in data centers and CapEx, obviously people will handicap that, but I look at this as all being an investment to make all of this stuff work even greater in the future. And if I tend not to bet against Amazon because I remember when they first started.
Yeah, historically, that hasn't been a great bet as they are still doing just fine. Arun, I want to talk to you. You said you see profitability here. The numbers were good. The CapEx came in considerably higher than anyone's expectations. I said to a guest earlier when I was covering the earnings live yesterday on air, I actually went into the report itself to make sure it came across the wire correctly because I thought there was a chance it was a typo here. But I am seeing that you trimmed your target, not significantly, but you're down to 296 from 303, still maintaining your strong buy here. Why did you do that trim?
Yeah, so actually we were one of the few in the street that actually raised our EPS estimates over the next 2 years. And the CapEx spending was much higher than we were expecting. So we did take down our free cash flow estimate for the year. We're actually, Amazon might be free cash flow negative here in 2026. But still, we think earnings growth over the next few years is well positioned. They're clearly growing. Their highest margin businesses are growing faster than their lowest margin business, which is their retail business. So we're seeing stronger growth in AWS and advertising, the two highest margin businesses for Amazon. And they're continuing to find efficiencies in that retail business, things like robotics and automation. They're still early days in those initiatives there. So, we kept our strong buy rating. We have an EPS, I think, of close to $10 for 2027. So if you look at that on a PE multiple today, the stock is trading around 20 times our 2027 EPS estimate. Discount to historical averages to peers. So we don't think that's warranted. So we did. That's one of the reasons we kept our strong buy rating.
And Rob, Arun just highlighted advertising. We saw it grow 23%, another growth quarter. You've mentioned brand and upper funnel formats as the next potential leg of growth here. How big can that business get relative to sponsored search?
Still trying to get through this area. Markets are very strong, resilient. I'm not going to put on too many new positions. That was my plan for today.
Partnerships have been announced. So from my perspective, it's usually an order of magnitude greater, just based on, if you look at retargeting, for example, that's usually 5% of the budget. And when you get on site, those are when you start to get into those numbers.
And Arun, we saw these headlines coming out about the layoffs in advance of the earnings and the closure of these Amazon Fresh and Amazon Go stores. Not too much commentary on them, though. Once these numbers came out, there's sort of these afterthoughts at the bottom of all of the articles. Do you see those as being important? Is it a cost pressure, or is it simply just a capital reallocation at this point?
Yeah, interesting points. Yeah, you came up with it. And, obviously a lot of talk has been on the CapEx plans for this year, but I think that the efficiency side of Amazon's business is being overlooked here. They're not just spending aggressively in CapEx. They're also looking to find efficiencies throughout their business. Over the last 6 months, they had about 30,000 job cuts. They closed down Amazon Fresh recently because it wasn't doing well. So it is also, I think, a year of efficiency for Amazon, even though there's going to be some near-term margin hit, not just from the CapEx spending, from the AWS CapEx spending, but Amazon Leo, it's their low orbit satellite network. There's some initial upfront costs associated with that the first half of 2026 as well. So there are some serious, there obviously are some cost headwinds the first half of the year, but they're also, like I said, finding efficiencies. I think the second half of 2026 will look much better from a profitability perspective. And we did note that in our note as well, that the second half of this year, we could see an inflection in profit growth.
All right, and Rob, I want to close out with my last question based on what Arun just said here and on this big move from the sort of the footnotes of those closures and layoffs to the back to the headline of this CapEx spend. Do you view that massive number coming in just so much higher than any of the other names did as Amazon getting ahead of demand, or is it reacting to the demand that they're seeing and the spend from the other companies? And then my second question, I guess, is that several analysts have said they see the potential for free cash flow to turn negative in 26, Arun included in that group there. How do investors think about this trade-off with this spend? Is this a near-term pain, long-term gain scenario?
I mean, if you look back at many of the new businesses that Amazon has entered, and obviously this isn't a new business, but they will invest ahead of the actual demand. So my guess is this is building capacity and getting ready for even greater acceleration. My guess is not a catch-up. Again, I'm not internal at Amazon, so I don't know the exact answer, but in the past, you've seen them make investments even when it isn't there yet. So my guess is it's probably for future.
All right. Well, I want to thank you both for being with us today on Trading 360 to help us break down these numbers from Amazon and the reaction that we're seeing right now at 205.40 for Amazon, trading down 7.75%. Well, and thank you all for joining us today on Trading 360 as well.
All right, we're starting to fade a bit. Starting to fade a little from 6,900 resistance. This is why you got all of this overhead. Still, the markets look good.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Okay, a little fade off the highs, futures.
Real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Not insights, actionable data, veteran traders, trusted financial live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim's my financial consultant. I programmed that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
are here at the New York Stock Exchange, and stocks are in rally back mode today. Happy Friday to everyone. Let's get into a check of your scorecard. On Wall Street, you've got the S&P 500 rallying nearly 1.5% right now. Dow is better by almost 2% at the moment. NASDAQ 100 better by just shy of 1.5% as well, similar to the
Okay. I'm going to hold on to this level. We're currently banging up against it, can't get through it. Guess the worst case scenario is we turn back down. Best case scenario would break above this resistance level. I don't think it's going to happen. A median would be, let's hang out right at 6,900. I could live with that. So, best case scenario, we break out. Least favorable, we pull back. Expecting that we could see us hold right here. That would be a really great close. The only problem is we don't know what Monday will bring, right? So, as good as this looks, this could deteriorate on Monday. So I'm not going to put a lot more to work here. Chevron's already fading from the high a little bit. Stocks are just moving ever so slightly, so it's killing premium. Unless you've got options that are out in June or July or somewhere around there. April, May, June, something like that. Let's see, what do I have left open that I want to close here, if anything? Chevron. Okay, Robinhood, that's probably going to turn out to be a good trade. Got good feelings about Robinhood. GE. GE continues. That looks good. Thank you, GE. GE from last week.
business. That was good. Advertising growing 22% year over year. That's a positive. Now let's start looking at those.
Okay, we're going to break out here, looks like. We're trying to break out S&P. Let's see if we can go.
Amazon because it hasn't worked out well for you, but at the same time we've seen this movie over and over again where Amazon disrupts, they invest, and then they come out and they figure it out, right? But there's still a lot of anxiety because this is a lot of money, and there's no.
Okay, here we go. We're breaking out. Oh shit, here we go. Watch the S&P. S&P is starting to wake up, everybody.
See down the road.
Yeah, some say you need to spend big to make big, right? And will the demand be there? But again, it's noteworthy because when you think about that, I was like, that sounds like, and it is, the spending equals the GDP of some countries. Kevin, what's your take when you look across Amazon?
You know, I think the free pass that these firms have been given up until now, that they're not getting now, is the fact that they've always had the money for this spending up until now. Amazon's going to run out of their free cash flow. They may go negative free cash flow. So they're already going to enter the debt market to finance all this. Now the question is, does it all pay off in the long term? I think, listen, Amazon, despite the spending, had a great quarter. Everyone was worried about AWS, and AWS beat. So there's a lot of good things here. And the problem is the spending is now taking a lot of these companies, and I named the big four, Google, Alphabet, Amazon, Meta, and Microsoft. They're eating through a lot of free cash flow. And like I said, there's a really good chance that Amazon goes negative free cash flow on this. So the worries are just overtaking some of the good news.
Tony, if you're listening, wait for the 20 EMA to turn up. Okay. Taking out some stops up here right now. S&P taking out stops. A lot of stocks acting well.
Has over 3.5 billion daily active users across their platform. Yeah, their daily active uniques, they call them, grew 19% year over year to 121.4 million in the fourth quarter. That was a little bit above expectations at the street. Sixth straight quarter where they announced that they're.
Come on, let's run this higher. This would be really huge if we could run this higher. Let's see how many stocks are advancing. ARM Holdings, trading 122.40. Riots at the high of the day. SCHD looks good. Okay, the number of stocks above advancing, 400 out of 500.
is unique in that it is a member of the consumer staples, which has rallied to new all-time highs in consumer staples. Why? Because of the risk-averse, high dividend-paying nature of the consumer staples. Now, Coke, in particular, they benefited from some foreign exchange tailwinds. They've advantage from some aggressive pricing. I don't know if this has the long-term ability to hold these numbers because they are simply
Okay, dropping off here. All right, so it looks like they just grabbed some liquidity. Okay, that needs to retrace and get back above 6,900. I don't think it's going to, but I'm happy with being wrong. What I really don't want to see is a close below the 50-day. That would be setting up Monday. We really need to close above the 50-day.
Consistent, solid dividends. Doesn't mean they're guaranteed, obviously, but they've got a long history of paying the dividends. I think this is a price point. If the middle class and lower income people are struggling for money or trading down in the higher income, that could really lead to McDonald's. When they get it right, the scale that they have is spectacular. So if they get their menu items and their pricing right, it usually leads to big profits for them. So both these companies, one in the staples, one in consumer discretionary, both doing incredibly well here.
Yeah, and so far this year, maybe it's all about burgers and beverages over Bitcoin, although, yes, Bitcoin is making a bounce back. Tom, what's your thought?
Well, I think it's a defensive rotation, to be honest with you. You know, the broadening out of the rally that we've seen, and staples have picked up. Kevin mentioned they're at record highs right now. I mean, look at that moving Coke. I mean, are you kidding me? I mean, that's a staple with steady growth, right? But it's not a growth stock. It's a staple stock. Kevin mentioned the dividends that they pay. They're not guaranteed, of course, but these are like dividend kings and aristocrats across the board. I think if you look at it, investors are seeking shelter from a volatile market, shifting from tech to defensives. It's AI resistant for the most part. They've got record
Tesla still pushing. Okay.
Remember, there's a bunch of liquidity and capital out there on the sidelines, and when you don't want to play the volatility maybe in tech and software, in the AI trade, well, where do you go? You go to staples that are relatively consistent on a historical basis. I think that's part of the reason. Does it last? I'm not sure about that. Does the rotation go back into tech? But right now, it's the flavor of the day, I think, in the markets because it gives you that defensive posturing during a volatile period within the markets.
Flavor of the day, I like that one. But is the ice cream machine working? We'll see. At least it is for the stock. All right, we've got Bull versus Bear coming up. The guys will get their example trade put together for a member of the Mag 7 that Wall Street has fallen out of love with lately. Getting a little love today. Microsoft. More Fast Market after this break.
experienced investor, or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back. Fast Market here on Schwab Network. Shares of Microsoft ticking higher today as investors search for beaten up opportunities, but it has been a bumpy road for Microsoft over the past week, and it's down double digits over the past month. That drop has now taken the stock lower on a year-over-year basis. Wall Street analysts are still largely in the bullish camp, although there's been consistent re-rating of views on its share price. One notable reduction was Stifel, who downgraded it to a hold. Meanwhile, according to CNBC, Microsoft and other tech heavyweights are turning to influencers to attract new users. All right, time now for the tug of war on Microsoft. For that, let's welcome back in our co-hosts, Tom White and Kevin Haynes. It is bull versus bear time. Before we get to your example trades, can I get your thoughts on Microsoft? Kevin, I'll start with you. What's your thoughts?
Well, I think Microsoft was one of the first to get whacked based on CapEx spending. In 2025, it was $88.7 billion. For the fiscal second quarter, it was $37.5 billion. They basically said it's at, approaching, or more than $100 billion for 2026. At this pace, it's probably going to be more than that. And, this is the annihilation of software as a service. And eventually, I think what's interesting about Microsoft, and I've always said this, they've been early to everything. They were one of the first investors in ChatGPT. They've gone out and secured energy contracts early. They do things early. Doesn't mean they do them best, right? Because Gemini has kind of seized the top spot in AI. But all things considered, they've got the M365 Copilot. They've got the GitHub Copilot. They've got Maya 200 chip. They've got a multi-pronged look at AI that's probably gonna, I don't know if it's gonna be the best, but it's certainly gonna be one of the key players in AI. The chart looks absolutely horrible, but it is having a good day.
All right.
Facebook being down on the day. So all things considered, it seems to be stabilizing down here, but this stock from $555 to below 400, annihilated, Diane.
Tom, all right. Great analysis there, Kevin. Tom, what's your take?
Well, yeah, I think part of the reason that we've seen the drawdown here in Microsoft is because of the software as a service type of names that gets dragged into that picture due to the enterprise side of their business. Now, cloud growth grew at 39%. That was a little bit below maybe what the street anticipated at this point, but commercial bookings grew pretty significantly over the last quarter during that earnings event. Surged to 230% from 112 in the previous quarter. So that was a positive. You start taking a look at gross margins. We saw a little bit of compression in this name. So you start taking a look at some of those things on that side that's going to cause some problems. Gross margins compressed to just over 68%, marking the narrowest level in 3 years as investments in AI. There you go. CapEx once again coming into play here, that they're spending a lot of money to continue their build out and their investments in this area. That's not even taking into account the investments that they've made in OpenAI. Do those pay off? Those are the concerns I think that investors are having. Kevin mentioned, this stock has sold off basically about 28% now, even with that 1% gain that we're seeing today. RSI on this, about the 27 level. So
All right, trying to get through this area.
but this has just been a falling night. Remember, after earnings, which beat on EPS and beat on revenue, that stock fell 14% the day after earnings. So it's it's kind of been left to the side. But you start taking a look at some of the software names. Some of them are rebounding today, but not all of them. And that might be the story, the rotation out of these software names.
Great point. Not all of them. All right, let's get into the example trades. Kevin, let's start out with yours. What's your approach today?
The paper money trade I looked at is something in the high probability short put vertical. I went out 21 days, 3 weeks to the February 27th expiration, and I looked at something around.
Okay, it's 12:23. Let me just shift. Let me change channels here.
So I sold the probability of finishing out the money at 71.9%. Let's call it 72. Sold the 380 put, then bought the 370 put. Short put vertical. The risk on the trade is the difference in the strikes, $10 minus whatever credit you take in. The credit we put it in for is 2.
Okay, CNBC's on break. All right, we got to get above this level, 6,900.
Well, there are some positive signs, and Under Armour does have a strong balance sheet. It was never in any danger of financial distress, and so like when the stock was down at $4, it was really kind of a panic valuation. And so my fair value right now is $13.
The Super Bowl backyard. We are joined now by the company's founder and CEO, Jensen Huang. Brett Gerstner is, of course, still with us as well, and I can't tell you how happy we are to have you. Thank you.
Thanks. It's great to be here. Welcome to Santa Clara. This is our backyard.
A mile up the road. Yeah, I was gonna say you couldn't actually walk over here, but you're here, and you said you've never been here before.
Well, I've been not like this. Not like this. Look at all these tents. It's incredible. It's going to be a festival.
So it's an interesting time to have you, obviously, which any time is, but especially given what's been happening within the market. Today looks a lot different than the last couple of days. The market obviously concerned with what's happening on the spending side of the hyperscalers and this big build out in AI. What's your take from that, the way the market continues to react to this?
Demand is sky high, and there's a fundamental reason for that. We're in the once-in-a-generation infrastructure build-out. This is the largest infrastructure build-out in human history, and there's a fundamental reason for that. Artificial intelligence is going to fundamentally change how we compute everything. Everything from database processing, the way we do search, the way we do recommender systems, that you shop, the way you watch movies, and of course, these new agentic systems that are being developed and evolved. This last year, we saw an inflection point in AI. AI became super useful. No longer hallucinating, it's generating informed content, it's reasoning, it's thinking, it's doing research, it's able to use tools. All of a sudden, AI over the last couple of years went from being curious to super useful. The inflection point also came with it, profitable tokens. Anthropic is making great money. OpenAI is making great money. If they could have twice as much compute, the revenues would go up 4 times as much. I mean, literally, these guys are so compute constrained, and the demand is so incredibly great. The number of enterprise users, the number of consumer users, the number of startups that are being built on top of these companies, it's just going through the roof.
So when you see numbers that are frankly remarkable, that $660 billion this year will be spent by the hyperscalers as we continue to learn, like we did from Amazon last night. You sit back and think to yourself, that's completely justified based on what you see.
It is appropriate and sustainable. And the reason for that is because all of these companies' cash flows are going to start rising. You know, people are comparing it to cash flows. one of those numbers are wrong. It's just the cash flow is wrong. We are facing the largest software opportunity in history. For the very first time, software is not just a tool. A tool is like Excel. Now software uses tools. So these AIs use Excel. And so I think the opportunity for this new era of software is incredible. And we're seeing it already moving the earnings of Meta. Nobody uses AI better than Meta. And so if you look at the way that they're using AI went from a classical recommender system running on CPUs to now a generative AI agentic system that's making recommendations. Everything from the way social media works and the way they recommend ads and help advertisers create content has fundamentally been changed. And their earnings show it. And that's the reason why they're investing so hard. They see just a much larger future potential for it. And not just one company. This is going to affect AWS's shopping and the way they recommend goods. This is going to affect how Microsoft's enterprise software works. Every single company is sees the same inflection point, and that's why everybody believing in so hard.
I feel like it's the point that it's an interesting point. It sort of turns the way you need to think about these businesses on its head. That if you're just fixated on the spending side, as you were talking earlier about, they're spending such a huge portion of their free cash flow, you're kind of missing the story. The market needs to get its arms around that. You as well as an investor?
Yes, if you turn the clock back, Scott, to 2008, 2009, right, Amazon could have taken their profits and sent them back to us by way of dividends. Instead, Jeff Bezos said, I'm going to invest in this thing called AWS. Think of it as digging a gold mine. You have to spend a lot of money to dig the gold mine before you get the gold mine. These guys are digging the biggest gold mine in the history of software, right? But it costs something up front. Now the question is, do you believe Andy Jassy and Mark Zuckerberg and Sundar and Jensen that this opportunity is that big, or do you have a special insight that causes you to understand there's no gold in the bottom of the gold mine? As an investor, I'll just tell you this: I want my personal network, I want my funds network levered against AI, because all human progress is going to be derived from machines helping humans think and augment human thinking. And so whether it's owning NVIDIA, which is our largest public position, or whether it's Anthropic or OpenAI, all of these companies are going to be tremendous beneficiaries, and they're doing it at scale. There are increasing advantages to scale, right? And so I think it's hard for people to get their arms around.
Oh, there goes Amazon. Back up, Amazon.
Now it's a $140 billion business generating $30 billion a year in annual profits that people criticized him for investing in that.
It's incredible that OpenAI and Anthropic are $20 billion run rate companies, generating profitable revenues and accelerating growth all at the same time. These are extraordinary things, and it makes perfect sense from what we see.
What happened there?
How can we be so
Where did my resistance go?
We think we'll need, and that we continue to hear from CEOs like you that we will need, is actually come to fruition? Isn't it inevitable that we're going to, at some point, overdo it, but we're not going to know that until it's too late?
It's not like roads. Roads, once you lay it down, it stays fairly useful for a long time. The way computers work is you build up the infrastructure, but then you start replacing it 5, 6, 7 years later.
6,900. Okay, we're moving above resistance.
The level that we have to sustain, and after that, we're going to be refreshing and slightly growing. And so we've got several years of build out ahead of us. The important thing is this: you have to go back to first principles. Computing has fundamentally changed. It used to be pre-recorded. Excel and PowerPoint and all these tools and all the software is pre-compiled. They compiled it and they send it to us. The way software works now, because it's contextually aware, every single time you use it, it takes into consideration the context, who you are, what you're asking about, what's happening to the world, what other information you give it, the context. And every single context is different, and every single response is different. So from now on, every single pixel, every single beat of a sound, every video that comes out of the computer is generated in real time. And that's the reason why we need computers to operate software at such a large scale going forward. And all these tokens are what we call intelligence. And for the first time, we're generating something of tremendous value, intelligence as numbers. And these things, as I mentioned earlier, this last year, we went through an inflection point because these tokens became profitable. And so we just have to make more of it.
Can you blame in some ways investors who have PTSD from the last time tech went through this revolution and evolution at the same time for seeing certain things that remind them of then and worry that they'll happen again?
It's good to always reflect on history. History informs us, but history doesn't repeat. And so you have to take into consideration what's actually happening. Always go back to first principles and think about what is actually happening. Right now, the fundamental difference, a huge difference between now and some things that happened in the past with the internet, there was a ton of dark fiber. There are no dark GPUs. 100% of the GPUs are rented. In fact, GPUs that we sold 6 years ago, the prices are going up. It's not like it's antique. I mean, it's incredible. It's like a fine wine. The demand is so high that GPUs I sold 6 years ago are going up in price. And so I think the demand is just incredibly high for the reasons that I just said. One, we went through an inflection point. AI has become useful and very, very capable. Two, the adoption of it is incredibly high. And three, because these AIs are thinking, the amount of computation it needs is great. And so to the extent that people continue to pay for the AI with, and the AI companies are able to generate a profit from that, they're going to keep on doubling.
You get asked about the bubble question all the time. And to Jensen's point, back then, you're wrapping fiber around the earth 5 times and you realize, well, that was a little too much. How are you thinking about that question relative to how he answered it?
It turns out that fiber had 7% utilization. We called it dark fiber because we knew when they were putting it in the ground, it was dark. We're building for the future. And we were borrowing money to do that. And we only had 30 million people connected to broadband internet. Today we have billions of people who are using this, getting benefit daily. But one of the things I would say, Scott, is one of the questions here, Jensen, is, okay, if you accept that all of this needs to be built, there's a lot of chatter. Andy Jassy said last night on the Amazon call, yeah, but we have an inference chip that's 40%, costs 40% less. There's a lot of talk about all these other chips. So how are you confident that NVIDIA is going to continue to maintain your share, right, the leadership position in terms of all of this build-out as you look forward?
Nobody develops the technology more advanced than ours at a pace higher than ours and at a scale as large as ours. We have the largest supply chain of any computing company in history. We have a giant supply chain. And so our technology is the best. Now that translates to the lowest cost tokens because when your performance is 10 times, your cost is 30% higher, then your token cost is maybe 1/5. And so that advantage is the reason why people adopt our technology. Our demand, NVIDIA's demand in AWS is incredibly high. So we're just super excited about the build out that we're doing with them. We're going to have a very significant build out this year, in the next couple of years. AWS is doing great. They're a great partner of ours. Consumption of NVIDIA through AWS is gigantic.
Brad raises a really interesting question. As these relationships are so unique in that.
All right, what's Tesla doing? Tesla just watching stocks. I'm like yesterday. I'm somewhat inactive today. We did a few things in the morning, some adjustments, added ARM and Robinhood, measured approach. Okay, what do the nukes look like? SMR. Those are basing coming up. ARM Holdings. Very nice follow through on ARM Holdings.
AI supercomputer. The physical AI, we're the only
Fingers crossed we hang out up here. S&P. Like the previous 5 occasions, really more than that. 1, 2, 3, 4, 5. I guess September you got close to the 50-day, but came down to the 50-day 5 times. This is the 6th attempt to break this down.
Has great promise, some enormous breakthroughs. ChatGPT was a breakthrough. OpenAI's 01 was a breakthrough this last year. Just recently, Claude Code is an inflection, and then now ChatGPT 5.3 Codex, another inflection. You know, we want to make sure that AI continues to be incredibly effective. We want to make sure that protein AIs, chemical AIs, physical AIs, robotics AIs, self-driving car AIs, open model AIs, all of these different AI industries have to flourish because the world is gigantic. Remember, AI is not a technology only. It's a 5-layer cake. It's energy, it's chips, it's infrastructure, it's models, and ultimately it's applications. We need to make sure that all of the world's applications are revolutionized because of AI.
Fading a bit more, S&P fading. Still above that 6,900 level.
You see my focus, all the investments that we make, all the partnership that we make, it goes across all 5 layers of the cake. It goes across all of the different domains of applications because, you know, it's gonna take the whole planet to change the computing infrastructure for the world.
Okay, speaking of that, the whole planet, are the Chinese competitors, they're customers, they want to be customers, you'd like them to be bigger customers than they are now. Aren't they competitors of ours?
No doubt. I think the way to think about that is that we got competitors. The United States has competitors all over the world. And if you break down AI and think about AI as a 5-layer cake, the U.S. has to win at every single layer. We have to win at the energy layer. This is an area that, quite frankly, we've got a lot of work to do, and we're going to have to work hard to make sure that we win the energy layer. The chip layer, we have to make sure that every software company in the world uses American tech stacks so that
I don't see us getting through this area. Got a lot going on right above 6,900, 6,905, 69, all the way up to 6,920, 25. If we got through this level, there'd be a crap ton of shorts covering. Not saying that's impossible, just not probable.
They're not sitting back idle and suggesting, okay, US, we're playing out for second place. They're playing to win.
No, for sure. And in fact, I hear disturbing things all the time about the Chinese stack making great inroads in the Middle East, in the Southern Hemisphere, et cetera, because frankly, they're working really quickly to put their chips and their models, their open source models, DeepSeek, K2, Qwen, et cetera, and exporting those to the world. So Jensen was an important part with David Sachs, our AI czar, putting forth an American agenda to accelerate the American AI stack around the world. We're still not going fast enough. We need to accelerate and make that go faster. You're absolutely right about that. And I think with respect to China, listen, there's a lot of fear that why would you give China any chips? Why would you? They already have chips. They already have incredible AI. The U.S. wins when the world runs on American technology, and I think we need to focus on running the fastest. Right? And if we do that, then just like the internet, our values will be embedded and imbued around the world in the U.S. AI stack. But make no mistake about it, I think the Chinese are out in front, and we got to up our game. We got to get faster in Washington, and we got to get out there. And thank God we have NVIDIA and the leading technologies in the world in the United States. Right? That just doesn't happen. Right? We create the culture and the climate for innovation and entrepreneurialism. We're sitting here in Santa Clara. AI has occurred in San Francisco, in Santa Clara, because of the great innovations we have. We got to make sure we protect that and accelerate.
You mentioned some of the criticism that's been around. Should we sell chips to the Chinese because they they want to kick our butts in AI.
To that, China is a very large market. It makes no sense to forfeit, to concede a large market if you would like to win globally. The American chip industry should do everything we can to win all over the world, including in the Chinese market. We have to compete. It's their home turf. They got all kinds of advantages, so we have to go compete hard. But there is no question conceding half of the world's markets make no sense if you want to win globally.
So when someone like Dario Amodei from Anthropic says it's crazy, that's his word, for the U.S. to allow companies to sell that they're an adversary, you fully disagree with that?
I completely disagree with that. Of course, we would never allow Chinese military to use American technology, but that export control is well established. Of course, we would like to then go and compete in the marketplace. We want, of course, also for Anthropic and OpenAI and all of our American companies to succeed. They've got to work hard. They've got to go run fast. We make sure that we offer them the best of all of our technologies. We give them all the advantages that we can. But in the final analysis, while we're helping them succeed, we've got to go win around the world and not forfeit markets to anybody.
You mentioned OpenAI. I'm going to ask you, because this has been a week, hasn't it, with the back and forth of some of the criticism that had allegedly come from the OpenAI side about you, and maybe some from you about them in a couple of reports, which you've addressed and you did the other day with my colleague Jim.
S&P.
Are we really to believe that there's no there, that there's no friction between the two of you? There's really no drama between the two of you in any point?
No, there isn't. Yeah, there just isn't.
Wapner just trying to get Jensen to say something salacious. And I can't stand the media sometimes. Most of the time. Riot.
Things 10 times longer. And so it needs a lot more computation than our last generation, which is exactly the reason why Grace Blackwell NVLink 72 was invented. And their latest generation model, 5.3 codex, revolutionary, trained on Blackwell NVLink 72. And so they need
Slow momentum here.
that goes without saying. And that's the reason why we're moving so fast. Every single year we're coming up with 5x, 10x more capability. And we just got to keep that pace going. Nobody else in the world can do this like we do, because as you know, these are not chips only. These are AI infrastructure, and we're revolutionizing, innovating AI infrastructure at a scale nobody's ever seen, at a pace nobody's ever seen. And all because the amount of computation necessary for AI is growing so fast. But otherwise, the rest of that stuff is just fake news.
I think there was a moment, Scott, when everybody thought that there was going to be like exclusive partnerships. Like Amazon was going to be Anthropic, and Microsoft was going to be open.
All right, starting to push a bit higher now. Okay.
It's too big. Everybody's going to be everywhere, right? These guys are going to, have OpenAI models. They're going to have Anthropic models. They're going to have DeepSeek models running on, on their chips.
Let's break out. Let's show them who's boss.
From Amazon or others. Like, none of that should surprise anybody. If you want to be in the game of AI, these are the two frontier labs in America, two leading labs. Put X.AI in there as well. It's going to be fascinating what they do with Starlink and data centers in space. And you're also a big investor. You're also a big investor and partner and partners there. So I think you should expect that as the new normal. And we like to make a lot out of these things because everybody's competing to make sure they're the lead in those investments. But I think here's the thing that I think it tells you. Everybody had this idea the last couple months, OpenAI is dead and Anthropic to the moon, right? OpenAI just launched another incredible model yesterday with Codex. They're going to raise a lot of money. I can tell you there's a lot of money that wants to invest, strategic money, financial money, etc. And the good news for your viewers is both these companies are going to be public over the course of the next 12 to 18 months, and retail investors are going to get to participate.
This is Could you imagine being large early investors in Google, Amazon, and Meta? Insane. And that's what we're looking at.
That's a perfect place to leave it. As we said in your
Back up to the highs of the day.
Thank you for spending time with us. Jensen, thanks so much.
Thank you very much.
Pleasure. Brad,
Thank you very much.
We have more work to do, so you're not going anywhere.
Thank you very much.
We'll come back with Treasury Secretary Scott Bessent.
All right, so we continue to move higher here. Okay, let's see if we can break out and cause the shorts to cover. That'd be nice. Blast up to 69.50, something like that. Take out all of these positions overhead. Maybe we can take out all of this over here. 0 day. You can see that starting to get a little nervous here. Above 6,900. Starting to get nervous. Maybe institutions will get nervous. There's some pretty large positions here. 12 million, 11 million, 13 million. Yeah, so this could be a pretty decent short covering rally. So above this level, the dealers will have to start buying as well. Okay. Vanna tailwind. What's VIX doing? Okay, VIX getting down to levels that I've been looking for VIX to get down here. And hopefully we can get down to 17, maybe 1650 on the VIX. If we can get down here, that would be a good area to re-enter VIX, maybe March 20 calls. Okay, as we push a bit higher now. All right.
We're only offering sports contracts in states where sports betting isn't legal. So for us, FanDuel Predicts is a great complementary offering to our core legalized sports betting product. And at the end of the day, our North Star and objective is still to safely legalize and open up all 50 states. If you look at the offering that we have in New York and New Jersey that has been legal for quite some time, it's much more robust, right? As I said, for the Super Bowl, you've got hundreds of different markets. You can parlay just about any bet you want. You can go in and customize the lines. So that's really still the objective. But in the meantime, as the industry leader, since we have an opportunity to offer a safe, regulated product in markets where sports betting isn't legal, it's a great opportunity for us.
Amy, can you give me any sort of numbers around the reception you've seen for your prediction markets offerings as of yet? I know when we saw some of the sports offerings rolling out on some of those competitors, they were releasing the numbers about the adoption. So I'm curious what you guys are seeing.
It's early days. We're in a closed period, so I can't comment specifically on numbers, but we're very pleased with how the product is performing in the market. We've got a phenomenal partnership with the leading exchange provider, the Chicago Mercantile Exchange. And so, we keep adding more sports, more combos, and more opportunities for fans to engage, not just in sports contracts, but we also have in all 50 states, you have an opportunity to engage in contracts around financial benchmarks. So where's the S&P 500 going to close, or the price of gold, political events, cultural events like the Grammys. So it's a pretty broad offering, and we're very happy with how the early days are going.
Yeah, we watch those financial ones pretty closely. I'm curious about prop bets for the Super Bowl. Are there any that stand out to you, or any that are particularly popular or that are fun this year?
Well, prop bets are always very popular. I would say probably nearly 50% of the bets will be prop bets. So, it's really the consumer's way of expressing what they think or what they hope is going to happen during the game this year. There's been a lot of activity on the quarterbacks, and Drake May and Sam Darnold are popular.
All right, we're breaking out. Okay, here we go. Breakout, S&P breakout. Breakout. There we go. Very nice move here. Very nice. Very nice. Keep going. Cover them shorts.
companies like Walmart, great American success stories, and everyone should have a share of that and understand how the economy works, how the companies interact with the economy, and what it feels what it's like to be a shareholder and participate in that.
And Mr. Secretary, you know that I have Brad Gerstner sitting next to me, quite obviously. And Brad, there are more companies that you want to tell us about that are getting on board already.
Right. Well, I mean, we had announcements today. It's great to see you, Mr. Secretary. We had announcements today. The NFL was going to match for the kids.
All right, so active trader, if you had, you saw that move there, pretty quick, 30 cents to $1.15 just now. Let's see if we follow through and do anything else. 69.50s. Let's see if we get any kind of more short covering. Let's see if we can't get some more follow through from this. Let's see if we can get more out of this. Okay. Okay, Algo's playing with these levels here. Algo's playing with these levels. Non-zero day. Something building up here at 70.10. Yeah, you see that? See 70.10 right there?
Support every day. We're going to continue to follow it, obviously, because it was quite literally birthed. The idea was on CNBC with Brad and me had a conversation about it years ago. Mr. Secretary, I hope you'll oblige me. I'd like to ask you some business stuff, if I may, because we haven't had you on since Kevin Warsh was nominated to be the next Fed chair.
Okay. Let's see how far they go with this. Let's see if they push this higher.
Firing Mr. Warsh if he didn't cut interest rates. You responded to Senator Warren by saying that, well, that's up to the president. A comment like that would likely have some wondering about Fed independence yet again. What did you mean?
Well, first of all, I tried to explain to Senator Warren, who seems to have no sense of humor.
No shit.
The president also made a joke about her not having reservations. So,
wow. Politicians, little digs here and there. I'm sure she's got thick skin though. Watching this for follow through. I'd rather Rick Reeder personally, but I know a little bit more about Rick Reeder. Okay. Can we get more shorts to cover up here? It'd be lovely to see this rally continue above the 50-day. See the last time we did this? See this over here? See how we pushed all the way up to the 21-day and then we retreated towards the end of the day? I'm watching for that kind of action. I'd love to see this higher, of course.
Let me ask you as well about the dollar, which you have said in the last week or so as we've watched the dollar weaken.
Okay, can we go some more? Volume's looking good. MACD. MACD. It's okay. Let me shift to the 5-minute. A little bit more momentum. Okay, momentum is still drifting on the 5-minute. That needs to cross up. We need to see that volume pick up. Okay, can we follow through? I'm watching for a follow through. 69.50s are only, 50 cents right now. They were $1.15. 30 cents up to $1.15 very quickly. Okay, looking for some more follow through. Looking for that MACD to cross upward. Looking for that volume to pick up. Can we make the shorts cover?
Mr. Secretary, I can't thank you enough for spending the time with us. Appreciate it very much, and we'll see you soon. Good to see you, Scott. That's Treasury Secretary Scott Bessent joining us here as part of our coverage. We've got about 90 seconds left as we wrap things up.
Okay.
Where your exposure is to the market? Yeah, I mean, listen, you got to give a lot of credit to Secretary Bessent. He's right. The flight path for the United States looks great, right? We've got GDP accelerating. We got inflation.
Micron. Let's see, Bitcoin's still moving here. Bitcoin's still climbing. Pretty bullish day for Bitcoin after a shellacking over the last 3 weeks, to say the least.
I think one of the strongest places we've ever been. And then we have, all the stuff going on in earnings, and you see the earnings numbers, they're great. So, the market is selling off, Scott. Multiples are now well below, their average, and I think it's creating some really interesting buying opportunities. Yeah, and on the new Fed chair, you happy with the selection? Yes, I mean, listen, I think that Kevin Hassett would have been a great suggestion, a great choice as well. But there's no doubt in my mind that this Fed will be independent, number one. And number two, they're going to follow the facts. Kevin Moore said if inflation goes up like it did in June of 21.
Riot's at the high of the day. Riot. We've got, yeah. Let's see what this is doing here. We got the number of stocks advancing. It's only 360. We had 400 and change earlier. All right, looks like we're going to rally a little bit more here. Okay, S&P. Can we take out 69.50s way up here? We got a vol trigger up at 69.40. We've got levels right here. People are selling. The dealer is long, market short. Kelly Evans.
Another loser in Friday's session, Molina Health. Shares of the insurer are plunging on the heel of earnings. The company's guidance especially weak, citing the implementation of a new Medicaid contract and Medicare Part D underperforming. About 2% that is your Yahoo Finance market.
Okay, hedge flows are starting to taper off. You can see here the algo is starting to shut off here, starting to turn back down. Let's see if we can't pop this back up. Let's go look at Hero hedging impact here. Okay, the hedging. Okay, we want to see both of these lines climbing. Okay, calls are being sold now. Puts are being bought. Come on, futures. Turn back up. Turn back up.
Today we're going to be talking about all things ETF, from plain vanilla stocks to their leveraged cousins.
Let's break out to the upside. Let's take this to the upside.
Our phrase of the day, market concentration. Just because we've got lots of participation doesn't mean you don't own too much NVIDIA. And for market show and tell, we're looking at a large cap energy ETF exploring the concept of trading ranges. As they say, the longer the base, the higher in space. What that means for your energy plays. And this episode is brought to you by the number 13. When you look at leverage ETFs, that's how much more the ETF crowd is long versus short. We're going to tell you what happened the last time we hit these eye-watering levels of bullishness. And today we are welcoming back Todd Sohn, CMT. That stands for Chartered Market Technician. So you know we're going to be digging into some voodoo technical analysis. He leads ETF research at Strategas, where he works.
At least going into today's session, the Nasdaq.
Okay, we're pressing up against the highs. There's a lot of positions here that could get taken out on the upside if we do get above these levels.
Today, but rally and gain momentum throughout today's session. Yeah, I mean, Jenny, you did a good job of breaking down those numbers, but let me give you a sense of the energy from the floor here in New York, because I just came downstairs and there's a reason why they called this place the big board. Everyone was looking like this. We are up 1,000 points on the Dow, as you mentioned, and we are within arm's length away from 50K. Obviously, this is going to be a milestone. We crossed that 49,000 mark.
Come on, let's push this. Let's push this. Get the shorts to cover. They got to be getting nervous right here. Shorts have to be getting nervous.
Nvidia, Caterpillar, Goldman Sachs, JP Morgan, 3M, etc. But this is really down to the fundamental story that we have been discussing. And, obviously, Yardeni has been talking about this for years now, the roaring 20s. And so we very much have seen this shift in areas like industrial.
S&P turn. Okay, calls are starting to get bought. Puts are getting sold as we test the high right here. Test the high again. Here we go. Dun, 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 dun. Here we go. Pushing higher. All right, shorts are getting covered as we push higher.
Starting to see who the biggest winners are, and those companies are getting very good returns. Clearly, Google is getting very good returns. Their cloud has just accelerated.
Microsoft turning back up pretty sharply here. Microsoft out. Broadcom's at the high of the day. GE high of the day. GE. We got Seagate Technologies at the high of the day. USAR bouncing. Critical metals. Those should see some buying shortly. Google turning back up. Okay. There's a fight going on right here. You can tell. There is a fight going on right here. Got to see that hedging flow turn back up. Okay, let's see if we can pop this. We can pop this through this level. We've already taken out 6,900.
Several more years, Meta and Elon are going to run out of cash. The bigger ones that are going to stay there. Then you have the added dynamic of now everybody's worried that Google's running away with it. So Microsoft and Amazon and Nvidia have to invest in OpenAI. We're talking about $100 billion raise to keep this race going. So they all believe this may be a winner-take-all or winner-take-most market. And they're all in. Incredible. I love the way you just
0 day. Okay, let's see what 0 day, how changes have come across today. All right, so we're right in this area since about, let's say 9:30. This is the open. Okay, there we go. 11:30. Just watching that. Okay, we're starting to add some positions up here at 69.30, so they might be rolling those positions. Okay, looks like hedge flows are shutting off for now. Maybe turn back down.
Yeah, NVIDIA wants everybody to succeed. In fact, NVIDIA wants to go beyond this, and they want Oracle to succeed, and CoreWeave, and Nebius. They want everybody to succeed, so they have a lot of customers that demand the chips that compete with each other for his chips. So that's his interest. But if you think about Amazon a little bit more,
Okay, hedge flows are starting to turn. Possibly making higher lows, higher highs. Futures turning back down a little bit.
Yes, the robotics are making them so much more efficient, but because they're trying to get us to use Rufus, they're stalling on linking to ChatGPT
Rufus?
and Gemini, which are now the two biggest emerging funnels for If Amazon stalls much longer, consumers will end up getting funneled to other merchants, and that's a risk to the retail business, that's a risk to their advertising business. So Amazon had a huge lead. They're losing the lead in cloud, and now maybe they're putting their lead in retail at risk as well.
What did you make of Jensen's remark? Because I caught your cautiousness about Meta and whether they'll have the cash flows to sustain what's the investment that they've promised here. But he pointed to them and said they're the best example of using AI profitably right now.
Again, he wants everybody to succeed, so he's propping up all of his customers. With Meta, there was some relief on the quarter because their advertising business is growing so fast, and you do have to credit AI for that, right? The AI is making for better experiences, better ads. They can charge more for ads. That's why their growth is accelerating. But their investment, their $135 billion of capex, is actually not going to that. Very small part of that is going to making their ads better. Most of it is to develop a frontier model to catch up in this race with OpenAI, Anthropic, and Gemini, and we're not hearing that they're doing particularly well. And let's not forget, again, they're using it internally. Google, Amazon, and Microsoft turn around and sell the data center capacity to their customers. They have all the customers. Meta is using it internally, and again, they're using more than all their cash. They're already at the point where they're borrowing money to stay in this race. If their models aren't very good soon, they're going to have to stop this level of investment because they don't have anybody else to pay for it. Their apps will continue to do well.
Instagram is so good.
Overinvested.
I just wonder if they could turn on that ad lever. In the same way that Google was the platform for ad spend for the past 15 years, if everyone's on Instagram and Meta just charges more and does better ad load because of its AI tools, can't they ultimately just monetize it that way?
And they are. And again, that's why the results are so good. They just accelerated to the mid to high 20s in ad growth. By the way, that's twice as fast as Google. So they're gaining share in a very significant way because they're very good at using AI. But again, most of the investment isn't for doing that. Most of the investment is to develop a new model so they can stay ahead there. But we fully expect them to continue to be very successful in that ad business. They've clearly figured out how to monetize better than anybody else, and there's no reason why that's going to stop anytime soon.
Gil, again, if I have this right, you did downgrade Amazon to 175 to neutral, price target to 175 from 300 after the report. So those concerns you cited, you want to see better growth, even though it was a 13-quarter high, I believe, on Amazon Web Services. You want to see that accelerate. You want to see that the biggest engine kind of being as profitable, if not more so, than some of these smaller ones that are gaining on it. Is that right?
Yeah, so on the AWS side, they have to accelerate a lot more. Right now, they're losing share to Google and Azure more than they've lost in a while. So they have to continue they have to continue to invest at this level. They have to invest in OpenAI. in order to get that growth to catch up to those two big competitors. Again, on the retail side, they have to stop thinking that they can win the chat war. Rufus is not going to win the chat war. They have to swallow a little bit of ego and allow Amazon, the retail Amazon, to connect to ChatGPT and Gemini so that top of funnel continues. Until they do that, they may underperform the rest of these bigger companies.
Yeah, I wonder how much we got to go, Gil, but our house, we're already paying $20 each a month for ChatGPT. Haven't canceled it yet, paying implicitly $20 or so a month for Gemini. Haven't done Claude, that would be another, 20 plus a month. And at some point you think, if they're how much of this model is going to cost to use in the future? Kind of like the Netflix analogy a former colleague was just making, or Uber, right? It's really cheap at the start, and then once that's the only option, they can kind of charge whatever they want.
Oh, that's exactly right. This is like 10 years ago, Ubers were $10 for any ride, and now they're a lot more than that because Uber's capturing the value it's creating. The model companies are not even close to capturing the value they're creating. There'll be people that will pay a lot more than $20 a month, but for those that don't want to pay it that much, we'll just have to watch ads in our chat stream, which isn't going to be great, but for those people that don't want to pay for a subscription, just like with Netflix, that's going to start becoming an option.
All right, we can think about that when we see those Super Bowl ads on Sunday. Gil, thanks so much. Appreciate it today. Gil Luria with D.A. Davidson. So there was your deep dive into what's going on with the Mag 7 here amid all of this AI capex. But the markets, again, are in a better mood today after the recent volatility that we've seen. And that's been attributed to a long list of problems, everything from Anthropic coming out and killing software, the liquidations in Bitcoin, some economic concerns with the layoff data. But our next guest says a large part of this volatility has also been the nomination of Kevin Warsh's Fed chair. And he says the market is getting the story wrong. Let's bring in Larry Lindsay with the Lindsay Group, former director of the National Economic Council, former Fed governor as well. Larry, it's great to see you. And certainly there's this hawkish bent, for lack of a better word. I see every day, I see research about what he might do with shrinking the balance sheet and when that might happen. What would you say about that narrative?
Well, we start off with Kevin being labeled the most hawkish of all possible nominees. That may be fair, but when it comes to things like shrinking the balance sheet, that's just contrary to what he said. It's contrary to everything I know about him. And so I think there's where the market's getting it wrong. Look, Kevin left the Fed as a result of QEs 2 and 3. He was very supportive of QE 1. He was very supportive of COVID QE. And so his view is that you're going to do something extraordinary, you should save it for extraordinary times. The crash in 2008
Okay, so puts are starting to catch a bid up here. Puts are catching a bid.
That was not the case with QE2 and QE3. So I think Kevin will be, much more cautious about when he pulls out extraordinary measures. But I don't think he's going to do away with QE or shrink the balance sheet.
And I have to say, it's not as if we've gotten, your comments now, I could understand if it turned the market around. The market was starting to turn around
Okay.
before. You were saying this,
All right, a little dip here. A little dip.
now we see the Dow kind of breaking out back to the upside, a little bit of relief on the 10-year. Do you think they're starting to understand that story, or is it just a coincidence?
Kelly, the one thing I can't do is say why the market's doing what it's doing. But I do think fear got way overdone and began to feed on itself. I think people realize, if you follow a market trend that is nothing more than one that's feeding on itself, fear of missing out, and
All right, puts are catching a bid right now. Puts catching a bid.
why don't we just credit it with market common sense? But the fact, sorry.
No, well, I was just going to say the other kind of counter to all of this that I've seen since Warsh was nominated was people in the crypto space specifically saying, don't buy it. Like, don't buy the hype that he's going to be a hawk, and you're going to be fooled again. He's going to be a dud. That's why the president put him in. He's going to expand the balance sheet, he's going to do whatever. In other words, the liquidity will still be plentiful. That's the case that a lot of them are still making, and it almost sounds like it's a case that you might agree with.
No, I don't think we're going back to the old part. I think Kevin is going to play things down the middle. I think he's going
just when extraordinary measures are needed and not when they're not needed. That's prudence. And we got into a little bit of a habit of liking,
Okay, can we get a bounce here? Let's see.
let's do it, right? That was sort of the mentality for a lot of the last 15 years. I think he's going to look at the numbers, look hard at where things are going, and base policy accordingly.
Could you give a sense what you think his first moves might be so that the market can become familiar with the way that he might run monetary policy, right? I'm sure what's going to happen is if they start hearing about the balance sheet in anything but a dovish way, we're going to get some big reactions.
So the problem we have now, or more precisely the problem Kevin has now, but we all have it, is...
Okay, puts just rolled over again. This is a battle. If you're watching options, it was a really good way to watch this with active trader. If you're trading S&P,
when he looks at the capex spend here, a couple $1 trillion we're talking by 2027 from mega cap tech, and of course you were there.
okay, let's see what we're doing here. Okay, hedge flows are still tapered off. All right. Come on, let's go. Push this higher. Push it up. Push it. Push it. In the bush. Push. Push in the bush. Push. Push in the bush. Volume's not there, though. Volume is not there. That's the only problem with this. Volume. Okay, push a bit more. There we go. S&P. Come on. You can do it.
The end of the century, we had a bubble burst in 2008, and I think we've learned the lesson that overdoing it with regard to monetary ease is counterproductive in the long run.
All right, well, we'll see to what extent
5, 15, 30, 60 are all on buy signals. Tick cumulative is green. Breadth is improving.
But Larry, thank you. Really appreciate your time today.
It's my pleasure to be here. Thanks, Kelly.
Larry Lindsay with the Lindsay Group. Now, if you want exposure to the AI pipeline, investors are scrambling for that right now. Witness Lumentum Holdings, ticker LITE, a component maker who counts Google among its customers. Their shares are jumping 8% today after blowout earnings back on Tuesday. The stock is up 39% this week and up more than 400% in a year. For more, let's bring in Michael Hurlston.
Come on, let's go. Push this. Push it. We could use a little positive price action for the bulls out there. Majority of people are bullish. Okay.
Center customer that there is. So as these CapEx bills start going up, as you've been talking about, it's absolutely fantastic for us. So we've been benefiting for that for a while, and we expect to continue to benefit from that.
As I understand it, your connectivity competes almost with copper. You please say this better than I can, but
okay, nice pop. Here go the futures. Futures starting to pop here. Futures popping. Okay. Don't get two-sided. The candle didn't close. The candle didn't close. Okay, there we go. Candle did close there. All right, so no follow through. Got excited there for a second. Come on, let's do this. Let's do this. So many things going on. I realize I'm just focused on the S&P at the moment. Micron's still okay. ARM is okay.
Stuff being trafficked across optical components, and we happen to make
is up 68% year on year, as I understand it. How quickly can you grow and expand to meet demand? And what would, if anything, slow down momentum here? I mean, as excited as people might be about what you're describing, they're probably equally nervous about a stock that's up 400% over the past year.
Yeah, look, this is only the beginning for us. I mean, I think what we've been trying to explain to people is very, very early innings of a transition from copper to photonics. And so,
All right, let's escape to other stocks like ARM Holdings at the highs. ARM having a very nice move today. Coinbase. Bitcoin also. Bitcoin off a little bit. Bitcoin. Riot.
Investors love to create these baskets, and you have been put in the Google basket. Congratulations, because that's been ascendant lately. I just want to know if there's anything there you would clarify. Do you have exposure to kind of the Google TPU stack? Do you also have exposure to an OpenAI NVIDIA kind of stack as well? Just kind of talk a little bit about that.
look, we're lucky. We're kind of
Apple fading from the high. NVIDIA's at the high of the day. So is Snowflake and Broadcom. Tesla just off the high of the day. Microsoft still turning up. Market's looking a lot better. Google off the low. Amazon just off the high. So most of the New York FANGs look good. They look pretty good. ARM Holdings. ARM. ARM Holdings. Big day today on ARM. Yesterday, we were looking at ARM. I tried to get a cheap entry yesterday evening. Didn't happen. Come back a little bit, but then boom, we took off to the races today. ARM Holdings. So that's back up to the highs. That looks good. ARM Holdings. Let's go to the 2-hour chart. Okay, so we're changing direction. ARM Holdings. ARM. Okay, we're into the Kirby. Okay, GE. ARM Holdings fading from the high a little bit.
You know, for a non-specialist like myself, it is not only fascinating, it is incredible to watch in real time to see the rise of this as the AI build-out picks up steam. Michael, thanks so much for making the time.
Thank you, Kelly.
Michael Hudson joining us from Lumentum Holdings today. Joining me now on set is Victoria Green, G Squared Private Wealth CIO, a CNBC contributor who's also Jaws been on kind of on the table. We were watching it this morning, Victoria, backstage, going, why today? How can you have it if the catalyst is Amazon and Amazon shares are down? Is it because, to Gilduria's point, if the company needs to catch up, according to him,
Robinhood. Okay, that's the other thing between ARM Holdings and Robinhood. Robinhood, nice reversal. I'd like to see this continue above the 60-minute 20 EMA. So this is just starting to get working. So the way I would trade this, if you like Robinhood, personally, I like the idea of using options first. If it starts to follow through over the next several trading days and we get the 20 EMA to turn up, then I can take profits on the calls and start to potentially buy some shares. We got earnings, I guess, I think in a couple of weeks, right? Doesn't Robinhood have earnings soon? Robinhood, yeah, they have earnings next week, Tuesday. Okay, so this is, yeah, I would scale in. Scale in, that's most I would do. It's above the 20 EMA. ARM Holdings, we just looked at ARM. Let's look at Micron. Micron trying to get back above the 20 EMA. ARM Holdings. Okay. SCHD. Still trending. Chevron. Trending. Apple. Trending. It's not going to go straight up every single day. Apple looks good though. Tesla turning the corner. It could just be one of these like here. Okay. Here and here. We moved above the 20 MA, but the 20 MA on the daily continue to keep price at bay. So Tesla needs to get above 430 and keep going.
There's also a few software names that have been a part of this recent sell-off that you think that's Microsoft, for instance, Intuit, if I'm not mistaken. I mean, when you look around, where do you see the opportunities where the market has been thinking about this perhaps incorrectly or just overdoing it? Yeah, so first off, there are some high-quality companies, and Microsoft's one of them, right? They are software as a service, but they've got also what's going on with Azure. They're not just a pure play. And what happens with Office 365? It's just such a secure moat. So I look at this and I look at software stocks and say, who has a moat? Who is defending well against this? Who has something that people still want to pay for versus building it because it's so critical? Either it's payroll processing. You mess with people's paychecks, that's a really fast way to really annoy all of your employees. So payroll, things that are sensitive data that
Futures. Okay, let's get back to the S&P 500. Okay, we're still up here at the high. Okay, 15-minute.
There is some software though that you think, look, this risk, even as we're watching the market levitate here, the concern that software investors have, you think is legitimate, and where you eat into companies that have right platform and workflows. Okay, and there's plenty there that you know, and ServiceNow obviously is one of those where it was great, but is it most easily replicatable, most easily replaceable? I think so, because as organizing your apps and workflows gets better in efficiency and things like that, that to me is the least protected area of software. Okay, where else? And if you look around that sector, you know, you've got some the app development, you've got Cadence on the design side.
Futures.
Things that basically we help make your life easier. That to me is one of those that Anthropic and ChatGPT and all of that, they're going to figure out how do we optimize workflow, how do we do this efficiency thing better. And finally, going back to NVIDIA picking up some steam again, it's up 7%. Was that a name that you've been in? I forgot. You stayed long there, and then the rest of the hardware space, whether it's chips or some of the tools that play for what we just heard from Momentum. Yes, I think you need to keep your core tech. We've been talking about it. Keep your core tech and chips. We have trimmed back. We had trimmed back to Microsoft. We have trimmed a little bit of NVIDIA and Broadcom, only because they also got to be a bit of a whale in the portfolio because of the run-up. So some of this was prudent risk management. I know being a portfolio manager, you have to be a little dull at times and trim back those winners so you don't get burned when it flips around. We also want more on the infrastructure and more on the value. So some of it's not that I don't like NVIDIA. Some of it's this year, I think you're going to get a little bit better from value, industrials, financials. Yeah. You know, we want some more healthcare staples. That's been rising out of the gate. Value, industrials, financials, like you said. Victoria, appreciate it for now. Thanks. Victoria Green, G squared.
MACD still lower. MACD still lower.
Much closer to 50K as well, about 50 points shy of that mark.
See if we can't push a bit higher. No.
Staples are also hitting another high. That said, let's bring in Richard Bernstein.
S&P.
Rich, I can't wait to hear. Where are you value hunting? What are you steering clear of? I have to imagine you're loving the cyclical story here. Why do you think the market's doing so well today?
Okay, we're starting to go here. Starting to go. Okay. No. Okay, we got rejected.
companies, they are not unique. There are many
Apple.
companies in the United States and
All right.
around the world that are
We've
growing
got what?
faster than the Mag 7 and are a lot cheaper. So my question would be,
2 hours, 26 minutes.
think of these numbers for a second. If you give 20% growth for 40 times earnings and 20% growth for 20 times earnings, why in the world would you not take the 20% growth for 20 times earnings?
And where are you seeing that kind of profile? Now, for instance, Eli Lilly earlier this week reminded us they've got 40, they've got 40% revenue growth, they've got 40% operating margins. That's $1 trillion company. Where are you seeing places that are as fast growing, 20+% as you mentioned, but trading? I mean, Microsoft's trading like 20. I'm like, the company you're describing sounds to me like Microsoft.
So, Kelly, I'm going to sound extraordinarily boring here for a second. And I'm just going to say, if people are willing to look outside the United States, you will find earnings growth is accelerating in many parts of the world. It's not that U.S. earnings growth is imploding. It's not. It's actually kind of leveling off and maybe coming down a little bit. But outside the United States, you have profit cycles that are actually coming up. So you're getting, I don't even think you have to be very sexy about this. You just have to have non-U.S. investments. Most U.S. investors have zero in non-U.S. So I think this is a pretty easy thing to figure out, that when the non-U.S. markets are 35 to 40% of the global equity market, and U.S. investors have less than 10%, I don't think we should worry about a specific stock or the optimal weight of non-U.S. It's just, do you have any non-U.S.? And I think that will solve the problem.
I always worry a little bit about the dollar. Do you think that's just the moves you're describing are so powerful it doesn't matter if the dollar appreciates a couple points?
Well, that's a good one. I mean, usually people ask me the other way. They say, well, the only reason non-U.S. outperformed was because of the dollar. And my answer is, well, so what? I mean, I don't want the return coming from currency. Now, your question is the exact opposite. What happens?
Okay, let's see if we can break higher here. Trying to break this downtrend.
A little bit of a prevailing force against them, but I don't think it's enough to make that much of a difference. And if the Fed is cutting rates into this strong nominal GDP environment, the odds are the dollar gets weaker, not stronger. And I think most people would argue that the Fed is still on a rate-cutting course.
Do you worry, to kind of go back to the concern in January and after March was not, we just talking to Larry Lindsay about this, do you share these concerns one way or the other, either about dollar debasement, you got to own gold, you got to own silver, or the flip side, which is now, hey, we might be in a hawkish stance, and so, the momentum trades are pulling in there.
All right, Bitcoin, a little bounce there. Bitcoin.
Be in that stance. Are there any macro narratives that you find believable here, or does it go back to the 8%?
I think there's actually several that are going on that are quite believable. I think number one, although it's great to talk about dollar debasement, I think that's a little hyperbolic. Will the dollar weaken? I think there's a chance the dollar weakens, but there's many ways to play that. Yes, you can play it in commodities, but again, just to repeat what I said before, stocks. Remember, when your currency is falling, it's always good to have assets in appreciating currencies. So, why not invest outside the United States if you think the dollar is going to weaken? The other side, though, is that what's really been driving crypto, the Mag 7 has been a lot of speculation, and liquidity is the lifeblood of speculation. And so if the Fed nominee Warsh turns out to be more of a hawk than people expect, then your liquidity is going to, on the margin, dry up. People used to call this the Fed taking the
Hedge flows turning up a bit.
right? And that was the old saying. So maybe that happens, but that's an argument that you want to look at fundamentals and not at speculation and momentum. Fundamentals, as I tried to say, you've got a broad range of companies that are doing quite well.
So if we have 8% NGDP that's real,
End of day. Looking for end of day runs, potentially. We're already up to the highs, so see if we can't run a bit higher. Okay, here we go. S&P jumping here. S&P jumping. S&P breaking out.
vigilantes come out? Absolutely. And that's one reason why in our fixed income portfolios at RBA, we are not extending duration. Because
Okay, algo's trying to push higher. Algo's hedge flows. You can see calls are being bought, puts are being sold as these two lines, orange and blue, move higher. Calls are being bought, puts are being sold. That's a positive gamma. The bid and puts are fading. Calls are catching a bid. We can continue this.
Maybe only half the audience at this point. Richard, Joe Kernan doesn't like me right now. He's good. You know, watch out. 200. No, Rich, thank you very, very much for making the time today. Really appreciate it. See you later. Rich Bernstein with Richard Bernstein Advisors. Dow still hanging on to that 1,000-point gain. Tech is still the best performing sector today.
It looks like we might keep going. Looks like we could keep going here. All right. Just kind of stalled here.
Peripherally done this for all these fields, but now you can do this for pharmaceutical. You can do this for manufacturing. You can do this for automotive. You've already seen how we're simulating automotive so that cars, you can't drive enough miles to be autonomous, but you can do that for vehicles in financial services. You can do it to take out fraud. You can do it to optimize services. So all the things that AI can enable, like I said, sometimes people think about it too, like it's got to be just extremely disruptive. But sometimes you can just be iterative in your field, like in a pharmaceutical 1.1x. What does that mean?
Okay, riot turning up, riot turning up. ARM Holdings turning back up. Microsoft continues with the bid off the low. Microsoft trading $3.99. Nvidia is at the high of the day, just off the high of the day. Nvidia.
On Trivago, you can compare hotel prices from multiple different sites, even if you live one. Look, same hotel, $100 less. You didn't check Trivago? I didn't check Trivago.
Check Trivago to compare prices and save up to 40%. Hotel? Trivago.
Missed on both the top and bottom line. They reported a loss of 52 cents. The street was looking for a loss, but not that much. 14 cents. Revenue came in at 184.69 million. The street was looking for more than 228 million. So you can see why it got hammered in the after hours, because that pain there, that was about its legacy crypto business. When you think about the
All right, starting to push a bit higher now. S&P. A lot more fun on the long side. I'm sure the bears would disagree. You know, when market pulls back, it usually does it pretty quickly.
surge there, and so the street does seem to like that. Now, again, initially the market was disappointed, both because they missed expectations, and there was also this expectation they would hear.
Bitcoin still looking pretty decent. Bitcoin off the reversal today. Bitcoin on the daily on the right. Bitcoin. Riot. Riot turning back up. Riot. S&P looking forward to breakout. S&P looking forward to break out of this little range, descending range. Okay, moving back up to the recent high this morning, this evening. Starting to run into some resistance right here. Okay, we're starting to break out now. Okay, there we go. Okay, they're going to crush the shorts here, it looks like. Looks like they're going to crush the shorts. At least we have some resistance, but we get through this area, shorts will need to cover. That could cause a quick pop. Watch your active trader window, whatever you're trading. 69, 20s, 30s, 40s, all of these you can see volume on. Another thing you can do with active trader is you can have several strikes open. Like I could have the, just an example, 69, 10, 20, 30, 40s, and I can see the volume on all of them at the same time. It's always good. And whatever is moving the most, you can just click on it, enter. There was a lot of resistance up here. We're looking for it to break through. Okay, hedge flows, you can see continue to show calls being bought, the orange. Blue is puts being sold as it rises. When you sell a put, that creates positive gamma. Okay. So these two moving higher, I'll just do both. When this line is moving higher, that's telling you that puts and calls are in sync. We got positive gamma. Positive gamma is the result you want if you're bullish. Positive gamma still rising. Okay, positive gamma. You can see that purple line is rising. Okay, pushing a bit more now. Let's see how far we go with this. Volume looks good. MACD is crossed. Volume looks good. MACD has crossed in the lower panel. Okay, and most stocks, if you bought anything today, are off the lows, so that looks good. ARM Holdings, etc. Tesla, ARM continuation on ARM Holdings, looks good. Looks like it wants to go some more. ARM Holdings. Okay, what's Microsoft doing? Microsoft shorts covering at the low. Still got a lot of work to do. Microsoft has the base down here at least. You can see that the most it's done is one day it'll get bullish and it drops the next day. So searching for an area to, nice round number would be 400. So watching Microsoft too. Here goes the S&P trying to push higher now. Futures still rising. 5, 15, 30, 60 are on buy signals. Tick cumulative is green. We got bullish momentum. VIX is dropping. Okay, VIX looking bullish for us as it drops. Okay. Slow week as far as selling iron condors and stuff. We got all the big cap, mid cap, small cap, and NASDAQ in descending order. All of the advanced decline lines are rising. Okay. We're right back up to where we had some sellers a few minutes ago. Okay, over here. Okay, let's see how far we go with this. Oh, here we go. Futures taking off to the upside. Futures going. Futures popping again. New high of the day. Futures, new high. Is that a new high? Yeah, it's a new high, right? New high of the day. Futures.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular.
Let's run this.
ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Taiwan Semi. Good on that one. Taiwan Semi.
Schwab Network delivers real-time marketing live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7.
GE looking good.
Free on SchwabNetwork.com. Morning movers, be the first to find out what's shaping Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8
Big bullish day. Look at that. Look at that candle on the daily on the right. Big bullish day.
Stay connected to the market.
Very nice.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Stay connected to what moves markets. Download the Schwab Network app.
Muse markets.
Coverage wherever you are.
Okay, you Aussie.
Ladies live at the New York Stock Exchange, and this is the watch list. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust.
Okay, rejected.
Watch list, 2 p.m. Eastern, only on Schwab Network.
Okay, still got plenty of time. Plenty of time to push this higher. Okay, there's really no news. Baker Hughes. That was at 1.
Very close to breaching now 50,000, but only boding well for more of these consumers. As you've seen in real time, George, this name has only continued to surge throughout today.
Keep an eye on the S&P. This could rip very easily, very quickly. Okay, this could rip quickly.
Sales for the business, and overall, this is potentially a value-based turnaround story altogether. The way things are improving when it comes to, of course, their turnaround
Okay.
strategy, and also the financial metrics under the hood. If you look at the EPS,
Let's see what ARM Holdings looks like. ARM Holdings. ARM is gone.
by posting an adjusted profit of 9 cents. So it wasn't necessarily something about share buybacks. It was actually some improving top-line sales relative to estimates, which were 1.23 billion versus 1.31 billion. Now, those sales numbers were estimated to be down in the mid-single digits, and they were.
ARM Holdings.
But going forward,
Looking good.
they did develop some improving EPS guidelines. They actually increased their EPS from around 3 to
Okay, ARM looks good. GE having a good evening. Turning back up now. S&P 500. I hate when this happens. I'm not sure how to fix this. Go to default. And even that doesn't work. Okay, so I have to do this. Okay, we ran into resistance again. Okay, resistance again. Let's see if we can get it through it this time.
They actually showed a 20% increase in markets, even though across the board apparel, footwear, and accessories were down system-wide. They are showing improvement in the emerging markets in Latin America. It's a primary catalyst for potentially continuation of price action to come.
Okay, and so George, we're seeing this name has relatively high short interest, at least as a percentage of their overall float.
Yes.
It's at 33.5%. So yeah, that would make it meme stock territory and then some. So does that then lead it all to some of the exuberance we're seeing today? I mean, is this potentially a bit of a short squeeze as well?
Well, I think there's something there, Jenny. Typically, not always, but sometimes you'll see this meme rally latch onto nostalgic themes. Now, if you look at
Okay, it's been a good day. It's been a good day.
Let's call it 30 years. It's a relatively older company. It's been struggling. Short interest is high.
Okay, what happened there?
If you look at market cap, equity 2.6 billion, cash almost 400 million. They are still losing money, but free cash flow is improving. So again,
ARM Holdings looks good. Robinhood looks good. Looking for a follow through on Robinhood over the next several weeks into mid-year. I did buy some Robinhood out in, what is it, July 115s. Okay, getting rejected here. Plenty of time for one more leg higher or more. JP Morgan. Okay, JP Morgan, big day on JP Morgan. I didn't realize I still had a position of calls. I have calls on JP Morgan. Let me see. Are these expiring? No, I got April. April. Whoo-hoo, that looks good. JP Morgan. 330.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for
JP Morgan.
unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and
Thank you. Thank you, Jamie Dimon.
your investor checking account is linked to your Schwab One brokerage account. You can manage your checking and investing in one convenient
Yeah, exactly, Mondo. When it's directional, that chop is what kills us. The chop is what kills us.
money market funds and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Yeah, the hedge flows whenever they're choppy. This is big difference today. Big difference compared to, let's say, yesterday. Yesterday.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Slot insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere,
free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Yeah, that's yesterday. All right, we're pulling back pretty aggressively here. All right, so bulls getting trapped at the highs. Okay, hedge flow starting to double top. Hedge flow is starting to double top, so the S&P is rolling over. Okay, so that is now, yeah, there you go. Overstaying our welcome on the call side. Is that just somebody taking profits? It looks like somebody just taking profits. We'll see what happens.
Now we're in the car together almost daily. I started to realize, what can I pick up? My dad, he's been with Schwab for a long time. Jim, my financial consultant, I programmed that 20 years ago. Jim's really been there to answer any questions I ever had. It makes a huge difference.
Let's see, BJ's. It's a nice. BJ's has a nice app that tells you exactly what the gas price is. Nice to know. Let's see, BJ's. Let's see, sign in. Why doesn't it remember? Why does it not remember me?
So glad you're with us, and we have a big show for you today. This
BJ.
Dow is up over 1,000 points right now. So we'll bring you some outsized trades in Nvidia, Tesla, ARM Holdings. We're looking at that options corner. Also, we'll talk the future of AI.
So I didn't save it. That's weird. Okay, I know I wrote it down. Let me see. Where's my? There it is. Okay.
So much more to take a look at. Sentiment came in a little stronger, but pretty amazing how the market is bouncing back. After 3 days of selling, over $1 trillion lost in market value. You saw the software ETF down 8 days in a row, and things are bouncing back. Even Bitcoin has come up off the 60,000 low. So here's a look right now at the market. And in fact, the Dow is higher for the week. It's up 2.16.
All right, starting to get a bounce now. All right, so they're not finished. Torturing the bears. Man, I'd love to see us close like this on the daily. Okay, I'd love to see this daily close like this.
And tech is really leading the way. And shining. Here's the Nasdaq up 1.8% at 24,997. The Russell, the small caps bounce back up 3.35% with 10-year bond yield of 421. Oil and gold are both higher. Gold's up $95, and we're saying that oil's at 63.90. We keep an eye on the U.S. dollar here at 97.50, and the Bitcoin trade 69,900. This after we hit. It's been the worst week since 2022. I mean, it hit as low as 60,000 basically, and bounced up off that low. So folks are probably pretty happy about this nearly 10% move in Bitcoin. Kevin Hanks is with me, host of Fast Market here at Schwab Network, and live at the CBO in the E there. And I was just talking about some of the tech moves that we're seeing. I know you were looking at Amazon. What are we looking here? Because we have a lot of CapEx spending. Tell us.
So despite 9 of the 11 sectors in the S&P 500 higher, normally 2 of them, consumer discretionary and communication services, those are the 2 of the heavyweights. So 2 of those are still down on the day. Why? Well, you have Google Alphabet, you have Amazon, you have Microsoft, or you have Meta Platforms, all lower. Microsoft is higher, but only slightly. So those stocks that have gotten hit this week continue to get hit. But the rest of the stocks, like when you look at the CapEx spending, Nicole, and what it's going to be, 175 to 185 billion from Google Alphabet, 200 billion from Amazon. That's why that stock is heavy today. Meta Platforms, 115 to 135 billion. Microsoft approaching or exceeding $100 billion. Where is that money going? It's going to the semiconductors, NVIDIA, Broadcom, AMD, those stocks. It's the semiconductor segment of the information technology that is skyrocketing today. Big percentages. I've got NVIDIA up 7.4%, Broadcom 7.3, AMD 7.8, Micron's higher by 2.7, Intel is higher by about 6%. These names are what's leading this sector of the S&P 500 higher and making it the ability to dwarf the two second biggest sectors of the S&P 500. So a broad-based rally lacking some of the key components, but strong nonetheless, Nicole. It's a pretty incredible day. And remember I said, with 2 hours left to go, this trading week, that'll be vitally important. Right now, it looks like it's going to be a positive day, Nicole.
I can't even believe it. I mean, I should do one of these because I was thinking that maybe it would be sort of quiet or people would be a little nervous. And, look at the VIX came down 1798 and people are buying the dips. And that's what they've been doing for years and years. We've been in a secular bull market for a long time, a decade now. And so when they buy the dips, they make money. And so they did exactly that. When we talk about the rotation out of tech, I mean, is there anything else that you were watching here?
Okay, trying to do something here. I don't know. Markets feel exhausted. We've done a great job of reversing back above the 50-day. That's all I care about, really. And having some of these positions back to positive. Took a lot of profits off over the last 2 weeks. Mostly options that expired today or next week on Friday. New York Fangs look a lot better than they did yesterday. Everything was red at the close. Micron trying to get back above. It's a back above the 21-day. Micron. Okay. What do I want to take off? Anything? Probably not. Looks pretty good. Pretty good return on JP Morgan. Okay, JP Morgan. JP Morgan. Nice reversal. Push higher today. JP Morgan. Mm-hmm. What about Wells Fargo? Wells Fargo, what is my position in Wells Fargo? What? I took Wells Fargo off. Oh. Well, I got JP Morgan, so I do have one of the big banks. I thought I had Wells Fargo too. Damn. Well, that's what I get for taking profits. That's what I get. Took profits yesterday, apparently. Hit the 21-day, 50-day, bounced back off of it. Higher today. Oh, well, at least I have JP Morgan, right? Okay, that's good. Looks good. Damn, that's upsetting. What about Merck? I still have Merck, right? What? Oh, I'm looking at the wrong account. Looking at my kids' accounts. No wonder. No wonder. Merck. Big follow through on Merck. Okay, that's better. All right, I do have JP Morgan and Wells Fargo and Merck. I was looking at the wrong account. I have 4 different accounts here that I go back and forth with. Dummy. So yeah, so Merck had a good day today. The U.S. TrumpRx.com, TrumpRx.com, where you can get supposedly Once that starts working, you can get drugs. I personally don't like taking pharmaceuticals. I would like to work on health. I mean, some people have to take them. Yeah, New York Fangs look good. Not a bad day. Not a bad day. Could be a lot worse. SPXS, I had that going into the last hour of the trading day yesterday. I bought some SPXS just so I would have some confidence if the markets did drop more today. I was expecting to wake up and see a big red trend, big red candle. Was very happy to see a big bullish candle instead. So I took SPXS, the short, off. I had some SPXU calls queued up at the close yesterday. Those didn't fill, so I took those off at in the morning. Otherwise, I would have got filled. SPXU. Okay, all of the oil and gas names are turned back up. That's good. Good. Not a bad day. Tesla making some inroads to higher prices. Tesla.
And so at this point now, what's your strategy? I do want to talk about crypto and precious metals and all that, but what kind of strategy do you have in place for investing for this year?
Well, we usually stick to the premise of buy high quality companies that have improving business momentum that you can get at a good price, and that helps you through these pockets of volatility. The earnings grow, continue to be what we want to own in the portfolio. If you look at from a style basis, small cap earnings momentum looks pretty good. Large cap growth still has good earnings momentum as well. International has certainly done better with the declining dollar, and that should likely continue into 2026 as well.
How about the rate environment? What do you think?
So we got Cleveland Cliffs next week. Cleveland Cliffs open. Opendoor. We got Datadog, Spotify, CVS, Coca-Cola. And then on the 10th, in the evening, we have Upstart, A-Lab, Hood, Robinhood next week. Ford.
They're all moving the right direction.
Let's talk about what's going on with crypto and precious metals. Let's take them separately. What is going on in your mind with Bitcoin?
USAR. I just heard USAR in the background. USAR. All right, little bounce here at the 21 day. USAR. Okay, USAR catching a bid at the 21 day. USAR turning back up. Okay, nice little move here on USAR. Let's see the 60-minute. Needs to get back above the 60-minute. S&P still fading.
When we think about gold, which is right now gaining once again, still below 5.
Okay, USAR. What's critical metal? CRML. Okay, that's trying to turn. MP Materials. All right, that's above the 20 MA. Hopefully that can turn. Rio Tinto. Okay, Vale. Newmont Mining. What is gold doing? All right, still hanging out. Silver lower. Bitcoin salvaged the low. Bitcoin salvaging the low. Did bounce today.
The job market's definitely slowed. We saw the JOLTS number came out this week.
week. It was delayed, but we had job openings drop down to 6.5 million. That's compared to unemployment, people unemployed at
Oh, what's Palantir doing? Palantir was in the toilet. Okay, Doji inside day on Palantir need a bounce way below the 200-day. Palantir, PLTR. Okay, that needs to turn the corner. Palantir. S&P 500. Okay, range bound. As you can tell, range bound. Back above the 50 today. I'd like to see it close as close to the high of the day as possible. S&P.
Specifically, pharmaceuticals has looked really attractive. It's had pretty good momentum. It certainly plays into the aging of America theme, and people are going to be on medications, and that's been a good area of growth in the market.
And just quickly, the financials, the type of financials you like, which ones would those be?
Yeah, the banks are probably the most attractive. They benefit from the steepening of the yield curve because their cost of borrowing is at the short end of the curve, and they lend out at the longer end of the curve. So when you're in an inverted yield curve, that's a bad environment for them, and we've seen that quite the opposite. Now the yield curve is actually positively sloped. That's good for the banks.
Glenn Dorsey, SVP, Head of Client Portfolio Management, Clark Capital. Thank you, Glenn. Great to see you. Really appreciate it. Coming up, Options Corner. Tom White is standing by, and he'll highlight unusual options activity we're seeing on the day and some big names to watch, including NVIDIA, Tesla, and ARM Holdings. Look at that. ARM is up 11% right now. We'll be right back.
Okay, fading a little more. Oh, I don't know. I feel exhausted today. I don't know why. I think the emotional capital that we spent on Wednesday and Thursday had a toll. You may not realize it. I try to steer away from getting emotionally involved with the markets because it's like a crazy ex-girlfriend or crazy ex-boyfriend, right? Or crazy ex, period. The ones where you don't know where the hell they're coming from. That's what the markets are like. And, to lose your mind over what somebody else is doing, as Marcus Aurelius so famously said, be okay with the things you cannot control. All right. Basically, paraphrasing. And thinking positive. That's another one of his quotes. Marcus Aurelius.
Experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor?
A lot of people could learn a lot from the ancient Greeks, especially the crazy nuts that are out there these days. You just look at them and you scratch your head. It's like, man, what kind of upbringing did you have?
Head over to schwab.com/coaching and start learning today.
Yeah, that's one of the good ones right here, right? You have power over your mind, not outside events. Read S&P 500 volatility. You can only have so much. You can only have so much power over the markets in terms of your mind. And this one here, happiness of your life depends on the quality of your thoughts. If you're constantly thinking positive, it's always a good thing. Yeah, Marcus Aurelius. I like his writings, his meditations.
Maybe not expected the strength so much, but maybe we were oversold a little bit. We had a few days of down moves in the overall market. We're still negative on the week if you take a look at it, but the Dow hitting fresh all-time highs. That's a positive. Maybe it's the selling got a little bit overdone. Some of the other asset classes that have negatively impacted the equity market at this point kind of turning around. I still believe that maybe some of the moves into staples and some of the other areas where the broadening out of this rally is kind of signaling that we're not done with volatility by any stretch of the imagination. I mean, we saw the VIX settled at record or 3-month highs just yesterday. We're pulling back to the 18 level. I just expect some more volatility at this point, just because of the choppiness in the market, the dispersion between some of the sectors that are doing really well versus the ones that are under pressure. We're seeing a rebound in tech. That's a good thing, but not all of tech is up. Remember, communication services still under pressure here a little bit. So just get ready. I think there's going to be some additional volatility in the markets. That's not to say that, hey, it's not going to, continue to move up or continue to rebound at this point.
Okay.
As we start winding up earnings over the next couple of weeks, that we could see some potential more volatility.
And we're seeing NVIDIA jumping a great day that we haven't seen one like this, right? Bounce back after 5-day sell-off, right?
Yeah, and
All right, we get a bounce here. Bounce. S&P. Little bounce here. Okay, let's see. Where are we? I just want to check the S&P because I'll get something close to the money. End of the day, I like to do this. I like to get something close to the money. And if we get any kind of pop, you can do a quick trade. What do we got here? 69. All right, so 69. What the high was 69.18. 69. 69.20. 69.20. Okay, 69.20 calls. Those are going for $2. Can we get a quick pop to the upside? All right, so I got the 69.20s queued up. Okay, S&P.
So we'll have to wait and see on that. They're going through their potential funding round into ChatGPT and OpenAI. That's going to be, something that's highly watched. But Jensen Huang's been out there giving commentary about maybe the sell-off in software companies that's not warranted at this point. The demand that they're seeing.
It's good. I mean, these pullbacks like Robinhood, beautiful. I mean, that gives you an opportunity to buy something cheap. A spread that can make, for $115, make $800 per spread. Okay, it's only 2:21. Wow, it felt like it was after 3 o'clock already. Okay.
There's such an we're starting to learn, I think, about how power is produced. And at one point last week, I think it was 37% of all electricity from Connecticut to Maine, often thought of as a quote clean energy grid, was oil. Usually it's 0% or a couple percent. 37% was oil. You could make the case that New England had the dirtiest grid, the most polluting grid in the United States. Why isn't this getting
Okay, here we go. We're starting to move.
to the public and the policymakers?
Okay, let's see how far we go with this. Let's see how far we go. 69.20s. Come on, go. Go.
Wailing off of Nantucket because that's what it feels like we're going backwards in parts of America.
Go.
In the name of climate change or green energy, really, which are marketing terms, none of these things are doing anything meaningful to lower global emissions. But Brian, the number you just gave was actually the number at peak demand time. 37% from oil.
Secretary, right, I hope you don't mind if I jump in here. We just crossed above 50,000 on the Dow Jones Industrial Average for the first time. You don't need to comment on that unless you...
Dow Jones 50,000, first time.
CEOs of the board of Oklo, and energy stocks, by the way, as you know, are at record high. Many of the oil and gas stocks, record high. The solar ETF, by the way, is at record
Okay, there goes Dow Jones. 50,000 for the first time right here.
This is confidence in American leadership. We have a president in the leader today that doesn't want to end our energy industry or end our...
Okay, here we go. Nice pop there.
He wants to unleash
Nice pop.
business, consumers, and capitalists. And yes, you see it course, reflected in the
TOS, yeah, Thinkorswim, TOS.
very robust economy this year and next year in the United States. As all these plants and factories are under construction in our country, businesses have the confidence to expand and invest in the future. And that's not just energy policy, that's just common sense across the board.
Energy Secretary Chris Wright, we appreciate your views. Dow at 50,000, energy, a big part of that story, affordability, hopefully a big part of the story going forward. Mr. Secretary, we really appreciate you joining us. Thank you very much.
Thanks for having me.
Incredible moment here. I don't know if we can just take one more second. It's been 3.5
It's
years.
only the Dow Jones. I mean, S&P just made a new all-time high last week, Wednesday.
So this is not even really an AI story.
And well, Caterpillar, and people, I know Seema's talked about this. Caterpillar, can we bring up CAT? Caterpillar is an energy story as well. We think of them, of course, for the big tractors and bulldozers. They make them great, but they're getting huge into energy as well because they're learning how to convert some of their turbines into natural gas pipeline machines. Baker Hughes, their turbines, a lot of people don't realize this. They're basically twisted versions, in a way, for lack of a better term, of jet engines from when they were part of GE.
Wow.
You take a giant jet engine, you change it a little, tweak it, and make it into a pump for natural gas through pipelines. Caterpillar's doing the same thing. They're a big part of the story.
Caterpillar stock, Goldman stock, those have helped propel the Dow to the level it's at now. Of course, we haven't even had much participation from the Mag 7 to get to this point. Those names also NVIDIA. It's a small price number. It's a huge mega market cap stock, but this Dow milestone is significant. Again, 3.5 years to get here. Took 3.8 years the previous time. Every time now that we continue to run through these numbers, Brian, the percentage change gets smaller.
And I know, listen, what Secretary Wright said, and he and I don't agree on everything, but, you know, he talks a lot about what he views as important. And there's a big debate there around a lot of those things. But I will say this, whether or not it's the administration or just market forces, if you go to Kansas and they're paying $2.25, $2.10 a gallon for gas, for most families in America that drive, they use about 50 gallons a month. That's about the average. That money matters. It matters a lot, and it goes into other parts of the economy. And I think it's interesting to watch this energy record high story, and even solar stocks, by the way. Bring up the TAN, T-A-N. It's not just oil and gas, folks. Solar is also booming, and in fact, there's been more investment in solar the last year than at any time in history.
Yeah, and again, what Ed Yardeni, who's with us just top of the hour, just missed this moment by a couple of minutes, but what he said, and he's been bullish on international, he's bullish on, it just goes back to earnings. The earnings season that we're still going through is on track possibly to still show double-digit growth, which would be the 5th straight quarter in a row. So yes, the price is rising. The earnings in many cases are there too. And Brian, there's Caterpillar up 6% today.
Oh, it's still here.
Bring him back.
Grab it. Is he actually coming back?
That's great.
And it's like Ed Yardeni is still here. There he is. This is the benefit of having somebody on set.
Come on over. Come on, step into our light here.
We're going to take a short break. Ed Yardeni's back. We'll talk Dow 50,000 for the first time ever. Get some popcorn, folks. We're back right after this.
ASST. AI.
SMX.
Okay, we're gonna run this or what? Looking good, looking good. Okay, we're starting to go here. Looks like we're gonna run. Looks like we're gonna run here. Okay, I'll try some at $4. See what this does here. See if we can follow through. Pop through this? No. This would have been a better entry, this pivot low right here.
Welcome back. We just saw the Dow cross above 50,000 intraday for the first time in history. Ed Yardetti is here.
There goes the S&P, starting to push a bit more.
Rally now, and we're sitting comfortably above this level. 2.25% gain, Ed. And as you said, your whole thesis here was we were going to have the roaring 20s, and maybe in 2026 we're now shaking off the pandemic enough, looking at AI and admitting, okay, maybe you're right.
Well, I think the big story really is productivity. And back at the beginning of the decade, I'm a baby boomer, and I knew that all my friends are retiring. I'm still working for a living. I don't play golf, so I don't know what else I would do with myself. But I knew that my friends would be retiring, and the baby boomers are sitting on $85 trillion of net worth, and as they retire, guess what? They're spending it. So that explains the resilience of the consumer, and of course, the resilience of capital spending can be explained by the technology revolution that we've been in actually since the mid 1960s. With the IBM mainframe, and so we've evolved all the way to the cloud, which is a huge development, and now to AI, which is really just another app, if you will, but it's an app that lends itself to all sorts of applications. So I think productivity deserves all the credit for all this. It has made a comeback. It certainly was very strong last year, and I think we're going to wrap up the next 4 years of the roaring 2020s with continuing very strong productivity.
How much of this, and this is 100 years ago, I was briefly a commodities trader, so I still think it's supply and demand. When I got into this business.
Okay, I got to take a 2-minute break. I'll be right back.
Yeah, it's about 3,500 to 3,600 now. The number of public companies basically been cut in half.
Yep.
The available stock that's out there has gone down by a lot, but money, M2, M5, M6, all the money supply numbers keep going up. How much of this is literally just more money chasing fewer assets?
I think there's something to be said for that. But
I know it's not very sexy.
Well, I think at the end of the day, the arithmetic is even simpler, and that is PE times E. And the reality is fewer companies are making a ton of money with earnings at a record. I think it's about 3 quarters in a row where they've risen to a record high for the S&P 500. The GDP profits is an all-time record high. So I think that's partly the story. But we wouldn't be here if these companies weren't extraordinarily profitable, which they are. The profit margin, as I said before, is an all-time record high. Revenues are an all-time record high, which is really amazing because some of those revenues come from overseas. So it demonstrates that not only is the U.S. economy resilient, but so is the global economy, which is great news. Because it was stress tested with all those tariffs last year, and yet look where we are today.
So I'll ask you one more. A lot of people, especially younger people, the crypto believers and the rest of it, they say, of course it's at 50,000. The dollar's imploding. In other words, the idea that real estate's expensive, the stock market's expensive, gold, anything priced in dollars is up because the dollar's been debased over the decades.
Well, let's put it into context. I think we're down about 10% last year. I mean, that's just a garden variety correction. It's not like in a free fall. And, and a lot of that is by looking at something called DXY, which is the dollar index, which is a bizarre kind of index because it's fixed weight and it's just the euro is 57% in there.
Yeah.
And, are the Europeans doing anything particularly special and unique and exceptional that would make the dollar go down? I don't think so. And by the way, as soon as we have like another crisis, I think you'll see the dollar going up because the U.S. is still the safe haven.
Yeah, their argument would they take it even further and say all fiat. It's just be us competing against each other in a race to the bottom, and so these stock prices are unbelievable.
Well, you know, I've always counseled against getting into these hang-ups, these kind of ideas that are driving, ideology that drives your investments. Don't let politics, don't let philosophy, don't let, big picture theories get in the way of making money. And that's the important thing. And you really want to start with the data. Don't start with the presupposition of how the world actually is working. Look at how it's actually working.
Yeah, I hate the term cash on the sidelines. I think it's kind of overused. It's like a platitude almost at this point. But I do wonder how much, Ed, do you think money is still just sloshing around out there? And some people do buy at the top, right? For good or ill. They're down 50K, maybe they put money in. How much money is actually just sitting around, still not invested?
I think we have to look at it.
Market's doing a great job of holding up here above the 50-day.
When you look at it dynamically, the world has never been wealthier. I'm not saying that we got income, we don't have income inequality or wealth inequality. We do. But the world, not just the United States, has never been wealthier. I mean, here in the United States, we've never had a generation retiring with as much money as they have, which is $85 trillion in net worth. A lot of them paid off their mortgages and all. So I think what you're saying here is that all that wealth needs to be somewhere. I love all these people who are saying we're going to have a debt crisis any minute, and some of them talk to me or they talk to their investment advisors. I said, well, what are you really worried about? I said, well, I'm really worried about all this debt. The market's all-time record high. I'm getting nervous. I said, well, so if you want to be out of equities, what do you want to be in? 10-year treasuries would be okay with me.
Right.
So in other words, there's a demand for debt. Look at where the bond yield is. So there hasn't been a debt crisis, but there is a constant need for rebalancing. I mean, the market goes up. It goes up on 7 stocks and say, well, maybe it's time to move it to some other areas of the marketplace. Maybe it's time to move it to gold. Gold has a very good long-term trend relationship with the stock market. So if I'm right, the S&P gets to 10,000 by the end of the decade, that could justify gold getting to $10,000, not on any thesis or theory, just on rebalancing.
And I think just a quick coda to what you said, it's so important what you mentioned, which is all, in an aging society, they're now withdrawn. All of the gains we see in the market now are going to be withdrawn, and you think converted into consumer spending by a lot of the.
My friends are going on cruises. But I get seasick on these cruises.
No.
So I just wanted to say, so they texted me, said, Ed, wish you could be here. We're having a great time. And by the way, whatever you're doing, I love the market going up. And they're having a tough time spending their nest egg because it just keeps going.
But they're not spending their. So this, I think, Kelly, I know time is tight, but it's down 50K. Let's blow all the commercial breaks. Let's celebrate, right? I think you hit something really important. So the greatest, I don't want to say lie, but I think the wrongest thing said about the market was years ago, 10 years ago, people said, well, the baby boomers are going to all age out. They're going to sell all their stocks and the market's crash. If you have enough money, I know a lot of people don't have the money. With CNBC, we know who we're talking to. If you have money in the market, you're probably just spending your gains. You're not even touching principal. Kelly's dividend yield that she referenced earlier, right? You got a couple million in the market. I know a lot of people don't, but a lot of people do. You're spending. You're not touching the print. You're not selling anything.
We've seen a lot of these consumer confidence measures really depressed. And you kind of look at the consumer confidence surveys and you look at the stock market and say, how could this be happening? And I think a lot of it is demographics. I mean, I think there's a lot of people that aren't participating in the prosperity that we're experiencing, and especially younger kids coming out of college. And many of them are finding it very hard to find a job. Many of them don't have.
All right, looks like we're going to get another bid on the calls here.
But from my own experience and my friends' experiences and some surveys I've seen, a lot of the baby boomers are helping out their young adult.
They are. Absolutely.
And they should, by the way. Don't hoard the money.
Yeah, absolutely. I mean, we're leaving them all this government debt, right? I mean, we're basically, government debt that's accumulated is basically, let me be blunt about it, it's theft from the younger people. Because
so the government's stealing from the younger generation, but the boomers are giving it back.
Yeah, the boomers are giving inequity, and we're leaving them debt. So I think we do owe the younger people.
But you, Kelly, earlier you referenced Scott Wapner's interview with Jensen Wong and Brad Gerster. I think you were excellent. And
Brad was the architect of that, basically
Trump accounts,
the Trump accounts. And again, not a political statement, folks, but given $1,000 in equity, that was Brad and some other people's idea. He pushed that for years. And putting people in the market that would not normally be in the market, I think, is a huge psychological aspect.
Absolutely. Yeah. As a matter of fact, I promoted that in a book I wrote about profits, in praise of profits back in 2021. I said we should establish these kind of accounts, and I'm glad that Brad followed up on that idea. It's fabulous. But yeah, we want to have people with skin in the game. I mean, we want them to have an experience with what capitalism delivers. I happen to think that you give them $1,000 and they have to hold it until they're 60, 65, and then maybe we don't have to pay quite as much as Social Security, and let the stock market do some of the heavy lifting for the.
Well, that was the whole thing with Social Security all along, is why shouldn't it be benefiting if you just had put a portion of the proceeds in the S&P 500? And I think we've talked about this, but it's kind of frustrating when we hear constantly about the problems we're facing. On the flip side of that could be this, this return to ourselves from all of this, capex.
Yeah, I don't think these accounts should be accessible when you're 18. I think you should watch this net worth go up as you get older, and then you get excited about the market and about capitalism.
Chile did that. Country of Chile. They did. They gave everybody little passbooks with parts of the equity market. They're not exactly a model, but they're a lot better than a lot of other countries in South America. Ed, thank you so much for coming back. But we didn't let you leave the building, so I was always locked the door for the inside. Now you can't.
Let's do this again at 10,000 on the S&P.
Ed, really appreciate it.
Thank you.
As we mark Dow 50,000, a major tech stock has been disappointing investors. Even today, it's Amazon. The share's down nearly 7% after the hefty spending forecast caught investors by surprise. And Amazon is on track for its worst weekly performance since 2022. Amongst the Mag 7, only Microsoft has had a worse start to the year. Let's bring in Ken Goreski. He's an analyst at Wells Fargo. Still has an overweight on Amazon with a 305 target. Giluria last hour, Ken, suggested that they really are in a place of somewhat competitive weakness with AWS. You disagree?
Yeah, I do. First of all, thanks so much for having me on. I do disagree. Look, I would say this. This was the incumbent in the cloud business. They were number one player for a long time. And I would argue that they were late to recognize the opportunity in AI compute capacity. And what they've been doing is rapidly addressing that need. They've been building out capacity. They've laid out for the market that they will double compute capacity by the end of 27. And so we think they're taking active steps. And we think this is really a great opportunity in Amazon.
You do? Okay. So in that case, would you say you don't have like the existential Game of Thrones concern amongst them that we were just talking to Ed Yardetti about?
No, I'd say this. We are, and I think, Brad and Jensen earlier today on the network, on your network, talked about this, is there is a massive imbalance between demand and supply for compute capacity, AI compute capacity. And really, Amazon and AWS is a play on this. Google is also, and so you've seen across, Google, Amazon, Meta, massive CapEx raises for last year, for this year. If you look back in since 2023, these companies, their revenues are up 50%, but their CapEx is up five times on 50% higher revenues. So, you have $8 trillion and probably less than $50 billion of free cash flow this year. This is a massive investment wave. It is. And I would say what you're seeing here is investors are getting a little bit nervous. They want to see returns. They want to feel like there are returns on the other side of this. And I think our view is this will be the bottom for free cash flow across these three mega caps. We will start to see better returns. And in Amazon specifically has been behind the curve. We think with this doubling of capacity, we see a massive expansion of revenue growth. We see real acceleration at Amazon, the 36% growth. And that's from, that doubles growth that we just saw in the second quarter.
What about Meta? That was another one that Gil was picking on a little bit, saying, look, they're kind of running out of cash to meet their massive capex commitments. Now, of course, they're going to the debt markets, and that's fine. But do you take the view that they're going to easily monetize and have much richer cash generation going forward because of these investments, or would you like to see them pull back on it?
Yeah, so we don't see them pulling back anytime soon. So Meta's in a little different situation because they don't have a hyperscale. They don't have a cloud and an enterprise business that they sell compute to others. So think about this: is Meta spending, roughly $75-80 billion of capex on returns that are kind of unknown, right? They're making a big bet on compute capacity without an enterprise business to actively monetize it. That's the difference between Meta today and Google and Amazon. But the two, Google and Amazon, are actively monetizing those investments. Meta is a bit of a bet on the future. Like Mark Zuckerberg is making a bet that AI and will have many use cases, and that he's betting that he will have this latent capacity, and when the opportunity is there, they will pounce and they will run a scaled network business. And look, they've been tremendously successful in the past, so it's hard to bet against them.
All right, Ken, we'll leave it there. Thanks so much for your time this afternoon. Appreciate it.
Thank you.
Ken Goreski with Wells Fargo Securities.
All right, in the meantime, strategy shares soaring right now, up over 20%, best day since April of last year. But it does come after the stock fell at 17% on Thursday, because it really moves on every shift in Bitcoin. Strategy, the single largest repository of Bitcoin, and really investors on both sides, both long and short, are kind of fighting, sometimes in public, to make their case about the stock. So let's talk about it more with somebody who is deeply and personally involved. Phong Le is the CEO of Strategy, and he joins us now for an exclusive interview. Phong, thanks for joining us. It's a great day today. Obviously, the market's up, Dow 50K, Bitcoin's up, but the last couple of weeks and months have been tough for crypto investors and for Strategy shareholders. You're speaking to them right now. What is your message to your investors?
My message is to hold on. Right, we've been through Bitcoin downturns in the past. In 2022, Bitcoin got up to 68K, went down to 16. That was a 75% drawdown. Now Bitcoin went up to 125K, got down to 60. That's a 50% drawdown. 7 years from now, when Bitcoin's at $1 million and goes to 750K, it'll be a 25% drawdown. Everyone will think it's the end of Bitcoin, and I'll say hold on then too.
What if it doesn't go to $1 million, Phong? What if it goes to 10,000 instead?
Well, first of all, I don't think Bitcoin will go down to $10,000. I think it's extremely unlikely. What's happening with Bitcoin right now is the government's fully behind it. We have a Bitcoin president. We have a Bitcoin head of the SEC, head of the Treasury. We have Bitcoin head of the CFTC. So the regulatory issues that I think 5 years ago people worried about Bitcoin are gone. I think Bitcoin is a technological transformation. It's digital capital. I don't think it's going to go down to $10,000.
Right, but you're running a business where you kind of have to have a strategy for that. No pun intended. As I understand, I was looking through it a little bit last night. The $17 billion loss in the quarter, of course, is before crypto fell, Bitcoin fell to almost below 60. Can you comment on what the loss is for the current quarter?
Yeah, it's a GAAP loss, right? And if you look at our website, we have information on the loss. But those are really just GAAP mark-to-market losses. It's really not a true cash loss for the company. If Bitcoin goes down to $8,000 for 5 years, maybe then we start to have issues around whether we need to sell Bitcoin. But the GAAP loss isn't really something we're concerned about.
And is that because you have $2 billion or so in cash on the balance sheet? Did I see that correctly?
Okay, back up again. Back up again.
Fortress balance sheet. And I think that's sometimes a misconception that we have high leverage.
Looks like we're going to try to break through this area. Okay, here we go. Futures.
Average S&P 500 AAA rated investment grade company has 20% leverage. We're half of that. In addition to your point, we have $2.25 billion of cash in our balance sheet. We put that on our balance sheet so we could have a digital fortress to back up our dividend payments. So exactly your point, not worried about the leverage, not worried about our dividend payments, not concerned about Bitcoin price right now. You had drawdowns like
Well,
you did earlier.
Cayman, can you please?
I'm sorry to jump in. Investors are. The stock fell 17% yesterday. It's making more than that up today. I've been following Michael and MicroStrategy. It's now Strategy for 20 years since it began. It's obviously changed dramatically. What then are investors and short sellers
Okay, S&P on the move.
getting wrong? What's the
S&P on the move here.
they've got in their thesis around strategy?
There's two things. One, there are
Okay, nice little pop headed towards 69.20.
sovereign store value.
Okay, looking good.
You can have that debate for hours, and many have had that. I'll put that aside. If you believe in Bitcoin, what investors don't quite understand is we're leveraged to amplify Bitcoin. We're built to outperform Bitcoin on a Bitcoin per share basis. And I say, if you like Bitcoin, then you should like, if you want something that's leveraged and amplified, right? And that's what most business are. They're leveraged off of a certain commodity. They're leveraged off of a certain product. That's what we are. We're leveraged Bitcoin. I don't think people understand. Some folks are like, hey, you should be just trading at Bitcoin value. We provide value on top of Bitcoin.
And yet
We
it must,
innovate. We create new products.
sorry about that, Fong. It must be frustrating because if your average price is 76, I'm sure you'd love to be buying in the 50s, right? If you're bullish on Bitcoin, you want a lower cost basis. So what do you do about that? If the strategy is still Bitcoin, assuming the price appreciation continues, but you can't buy when it falls certainly below these levels.
No, I don't think that's, well, first of all, that's not true.
All right, looking for a follow through on this pop to the upside. Looking for shorts to continue covering. All right, so it's looking pretty good so far. Little follow through.
And it's accretive to buy Bitcoin when we're trading above the asset value of Bitcoin. That's what's accretive. So the average price of Bitcoin isn't exactly the indicator of when we'll buy Bitcoin or not.
What would be the indicators? Just say that again, and can you comment on whether you're buying right now?
Oh, I can't comment on whether we're buying right now, but you can assume we're buying often, right? We bought every single quarter since we started the strategy. It's primarily whether it's accretive to Bitcoin per share for our shareholders, right? And that's why we have products like Stretch. So it's not just about issuing equity. It's about issuing digital credit, which is what our Stretch product is. And anytime we can issue that, it's accretive to our shareholders to buy Bitcoin.
And finally,
All right, looking for a follow through, looking for a push to the upside. We broke through this, probably taking out some stops. The volume looks good. MACD's turned up. MACD's turned up, looking good. Can we get through this level?
No, with our strategy is to issue credit, right? You know, Hal Finney, who was the first person to run Bitcoin beyond Satoshi Nakamoto 16 years ago, he said Bitcoin's high-powered money, issued as digital cash. And that's what we see Stretch as high-powered money. And if we can issue Stretch, and remember, you were talking about yields earlier in the conversation before this. Stretch is 11% yields backed by Bitcoin. If we can issue that, and we use that to buy Bitcoin, which is what we do, then we're providing amplification to increase Bitcoin.
Stalling. What time is it? 2:52 p.m. on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Friday, February 6th.
About Bitcoin as it has one of its worst weeks in recent memory. We very much appreciate. Thanks for joining us.
Thank you for having me.
Fong Lee is the CEO of Strategy, I should say. Let's get to Dom Chu now with the Market Navigator. Dom?
All right, guys. So big milestone on Wall Street just now. A lot of focus on the recent
Okay, back down a little bit.
energy, industrial, hitting record highs.
Sorry.
Scotland, the portfolio manager over at Fund. Again, Brian, the 50,000 mark has kind of epitomized this trade of value over growth. Do you think it has legs?
Yeah, I mean, when you look at it, about a week ago, Trump basically nominated possibly Warsh as the next Fed governor. And from there, it's not ironic. Noah Kahan's Great Divide song was released that same day, and we've had this division. Dow hitting 50,000 sort of represents that value side of the trade, where something like the NASDAQ on the other side of the S&P is that growth trade. And really, we're seeing that divide happen. And I think that continues. Look, if we have lower rates, if we have an economy that is going to be less dependent on all this software that's going on here, all the AI talk and software, that makes those value companies a little bit more efficient and profit margins go up, it makes sense to own these value kind of trade names.
All right, so how do you express that view structurally with the transaction that kind of gets you to that kind of movement?
Yeah, I think, well, as an options trader here, I look at it this way, right? If I'm looking at IVE, the value ETF,
I can buy that call, the 225 call in March. At the same time, finance that by selling the triple Qs, NASDAQ ETF calls, the 632 call. Net, I actually collect $5 to do this trade, the 632 call versus the 225 call in IVE. I collect $5 waiting for the markets to move higher. I'll get long value. If it's above 225, I'll get short the NASDAQ if it's above 632 in the Qs. And I think that's a great way just to sort of collect some money and play this sort of great divide that's happening.
And really quickly, what's the risk here?
Well, the risk here is the NASDAQ starts moving and moves significantly higher, about 4% out of the money, these calls, right? So if the NASDAQ moves above that level, I am short the triple Qs. I would be long IVE against it. So it sort of like becomes a long short trade. So the risk is NASDAQ just keeps going. I've got to sort of protect that short at that moment. So I'll be watching that closely sort of as this month plays out all the way through March expiration.
All right, Brian, thanks for helping us navigate through that. We appreciate it. Have a nice weekend. I'll send things back over to you guys. Kelly, Brian.
Thank you, Dom. Dow hitting and now above 50,000 for the first time in history. Stay with us for more after the break.
Yeah, Frano, I just have those active trader windows because, when the markets move quickly, I like to be able to jump in and jump out. Yeah, Nokia. Yeah, Nokia's been a dog, right? Gap down on earnings, Nokia. Oh, yeah. Nice. Nice. Still have calls. 5 strike. I think I have 7s too. I think I have the 7 strike too on Nokia. I believe it was for April, right? Nokia. Let's see. Nokia. Where are you? There you are. Nokia. April 7th too. I have the April 7s too. Yeah, I have the April 7 calls too at the money. Slightly in the money. All right, so maybe we'll get something going here. My son has the 5s as well. He's been complaining it hasn't gone anywhere since we got in way over here back in late October on that move. Bought in the money and out of the money. So that's nice to see.
RGTX. ULL.
Yeah, they got to fix the voting machine business. I don't trust elections anymore. I don't think anybody does. Yeah, got an hour and 2 to go. Hour and 2 minutes. Power hour.
Right now, Dow hitting 50,000. Jay Woods, Chief Market Strategist, Freedom Capital Markets. Jay, we got stocks to talk about, but well, you have a 50K hat? What does that say?
We do.
How'd you get that made so quickly?
Listen, I have my old 10,000 from 99, and we like big round numbers here. So we got the 50,000, which will don. So you have to know people, Brian. And I don't know anybody.
But our point to Ed Yardeni earlier, and I know people are listening and watching. Do you think
No, but no.
it'll get picked up by like the nightly news? Like they'll mention this. You don't have to be a CBC viewer. I think
they have some weird, like a stock split, kind of a weird psychological effect.
There he is.
Exactly that. It's
There he is.
we like big round
Paolo.
numbers. We celebrate with
Cousin Paolo.
No, there's a big bifurcation going on in this market, and this rotation speaks volumes when the Dow hits 50,000 because people that don't understand the market too much, they think everything is great, but
Okay, if we can get a run here, that'd be nice. I have options queued up.
we had that sell-off in crypto. It looks like we're getting a nice little reversal now, but I don't think the worst is over in some of these big names. But when you look at the Dow, 30 stocks, my God, you have 7 of them making new highs today, and it's a nice broad basket of leadership. But it's not the leadership that's going to take the S&P 500 much higher than where it is right now.
You know, when I worked down there, Jay, with you, I would get a hat. I don't. Where is my hat?
Well, he doesn't want to mess up his hair.
Yeah.
You know, it's all screwed up now.
Jay,
Yeah, JP Morgan looking good.
125K.
I saw your tweet. I know this is a hill that Kelly will die on.
I will.
When you talk about
Okay, we got rejected there.
great stocks that pay healthy dividends, and they've rotated out. We no longer have GE. We no longer have Walgreens Boots Alliance. Thank goodness. But we also, we've seen Amazon and Nvidia join the Dow. It rotates accordingly, and that's why this index is probably the best index, emblematic of the whole sector. So to me, it's just a celebratory moment, but there's more work to be done.
Ring the bell. We'll do that now.
Bitcoin still moving, moving on up. Bitcoin looking good. Okay, I have Bitcoin. I have Riot blockchain calls. I had shares earlier. I got out of those at the high.
Welcome to Closing Bell. I'm Scott Walker, live from Santa Clara, site of Super Bowl 60. And speaking of big round
Santa Clara. What's in Santa Clara? Santa Clara. What's there? What's the stadium there? 49ers. Okay. Levi Stadium. Okay. Levi Stadium. Okay. So there you go. That shows you how much of a football fan I am. I did not know that. Nice Spanish architecture, though. Spanish colonial architecture in California.
Its AI spending plans, well, they blew past expectations, and that's where we begin today. History.
Okay, looking for a bounce here. Looking for a bounce. Okay, see if we can't get something going here. S&P.
CNBC contributors Hightower, Stephanie Link, and Requisite Capital's Bryn Talkington. So good to have everybody with us. Professor, I'm going to you first on this. 50K for the first time ever.
I mean, we set this up about 3 weeks ago, and who would have dreamed that this is 50K? I mean, I remember 10K in 1999, and it was
Dow Industrials 50K first time. High of the day 50,026.
So in 8 years, we've actually doubled the Dow, and as you know, the Dow is
That's crazy.
underweight technology. So
That's good. That's good.
the value stocks, more of the older stocks. It does have a couple certainly tech stocks in it, but for that to hit a new high like this, it shows the despite what we see this rotation, there's a lot of fundamental strength in this economy.
Yeah, Steph, it shows the durability of the story, the bullish backdrop, and the narrative that has allowed the market to get to this level, in some respects without technology taking it there. I mentioned in the intro the equal weight S&P hitting a record high in its own right, and that part of this story needs to be focused on heavily.
100%. And I think the reason you are seeing the equal weight doing better is because you are seeing the broadening out, and that is tied directly to the economy growing 4 to 5%. And we haven't even had the impacts from the one big beautiful bill yet, but we know we're getting fiscal, monetary policy, accommodation.
And note the MACD. Note MACD too on industrials. Okay, can we go here? Or we're going to go. All right, so we're starting to move. So using your active trader window, you can get in and out of these really quick.
spend, the big seven are going to spend $700 billion, up 75% year over year, up from the $450 billion they spent last year. That is a tailwind for the economy, 100%. And because we've talked about the food chain, all of the various different industries that are going to benefit, the power companies, data center, grid, the financials.
Let's go, LETSGO, let's go.
It really feels good, and I'm so glad that we're finally seeing a broadening out. And that's, by the way, tying back to very good earnings as well.
What a difference a couple of days makes, too, Bryn. You know, the last couple of days obviously have been dominated by questions over all of this AI spending and whether all the angst over it is justified or not. I asked that question to NVIDIA CEO Jensen Huang, who joined me earlier right here. Listen.
Demand is sky high, and there's a fundamental reason for that. We're in the once-in-a-generation infrastructure build-out. This is the largest infrastructure build-out in human history, and there's a fundamental reason for that. Artificial intelligence is going to fundamentally change how we compute everything. Everything from database processing, the way we do search, the way we do recommender systems, the way you shop, the way you watch movies.
So, Bryn, what do you make of that commentary? I mean, it certainly helps.
Okay, let's go some more. Let's go more. Let's get through this level here. Let's get through it. Let's get through it.
Part of those tremendously large numbers are why we see the Dow doing well, why RSP is breaking out, because we have so much spend into the economy. And so, GDP is picking up. And so when the OBBB actually gets put in, we feel that this is part of why you're getting that broadening, because, these data centers, the grids, those are workers, electricians, those are components that are actually being built out largely in the U.S. And so I think you're going to continue to see this broadening out. We added the equal weight RSP in January of 2024, expecting a broadening out. So 2 years early, but
All right, here we go. Breaking out. Okay, this is good. All right, so your active trader window, you could get into some trades real quick here. All right, that's really cool. Nice follow through.
Professor, Jensen Huang makes it clear that there's just too much angst and anxiety over these big numbers, that it's so justified because demand is so large and the transformation so big that it's going to take this level of spending from these hyperscalers to get us to where we need to go. I feel like at times the market just has a hard time accepting it because the numbers are so big.
Yeah, I mean, and one thing he said struck me, that demand for his older chips, 4, 5, 6 years, the prices are going up. And, when you think about the history of technology, older technology never goes up in price. The demand is sky high. I was just floored by that, but I fully agree with him. This is probably one of the greatest technological revolutions that we've ever experienced. It's going to change the world in many ways that we don't know, but it's going to be for the better because we can produce more and do more with less effort, which is basically what technological progress
Okay, let's go LETSGO. Let's get this higher. Let's keep going. Let's scorch it. Go scorched earth here. Okay. Do it.
We're going to see a breakthrough that could devalue some of the technology that is developed, like we did in 2000 with the fiber optics, the multiplexing, which really was able to put so many more signals through a fiber that all the Nortel systems, JDS Uniphase, all those companies suddenly collapsed. Is there going to be some sort of surprise there? Good for the consumer, but companies, I think that is what is keeping some of the people on edge. But as long as the demand is astronomical.
Yeah, we were just showing a board of the mega cap names, and of course they're still mixed because there are questions individually about some of these companies. I want to take a look at shares of Meta as well as we head through this final stretch. There's the mixed picture that I was talking about. Meta's been red for much of the day. But you'll see if you throw up an intraday chart here and you track the point of our conversation.
So the Dow Jones making a new all-time high. That's pretty wild.
Nobody uses AI better than Meta. And so if you look at the way that they're using AI went from a classical recommender system running on CPUs to now a generative AI agentic system that's making recommendations. Everything from the way social media works and the way they
Okay, let's go. Come on, let's pop this. Let's pop this.
changed, and their earnings show it. And that's the reason why they're investing so hard.
All right, Steph, you're the Meta shareholder. Those comments obviously got our attention, and though the stock is red, you could see a bit of a move off the worst levels of the morning when Jensen Huang sang the praises of Meta and what they're doing in this area.
Well, we talk a lot about monetization, and some people are very frustrated that some of the hyperscalers are not seeing it, some of the software companies aren't seeing it, etc. These guys are. Meta is seeing monetization. They just grew revenues 23%, but they raised revenues by $3 billion more than the people were expecting. So they're going to go from something like 23% to something like 30% because of all of the usage and the spend on AI. And of course, the family of apps grew 24%. Impressions grew 14%. Price per ad, that is monetization's definition, and that was up 6%. It's been comfortably in the upper single digits in terms of pricing power. That's great to see. I think the stock trading at 21, 22 times forward estimates for this kind of growth is a buy. You know I own it, and it's one of my biggest positions, and I will continue to buy it because I do think over time the estimates are going higher. Now, I know the one concern is that free cash flow is coming down. It's only going to be $9 billion this year after all the spend. And that is something to watch because I'm not crazy about negative free cash flow, which is why I think Amazon is down today, why Oracle is down 60% from its highs. But I think that over time, this spend is going to lead to stronger results and stronger free cash flow. So I'm willing to give them the benefit of the doubt.
So let me come back to you.
Okay, can we go a little bit more? Been a great day. After 2 down days. Look at the difference in the Dow. Of course, it's only 30 stocks, but not as much tech in the Dow.
Most believe, he clearly does, the CEOs who are making the spend clearly do, that if you continue to ramp that up, you're going to get higher free cash flow. You just got to wait for it, but it's going to happen.
Yeah, 100%. I have no doubt. That's why I'm willing to give them the benefit of the doubt. I really don't want them going into the debt markets in a big way, Scott. That would kind of get me a little bit more, not cautious, but just not something I want to see. But if they continue to deliver these kinds of
Dow Jones.
Estimates and they keep revising estimates higher in the face of this spend, just imagine when they can see a leveling off of the
They have Nvidia, Microsoft. I guess you could call Amazon and Apple. I got 4 tech stocks, 5 tech stocks. You got Cisco, 5 tech stocks out of 30. Okay, that looks good.
Yeah, clearly. Professor, we were struck, just like you, on the comment that Jensen Huang made about what all of that demand is doing to the price of NVIDIA chips, even the older ones. Listen,
Okay, I got some people asking me for the weekly. Let's see what the weekly looks like on this. Advanced decline percent. Yeah, this is not going to change.
And so I think the demand is just incredibly high.
Let's bring in Christina Partsenevelos, who covers this company. Obviously, as you react to this as well, you know, the professor singled it out because it certainly did catch our attention. It's not exactly the way that technology has traditionally worked.
But it does echo the comments from Microsoft CEO very recently saying that they're going to be using NVIDIA chips for more than just one workload. It echoes the comments from CoreWeave CEO at their latest earnings call, where he said that they have almost sold out of H100 chips, which were released about 4 years ago. 2 comments that really stood out in your conversation, Scott, too, is the sustainability of the spending just over the next 7 to 8 years. That's literally the time frame that Jensen Huang provided. And there
was one particular note that stood out that is relevant to this conversation. Bank of America, calculated the CapEx spending for Oracle, Microsoft, Meta, Amazon, and Google from 2024 to 2030. If we could bring up that chart, they adjusted for inflation. They say it's going to be roughly $2 trillion of spending here in the United States. That is more than all of the spending in NASA. That is more than the spending of for the U.S. highway across the United States, but a little bit less than the bailout in 2009 for the Great Financial Crisis, and of course a little bit less too than what we spent during COVID. But it really puts into context just how much spending is going to continue to happen, and the peripheral in the data center. How many of these other companies will benefit beyond just NVIDIA, AMD, and the ones we always talk about?
Yeah, and you just get the feeling, Christina, and you certainly know this,
Okay, can we get something going here on the S&P? We're going to go.
it just doesn't sound
Have your machine, have your active trader windows ready.
but it feels like there is true belief.
Now, the other thing about that, if you click in the top left corner, Sundog, if you click in the top left corner, then you right space once and backspace out the values. Like I have 6930 queued up. I can backspace out the 30 and just put 20 in there, or 10 or 6900 very quickly instead of hunting.
Let's see.
You brought up the doubt that is in the market and why we saw so many of these AI names fall off. Microsoft post earnings, AMD, even though they guided higher. And Brad Gerstner brought up a good example of when Jeff Bezos in early 2000,
Okay,
he brought up,
so
he wanted to move forward with AWS. And I'm hoping our team has the tweet. I pulled out this old tweet.
okay, a little list shows up too. 69.25 shows up at $1.50 right now. Okay. So if this goes, this could be a pretty quick move here.
Back in the day, 2006, wanting to move forward with AWS, and the market completely doubted him. And of course, now we know the positive outcome of that bet and how many people were wrong. So perhaps that is another scenario that could be, moving forward, or I guess happening again today.
Yeah. That's great insight. Christina, thanks for it. That's Christina Partsenevelos. Bryn, I'll turn to you as our NVIDIA shareholder.
Yeah, I think what's so amazing is we're all listening from Jensen, Christina, et cetera. Their earnings don't come out till the end of this month. We're looking for 65% revenue and 70% earnings growth, but the stock can't get above 200. And so if you look at all of the big Mag 7, NVIDIA is by far the cheapest. You look at price to sales, margins, revenue, earnings growth, but there is such skepticism because it can't get over 200. And I think that we're in this moment where people are saying, well, this is already priced in, but I think it's not. And ultimately, I do believe it will break above that 200 because when you're consistently getting these massive revenue and earnings growth and these hyperscalers are going to spend, NVIDIA continues to be, one of the core companies that should be in portfolios to capitalize on this historic spend that we're seeing with the hyperscalers.
Professor, I'll give you the last word, in our panel conversation. Again, as we're focused so heavily on Dow 50K, and we've been so fixated on everything going on in tech, I know there's a lot of belief that this is just a blip, what's been happening in the market, and sooner rather than later, money's going to start flowing back to these names. Do you believe that too?
I certainly do, but we can't underestimate, as you pointed out, the equal weighted S&P surging. What is so remarkable is that almost 80% of the firms say they're in the very early stages of implementing AI to improve their own productivity, which means improving their own margin, which means profits, earnings, and increased prices. And I think the market is sensing that. While all the providers and producers and the Mag 7 are in advanced stages of producing it, doesn't mean they can't keep on rolling. The very early stages are those companies that have not used AI fully. And all the surveys say there's a long way to go there. And that's why I think this broadening out is just the beginning.
All right, we're going to make that the last word. Thanks, everybody. Professor,
Okay, let's see if we can't get a pop here.
I know we will as well. All right, it's been an ugly week, a no good, very bad week for crypto.
Okay, it looks like we might get going here. Watch the SPY.
Especially for Mackenzie Sagalos, who covers that for us. Hi, Mac.
25 is not too far. Ooh, there we go. There we go. There we go. Okay, I just bought a couple of the 69.25s. All right, let's see how far this goes.
From their recent peaks, and you can see how tied this is to the Treasury trade strategy. 24% higher going into the close, even after a brutal quarter. It posted a $12.4 billion Q4 net loss.
Okay, see if this goes here. Here we go.
Digital asset holdings. The company needs Bitcoin to add another 6K just to get back to break even on its position. And on institutional flows, around 40% of spot Bitcoin ETF holders are underwater. We have seen roughly.
Come on, can we get through this or what? What are we going to do? When they come for you, bad boys. Okay, we're trying to push through this level. Let's see if we go. Let's see if we can go here. Volume's picking up. Look at MACD down below. Check MACD. Look at the volume coming in. Okay, you see the volume coming in? If you're looking at your option window as well, you can see the volume coming in. MACD's crossing. Here we go. Here we go. Lifting.
So timely to speak with not only for Dow 50K and the jump back in tech, but also as the chairman of Bitmine. Tom, I know you're watching what's taking place in crypto. We're talking about a 7-month low for the stock of Bitmine. The Ethereum paper losses, $8 billion.
There we go.
Is this in jeopardy of going into a pretty dark place?
Hi, Scott. Thanks for having me. Bitmine is designed to be a vehicle that tracks.
Looks good. All right, got a nice follow through.
Because we're adding Ethereum, will outperform. So Ethereum's next drawdown. Bitmine's going to be in this drawdown, Scott. Bitmine has no leverage. It has roughly 4.3 million Ethereum that earns 3% annually, and we have 600 million cash earning about 4% in money market. So the company is making about $1 million a day. So there is no risk, no need for the company to actually raise money because it's debt free and actually generates about 360 million a year in net income. I think crypto sentiment is rock bottom because it has been a terrible drawdown. I mean, just the past 10 days, Ethereum's down 40%. And that's triggered, I think, a lot of concerns about whether
Okay, that was fast.
statements that I just heard. And
Needs to follow through some more.
just a minute ago,
Need to follow through some more here.
the same thing in November 2022.
Okay.
And that's the reality that crypto is sort of characterized by hyper volatility and big drawdowns. I mean, just in the last 8 years, Ethereum's had 7 drawdowns of 60% or more. The good news is 7 of those were all V-shaped recoveries. So we had a waterfall decline. If crypto's bottoming now, which it kind of looks like it is, especially given MicroStrategy's 25% move, the recoveries are V-shaped. So we recover as quickly as we've fallen.
Just want to follow up on that. When you suggest there's no risk to the company, is that assumption that Ethereum has stopped going down, that this is a bottom? If there is what some have predicted to be a coming quote-unquote death spiral for certain cryptocurrencies, if the situation with Ethereum gets worse, what happens here?
Yeah. I mean, it's a fair question. I think we can look at metrics, for instance. If you look at the number of active addresses on Ethereum, it's up 117% versus a year ago. In fact,
Okay, there we go. There we go. Okay, go. Go, 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 go. LETS, Geo, let's go. Okay.
big story around what Wall Street plans to do is tokenization.
Let's do this.
Which is moving a lot of their financial infrastructure onto the blockchain, Scott. That's
Okay, these at the monies are going. Okay, it's 25 is right overhead. Okay, here we go. Futures are going. Futures are going. Okay. Dow Jones, new highs. That's all helping out. There's only 5 stocks out of 30 in the Dow Jones that are tech related. Cisco, Nvidia, Microsoft, etc.
crypto prices are volatile. It's not like earnings estimates change for Ethereum. In fact, network usage is up 80%
Futures going.
in just the last 6 months. But it does mean prices move a lot. I mean,
Futures.
it's the future of crypto itself.
Tom, we'll talk to you soon. I appreciate you joining us. It's a very big day in the markets, and this has many investors focus on what's happening in crypto. We're just getting started here on.
Let's go some more. Let's go, 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 go. No, let's go.
She joins me right here outside ahead of the big game. We're live in Santa Clara, as I said, for the closing bell, and we're back right after this.
We're going to go some more. Wow, this is a really good day. Really good day. The market's crushing the bears who overstayed their welcome. Was quick to get out of those bearish hedges early, looking for upside. Didn't think we were going to get what we got today. This is really a hell of a lot more. I mean, this up here above the 50-day, didn't think we're going to see anything like that. That's very happy with that. Most of my positions obviously are longs, so I want to see the markets regain a foothold above the 50-day. Can we get a pop? Can we get a pop here? No. Come on. Come on, you can do this. Futures is backing off here. People taking profits. We're going to get dealers to start, dealers will start covering their positions. You get stopped out. Okay, I'm looking for a big pop. Maybe we'll get a big pop if the dealers start closing their positions. Maybe we'll get a pop here. Just kind of grinding up into this area, right? Nice trend all day long. Higher lows, higher highs. That's what we look for. That's what we look for. Okay, what's everything else doing? We've got Microsoft rising, GE at the highs. Okay, that looks good. Micron turning back up. Chevron, Palantir. Palantir looks okay. Bitcoin still grinding higher. Bitcoin.
Super Bowl 60 taking place in Levi's Stadium. Behind me, our next guest, that company's CEO, Michelle Gass, joins us live right here. Welcome.
Thanks, Scott. Thrilled to be here.
What do you think? It looks pretty good,
Oh my
doesn't
God,
it?
it looks phenomenal. Yes, we're ready.
Yeah,
Big
you
game
are.
on Sunday.
Speaking of phenomenal, the market looks pretty phenomenal today. Your stock's obviously having a good day. Just your general thought on this milestone of Dow 50,000 today, and just what's happening in the markets.
I think we're seeing some optimism today.
Levi.
I love that it's coming together with a big moment.
This is one that Lee Star used to love trading. Levi. Okay, watching Levi.
We have momentum heading into the year, and that's why we are so excited to be here hosting the Super Bowl again. It's been 10 years, and now's the time.
You're in the midst of a turnaround plan, which the street suggests is working. What's been the key to that?
Yeah. So for us, I'd say there's really two big pivots. One is, we've been around for 170 years, and for most of that time, we've been known as the best pair of denim jeans.
Okay, can we get something going here? S&P. Can we follow through? Let's go. Let's run this higher.
Say head-to-toe denim lifestyle, and that's working. Our categories that are outside of denim bottoms are growing. They're outperforming things like tops and outerwear sweaters. Our women's business is on fire, up 11% last year. So that's the first move. The
MACD.
second move is we're becoming a retailer.
Trying to follow through. End of day, MACD.
And we've had now 15 consecutive quarters of positive comp growth. And as we look ahead, we expect that momentum to continue. And we just guided to have another mid-single digit year coming ahead.
Have you figured out how to manage through the tariffs? You know, retailers are having a hard time deciding, do you eat the higher costs or do you pass it on? You guys have taken some pricing.
Yes.
And will you continue to do that?
You know, really taking a comprehensive approach. And we've got a few levers that we're using. One, and given the scale of tariffs, we are taking some pricing, but we've been really thoughtful about protecting more of those entry price points, but leaning in where we have pricing power to innovation and higher level goods. We've been working with our vendors. I mean, we've got relationships with vendors that go back decades, and we ourselves are tightening our belts. So it's really across the board, but we've been able to mitigate the tariff impact this coming year. And in fact, not only are we guiding for growth in that mid-single digit range, but we're also expecting profit, our EBIT, to expand as well.
How difficult has it been for a chief executive over what is now almost a year since Liberation Day happened and we saw all the numbers come out, and then we've been, you know, with the trials and tribulations of all of the negotiations from that. But how difficult has that been in a business like yours to try and manage through it?
Yeah, you know, I think what's key in this kind of environment is you have to stay resilient. You have to stay focused on what you can control. And most important, you stay focused on the consumer. You know, and I think at times like this where there is uncertainty, consumers look.
Yeah, CJ, this could go either way. It could go either way. When they close positions, doesn't necessarily mean we're going to rally. It can also cause a sudden drop. Okay, so that's why I have puts and calls ready.
You know, you have to be, you know, right there, responsive and have agility to navigate what comes your way.
You mentioned the consumer. We don't have Dow 50,000 without the consumer staying as resilient as it has. Are you surprised?
Let's see how far they go with this.
Consumers have. Do you think it continues from here?
Well, I can speak to our consumer, which clearly has been resilient given the growth that we're seeing, the momentum we have on the business. We stay very close, but it's really important that we continue to be.
Okay, here we got a nice pop. Pushing higher. Push, push, push.
Really fueling our business. You know, we have a ton of innovation across the business, in our bottoms, in our tops, in jackets like these, with the Super Bowl that we're celebrating this weekend. And also, you know, for us, it's really important to stay at that center of culture. And we just came off of a fantastic campaign this last year with a very iconic superstar in Beyonce, followed by Shabuzi. And we're kicking off our global campaign on Sunday at the Super Bowl.
Right. So you have a Super Bowl ad.
We do.
For the first time in 20 years.
Indeed.
Is it simply because the stadium has your name on it, or is there something about this particular time that makes
Okay, we're starting to take the high of the day, looks like. Could be pushing through the high of the day. Okay, let's take a quick look at closing positions. Okay, just going to go back a little bit, scroll back. All right, you can see what's changing right there at the top. Okay.
It just felt right to start the year to launch this campaign.
I don't want to get too focused on that because we're trying to pop here. Looks like.
I don't even know how you would do. How do you quantify what having your name on the stadium means, or the impressions that you're going to get over the next few days and even through the game? Is there a way to do that?
I haven't bought a pair of Levi's jeans since I was a kid that I can recall.
With the 49ers, with the stadium, since it.
I guess a lot of people wear Levi's. I don't particularly care for them.
Renewed it actually, so we have our partnership is now out through 2043. So we're doing this because we know it's been a part of what's driven.
Come on, can we pop here? We got 26 minutes to go. 26 minutes, 40 seconds to go.
It's about the day. It's about the breadth. There will be a lot of eyeballs, but it is really about maintaining that center of culture standpoint for the Levi's brand.
All right, well, enjoy it. It doesn't come around that often where your stadium gets to host the big game. Michelle, thank you.
Thank you.
Michelle Goss joining us, and forgive me for mispronouncing your name at the top too. My bad. Still ahead, San Francisco Mayor
Okay.
Dan He joins us as the Bay Area gears up for Super Bowl 60. The bell is back live from
30 yellow. Okay, that looks good. A lot of reversals today. A lot of positions that were down are up today. That's good to see. Maybe more of that next week. Okay, Tesla in particular, that one was down. Trading near the highs. Fridays, they tend to run a little bit better on Tesla for whatever reason. Not always, but some days, sometimes Fridays can be a big day. Tesla, we went from 400 plus or minus at the open. We have 14 points, 17 points on Tesla. Okay. Yeah, CJ, it's not like I can see exactly who's closing what. This might change quite a bit in the next few minutes. If you look at yesterday, you can see all the 0 days are gone. Okay. All the 0 day gone. The longer dated calls are up here at 69.10, and we're above that level right now, right? So we have 69, 10, 15, and 30. So doesn't look like we're going to follow through. So this could go either way. I just look for the big moves. You buy a couple of calls at 50 cents and it rockets at the end of the day to like 4 or 5. Doesn't happen very often, but when it does, a $100 play can make you $500 in a matter of minutes. Right now, we're just kind of easing at this level with 24 minutes to go. 24 minutes to go. We're starting to ease back into that little breakout zone. Okay, so right here. Gamma's down 6,900. Man, we came a long way. All right, MACD's turning down now. MACD's turning down. Okay, looks like there's going to be some profit taking as they close positions here. The market's pulling back. Mm-hmm.
The artificial intelligence actually comes from training that's done in data centers. So the reality is having that
ARM Holdings.
both data center
Who's this, the CEO? Who is this? Or just an analyst? Probably an analyst.
puts us in a great spot where we're really going to be able to see benefit from both sides.
You touched on the memory shortage and how that's impacting you, or at least not having as big of an impact on your business. As the rest of the world obviously faces a shortage.
CJ, just remember the dealer is on the opposite side of the trade. So you're buying, he's selling, or she's selling. You're selling, they are buying. So all I'm doing right now is I'm watching for an end of day change in direction, because this has been a pretty big day. The other thing is,
I think in terms of constraints, the one thing does not seem to be constrained is demand. There seems to be interest, demand, and now you've seen the CapEx budgets for all the core inputs that go into AI. So if you think about
okay, higher probability moves. When you get a big day like today, the dealers are hedged. So their hedges can be massive,
Also possibly with HBM in the training and kind of the GPU side. I would say there's certainly some constraints as it relates to
58 million.
And specifically wafer capacity. And so that's something that TSMC and some of the other fabs have talked about. And then, of course, there's the power side, where there's definitely concerns about once you actually have all the silicon, all the devices, and everything in market, do we have enough power to make sure that all these data centers can be running 24/7? And so, there's a lot of investment, a lot of work being done to work on those constraints.
But I do expect you'll see continued volatility in the market as the market tries to figure out, where are those constraints and which companies is that going to impact. We're in a pretty good spot in that for the most part, we're on the design side, so we don't face.
Okay, here we go. Popping. Okay, we're popping now.
Do see some of those.
Go, go, go. LATSGO, let's go. Let's go, LATSGO. Nice.
That's Jason Child, EVP and CFO of ARM Holdings, which is up about 11.5% right now. Coming up next is Options Corner. Rick Ducat will join us here in our Chicago studio to take a look at options activity on JP Morgan Chase after it was upgraded this morning. That's next on Market on Close.
I'd love to see them run this higher. Okay, watching what the dealer is doing. Okay, this is non-zero day. 0 day is this. This is 0 day. Okay, could see a little bit more upside maybe. No. No? Come on, you can do this. 20 minutes to go. 20 minutes.
Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab.
I did not expect this today. Complete surprise.
An experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques.
Definitely suggests institutions.
Moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand.
Okay, here we go. Pop. There you go. There you go. Okay, nice move here. Zoom, zoom. Zoom, zoom, zoom. Okay, here we go. Here we go. Nice pop there to sell into strength. For those of you still holding options today, nice little pop to sell into.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills.
Okay, where are they trying to stop this? It's 69.25. Boom, boom, boom. There it goes. Oh, that looks good. Nice, nice. 69.46 on the futures, 69.46. Okay. All right, I'm out. Probably going to go some more. I'm out.
Welcome back to Market on Close. Shares of JP Morgan Chase are on the rise after HSBC upgraded shares to hold from reduce with a $319 price target. It has been a slow start to 2026 for JP Morgan. Shares mostly unchanged on the year, but it has rallied more than 50% from the April lows and is only 4% off of its all-time highs. It's, of course, time for Options Corner, where we'll be discussing JP Morgan Chase with Rick Ducat, our lead market technician here on the network. Now, as we look at JP Morgan Chase, all the big banks sort of came into an interesting time to report as it came out sort of simultaneously with this potential credit.
Can it still go here? All right, still going. Still going. Oh, here we go.
More broadly against the entire sector in the market, it looks pretty even.
Yeah, outperforming the S&P, outperforming the XLF. 16.6% for JP Morgan. But when you look at the other big banks kind of relative to JP Morgan, you can see it's actually kind of trailing some of these other names like Citi, Goldman Sachs, Morgan Stanley, Bank of America, etc. here. Overall, though, it seems like a nice trajectory for all these companies. When I show
Okay, nice.
What I'm trying to show is kind of the general uptrend for all of them recently during the past couple of weeks, the improving environment here. We had our HSBC upgrade today. To neutral from sell. They kept their 280 price target. That was a couple days ago here. So
All right, futures, nice pop there. 69.25, 69.28, getting taken out.
And as we look at JP
Okay, that
Morgan
looks good.
specifically on its own, not against the other banks, what is the setup? It's obviously been a bit range bound this year, mostly unchanged. But how is it looking in terms of the technical setup for any potential moves?
as you explained earlier, you can see we had this significant fall to the downside here during our tariff news shock event. From there, we've had a significant rally. But as you said, kind of more of a sideways drift here. modestly uptrending, but still mostly contained within these two boundaries here, these two parallel lines, one going across the lows, duplicate it, put it across the highs. It matched up pretty well. We did have a bit of an upside excursion here that took us to those highs near 337.25. Now, price is struggling to retake 323 roughly, this area here where we had a high and then subsequent highs and lows. That's about where we're taking a pause today here. So 318 to the downside, our green line as well. That was another.
Okay, here we go. A little bit more closing. Dealers obviously closing positions, causing a upstroke, if you will.
Zone to be on the lookout for. Now that we're crossing above this point, this is the area where you'd be looking for some if we do start to decline once more. So our moving averages show that our faster short-term 5-day weekly EMA is trending upward here. We are crossing above our slower monthly and quarterly EMAs, and price is closing above them as well here. So signs of trend improving. We also broke through this downtrend, this shorter-term downtrend here that you could have drawn starting with those highs. That's been pretty handily breached at this point.
Okay, we keep going here. Keep going.
Sloping trend line in the RSI to be broken. The RSI to potentially even go above that 70 line that is the threshold for the overbought area. Finally, when we look at volume profile, we can see that we are crossing into this notable area, this little spike right here that we have near about 323 or so. We also managed to hang on above our volume profile.
Nice follow through.
That was formed there around 308. We have pushed out of that area. Now we are bumping up into the next step.
Bumping higher. S&P bumping higher here.
We're trading 4% higher today, helping with that bump into that.
Okay, nice, nice, nice. There we go. Nice. That's what I wanted to see. Nice follow through. Okay, that's the last of my calls. Okay, last of my calls.
Moving average 1.6 is where it came in when I checked, so elevated activity. February 20th, our monthly expiration, plus or minus 4.2% or so. That's our orange box right about here. Notice that the upper end of that box lines up with these old highs. So that's a kind of what you see when you kind of compare all these things together and overlay them. That seems to be the boundary that the market's looking for to the upside for now. One interesting trade, plus 750
Nice.
May 15th.
Where'd you go? Where'd you go?
That was a bearish trade. Not sure if it was opening exactly. It seemed like it was perhaps an opening trade for about $650,000 debit.
Rick, we appreciate you being with us for Options Corner to highlight JP Morgan Chase. I do want to check in with Sam, though, and see who she and George are going to be talking about for overlooked stocks today. Well, Molly, we're going to be talking about Form Factor today, heading into the close. George Silas will break down the news about that company and what you need to know about the stock coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers.
Okay, we're going some more. They just keep going with this.
Are you an active trader? Our active trading webcasts are designed to
Okay, with 13 minutes to go.
of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the
They're
market.
clearing out a lot up here.
This is Schwab Network. Subscribe
Wow.
to schwabnetwork.com.
Nice.
How's it going?
First day, so
Sometimes,
next, try to get.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm going to be sick.
We have to buy that now.
Invest your way with Schwab.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Available anytime, anywhere, on any device for free.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim's my financial consultant. I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Market on Close. I'm Sam Bardas, live on the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. Shares of Form Factor have surged to an all-time high.
Okay, they're back. Okay, they're done. Looks like they're done now.
Senior markets correspondent to do just that. And we've had some earnings out recently. A pretty strong showing here, but this has got a bit of a memory flavor to it as well. George, talk us through that.
It does. I mean, we talk about semiconductors a lot on various programs, but you got to think about all the types of semiconductor instruments that go into manufacturing and testing of the equipment. And so Form Factor is one of these companies alongside competitors.
Okay, can we get some more upside?
And both of these names are actually hitting some new highs. And so this Form Factor is a leading provider of what are called electrical optical probe testing equipment. So they test wafer technologies that are used in the manufacturing life cycles, so electronic sensors, but they also provide analytics and data reconciliation to, of course, the manufacturing process and testing of the equipment that is used in optical data centers and, of course, high bandwidth memory and DRAM technologies, which we know are in vogue right now with companies like Micron, Seagate, Western Digital, all
Nice, Frana.
some new highs because of
Oh, look at this move. Oh, shit. Look at this move. Ay, 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 ay. Look at this. Look at this move here. Continues going here. Still going. Still going. Wow. Short's getting clobbered here. Short's getting clobbered. Okay, we've got 8 minutes to go. Short's getting clobbered. Oh, off the screen. Here we go, off the screen.
They posted 290 basis point increase for the quarter sequentially relative to last. So this gives us an idea that pricing power based on the aspects of high demand.
Okay, still going here. Ay, ay, ay.
Technologies for data centers, artificial intelligence are creating spillover effects for all companies in this
Okay,
space.
God, they're killing it. They're killing them. Yikes.
Test the equipment and, of course, the end products that are sold to customers and enterprise users.
Yeah, I've seen a couple of lines as far as news coverage of this company recently. I know that it laid off workers, I believe, in California to sort of free up some cash here. But I mean, on one hand,
It's 5+ now.
Times actually reporting on this just last month, saying the industry has been benefiting from increased AI chip adoption and infrastructure spending.
Okay, the power of active trader.
About these high memory prices, a lot of these companies in the business of this are very much benefiting from that. And if you're in the business of testing and supplying to these guys, then no doubt you're piggybacking off of that. But then it also said in the next line, Form Factor is among the employers that have been shedding workers amid more economic uncertainty. So is this sort of like two competing forces or something? What's the story here?
Well, I think if you look, and even the report, based on what they published, they're talking about the capacity expansion, which has been going on based on demand and pricing that's elevated. But at the same time, they also talked about cost reduction.
Okay, that was a nice little move there. Holy moly. That was fun. That was fun. Exhilarating, huh?
So, for what it's worth, again, it may not necessarily be a bad situation. I guess from a larger standpoint or macrocentric standpoint, the companies are doing that. They're essentially generating more profits, and of course, at the same time, hiving workers or shedding workers because there are cost management protocols dictate to do so. So
Okay, they got big hedges overhead. All right, I'm done with the markets now.
if you look at the earnings growth themselves going forward, they're estimated to improve that to 28% of sales. But at the same time, the revenue base of the business is only growing around 8%
Okay.
on a forward basis. Now, both these metrics are higher than their 5-year averages. In fact, the earnings growth of the business is estimated to be in 2026 full year 3 times their 5-year average. That's not necessarily just coming from higher prices of end products and higher sales. It's coming from cost reduction as well. So you have to look at it from an investment standpoint. They're doing what they're doing to improve.
Look at that move. All right, that's what can happen on it. Obviously a very unusual day. But whenever you have these very unusual days, this is what happens when the dealers have to close positions. Okay. Off the chart here.
There was a gap in continuation, then you're just seeing another gap higher
Okay.
this quarter around because overall bottom line performance is accelerating, and that's creating shareholder value.
George, thanks so much for getting us across this one today. Happy Friday. Have a great weekend. We'll catch you next week. Marley, I'll send things back over to you in Chicago.
Thanks so much to George and Sam. We are nearing the end of our market session, the end of the trading week. We'll be bringing in Kevin Green to break down the levels he's watching on the S&P 500, get his takeaways on the Dow hitting 50,000 and more. That's next on Market on Close.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. Stay connected to what moves.
Okay, we're dropping off now. All right. Wow. Just wow. That was a wow move here.
We're back here in Market on Close. I'm Sam Bartas on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. So we've just got a few minutes left in what has been a very exciting session here for Friday.
Oh, man. Some days are better. When it rains, it pours, right? Yeah, and a lot of people have no clue. They just know that the markets went up, but they can't see what's going on if they're not paying attention to options. I can't.
Obviously, we did see market breadth expand today. 80% of the stocks in the S&P 500 in the green. You did see tech stocks also catching a little bit of a bid, and we now actually have a little bit of a squeeze or a gamma squeeze going into the close, which is actually pretty cool because we haven't seen one of these in a very long time here. If you're kind of looking at the levels from this morning, we blew past that 69.10 level within the last 5 minutes, 15 minutes or so, trading at around 69.40 at this point in time. We have been able to break the lower high type of succession here as well, so that's actually bullish going into the weekend. Now, you can make the case that maybe this is a short covering rally a little bit. I think that could be some in part of this particular rally here, but we have been able to recover the 50-day moving average, and it looks like we're trying to recover the 20-day moving average as well. Kind of going into the close, I was actually looking at 69.20 to the upside. We're well above that right now. Obviously, we still have about 3 minutes left to go. Anything can happen, but this is a pretty decent.
Beautiful, beautiful.
Given the volatility that we saw early on.
Oh boy.
With the volatility that you're talking about, yes, we are closing out in the green. It's significantly so. Still going to be a down week for most of the indices, though. What are you noticing about the volatility and the setup we have going?
All right, nice trades, folks, in the trading room. Nice in the trading room.
Looking at the volatility curve, if we're looking at the difference between the VIX and the VIX front month futures contract, that spread really kind of tells it all. And usually I bring this up anytime that we do see some volatility in the market because it really does tell a story. We did see a little bit of a backwardation, or basically near-term implied volatility actually was elevated compared to what we were focusing on in the future. Usually that's when we start getting fairly close to a capitulation style event. Now it doesn't mean that we're over and done with when it comes to volatility.
Okay, we got 30 seconds to go. Well, that was fun. That was fun. I'm glad everybody had a good trade there. If you didn't, these will come again. These will come again. Okay.
It's actually kind of the perfect level that you would like to see as a trader because it gives you a lot of opportunity both to sell premium as well as to go long premium in either direction, to the upside or downside. I think this really does.
Wow, that was nice. That was fun.
On Monday, and then I think we will have some potential headwinds because of the economic data in the latter half of next week.
And that's a wrap.
Yeah, no doubt about it. I know you said
That is a wrap. Okay, hopefully everybody had a good day. I got a hard stop. Have a great evening, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's been good.
Actually still haven't participated really well. Even though we actually are up over 1.5% in the S&P 500, Microsoft, the price action has not been great at all. Meta's price action has not been great at all. This just shows that breadth expansion.
I'm out of here. Have a good one. We'll see you on Sunday. Ciao.